leaders, influencers, decision makers, policy makers from the world of banks, fintech, governments, corporations discuss, delineate, and deliberate on the past, on the present, and the future of fintech. Welcome to the third edition and day 3 of Global Fintech Fest 2022. Can we give a huge round of applause at this point, ladies and gentlemen? This event is organized by NPCI, PCI, Fintech Convergence Council, and supported by Department of Economic Affairs, RBI, and IFSCA. Ladies and gentlemen, as you are aware, the format is that we have a lot of panel members from the world of fintech industry, banking industry, corporations, come here, discuss, deliberate about the different trends that is going to impact the future of fintech. It's filled with a lot of perspicacious insights, trends, and most importantly, pragmatic practices that will actually impact the way the business of fintech is done. So the first topic that we are going to be discussing and dwelling on today is about digitization of rural India payment system. As you're aware, around 70% of our Indian population resides in rural areas, and they contribute a key portion of the growth of country's GDP. A McKinsey report has also stated that despite the prominence of urbanization, the rural population is likely going to account for 63% of total market by the year 2025. Undoubtedly, the digital empowerment of rural India is important to bridge this digital gap. So our first panel discussion is based on digitization of rural India payment system. And to navigate, maneuver, and lead this conversation, we have with us our moderator, Mr. Giridhar GM, Chief of Offline Product Operations and Technology at NPCI. So can I request Mr. GM?
Chaitanya, not.
Oh, sorry, my bad. So there's a change. It's Mr. Chaitanya Pal, in charge state government related NPC. I'm so sorry about that. Mr. Chaitanya Pal, if you're around, please do join us on stage. Yes. And joining him on stage are going to be the following speakers. We have with us Anita Pai, who is the COO at Yes Bank. Ladies and gentlemen, a huge round of applause for our esteemed panel members. Mr. Siddharth Sanyal, Chief Economist and Head Research at Bandhan Bank. We also have with us Mr. Ashish Pandey, Executive Director at Bank of Maharashtra. So, thank you, sir. Mr. Chaitanya, on this note, over to you.
Thank you. Am I audible to the panel members?
Yes.
So, good morning to everyone over here. Is it audible? Thank you. So, to start our discussion, just to give an introduction to the topic, basically the government of India has been long trying to enter the realms of cashless economy and fully incorporate digital payments as a universally accepted medium of transactions, especially in rural areas of the country. We know all about the urban story in India. However, it was only the bleak times of the pandemic, basically, that pushed the pace of cashless transactions in the country, increased telecom penetration in rural areas of the country, and basically that emerged as a silver lining to bring cashless transactions into focus. So my first question to the audience and to the panel out here is that, how has the pandemic changed the mindset of your customers? I think in 2 years of time, banks have adapted themselves in a big way, used technology in a big way. But what observations and what insights have you got into customer behavior, especially in these 2 years in the rural regions of the country? So I'd like to start the discussion with Anita ji here, if you could give your thoughts.
Thank you, Chaitanya. I think it is right to say that the 2 years of pandemic actually hastened the change. The change was happening, probably would have happened at a much slower pace. What we've seen is actually the uptake in terms of our rural customers actually accessing consumer sites, ordering online, and of course paying for it online. Also a lot of gaming, which has proliferated over the last couple of years. A big chunk of that, the users are from our rural areas. So you can see that the mindset of customers has changed, and they're willing and ready to do as much online as probably all their counterparts in the metro areas.
Thanks for that. Just a note on that, like you rightly pointed out, that gaming and consumer behavior on the internet has increased a lot. So basically, there's one stat that I'd like to point out that back in 2019, so we had a customer base, a telecom customer base of about 227 million in the country. So that has risen to about 336 million in just 2 years. So that's a 48% rise. So in urban areas, we were already there, more than 407 million or so in 2019. So that has increased about 20%, which is understandable. But one thing that has happened, especially like Anita ji pointed out, is that although internet consumption increased, and Ashish ji, I was talking to you and Siddharth ji earlier about this, that the banking transactions have not picked up that much of a pace compared to internet using customers using internet and the telecom penetration. So why do you think that could be the case in rural areas?
Shall I?
Yes, please.
Okay.
Yes, please.
Thank you, Chaitanya ji. And very good question. Like what Anita has said that it is a the pace is always there. It was there earlier also. It moved a bit fast in between. But if we take the number of transactions which are happening across the country, the payment system. So if we take the banking transactions, if we see, there is almost more than 80 to 120% growth in the digital transactions. But then I would say it is not, the matured one. Means not we expect. We can expect much more vis-a-vis the total transactions happening into the system. The point I feel is the frauds, this is which is a concern of the regulator and the government and everybody in the ecosystem, which has picked up. So I believe that two, three things. One is the frauds, cyber frauds, and other things that are happening. So I will put into the two buckets. The first bucket is, where the technology is an issue. So maybe the people using technology as a somewhere, or maybe the intentions are better. And the second one is the intentions are not bad. There is no fraud, but then there is a reconciliation issue. So if there is a failed transaction, maybe because of the network, and then the people, if they do not get their money back, say within 1 hour, 2 hour, or it is taken like 5 to 7 days, 10 days, then there is an issue. They feel that they are out of funds, and when they are making a transaction, let me be very clear that it is they want to use that money, and if they don't have much, and they are out of funds, maybe even for 4 hours, so that is one of the fear that comes in their mind. And probably that is one thing where they feel that if then option is left to use maybe the physical channel. So this is what I feel is restraining to the speed which we are looking to the internet things happening and the digital thing happening. But then even then I would like to say that even now the speed is too good, banking transactions, and we see a month on month, I would not say even quarter to quarter, but then there is a huge sort of jump in the digital transaction in banks.
Sure. I think the point coming out is loud and clear. The value of the particular transaction to customers in rural areas is very dear. And basically, the transaction time for the entire ecosystem needs to be brought forward and needs to be improved. So that's a very valid point. Siddharth ji, I was talking to you earlier about rural areas in Africa, and things have changed over there in a big way. I think you could give us an insight about how things picked up in Africa and what are your experiences from what you've seen over there. Probably draw parallels between the Indian rural areas and the places in Africa as well.
Sure. In fact, I mean, that's a very pertinent point, and possibly we have some learnings from them also to take. What we have seen as part of some of our strategic initiatives, we study various other markets, and where we have seen in certain parts of Africa, particularly sub-Saharan Africa, which are very low resource countries, and also significantly low in terms of infrastructure, they have actually made huge strides in terms of going forward to digital transactions in deep rural areas. And often these transactions are mobile to mobile transaction without even the presence or back-end integration with any bank account. Now, I think while there is a big lesson from them that how exactly that particular, they have been successful in taking that forward, we also have to do a bit of customization in terms of trying to adopt their model. Because in a situation, if it is in absence of any other better word immediately, I'd say if it is a more dire situation, desperate situation, then instead of relying on a truck driver to shift some cash physically from a relative
Sure.
of mine from 500 kilometers away, I'll rather try to receive or send some amount of money to a relative who is possibly in a different city or in a different village. And I think that's particularly what is happening very clearly in their case. Our situation is not completely equivalent to theirs, which would make our initial progress a little slower. But eventually, our model can be a mix of both bank and bankless digital. And that's why a little more broad-based and diversified model.
Excellent point. Actually, that leads to my second point. Actually, that I was going to come to the phygital model that we were discussing earlier. How basically do you see the phygital model or a pure digital model progressing in terms of lending for the banks? And later on, I'll come to the acquiring part as well. But if the panel can throw some light, Anita ji, to start with you, and uh, Ashish ji, later on, I would like to hear from you as well, please.
So I think both are currently working and working very well in the rural space. If I look at digital, we do a lot of the what is called the JLG, the joint liability groups, or the self-help groups. Actually, that's probably the smallest of the loans that are given to women who come together, form a sort of a group, and take
Yes.
small ticket loans. And I can say that this whole process is digital. It has to be digital because for the banks the cost of doing a loan is so critical that we had to figure out how to digitize the whole process, and it's working extremely well.
So probably you could give us a couple of points about how you've leveraged technology in digitizing this process.
So, right from actually gaining the details of the women who form the group, getting all the information about what activity they are part of. So, all of this comes to us digitally. A lot of this is repeat business. So they take one loan, they repay it over the 8 months, 1 year, etc., and then they take repeat loans. That is typically the way it works. And so therefore the ability to retrieve also. So the second time when you go back to them, you don't have to go and do all of the data gathering. A lot of it is already available, and only the new pieces have to
It's
be put
more in
in.
a community spirit, and it keeps happening.
Exactly. So I think this part in digitized, in an entirely digital way, has worked very well for us. The phygital is something that I think works very well, to the point that was made earlier about worry about frauds, worry about information getting outside of where it is required to go. All of that we can make sure that through the phygital model we are able to pick up all the data and ensure that the process is carried out very well. Again, technology helps on handheld, like on tablets, etc. All the data collection mechanisms are there. We're able to take pictures of the area which they are at. So tomorrow, if we have to sort of look at where were the people living or where were they planning to do their piece of work, all of that can be evidenced later on. It can be stored and evidenced. So I think phygital also works very well. In terms of lending, I think one thing that would help all banks much more is if we can have a lot of the digitization of land records done fully. A few states have actually done this.
Absolutely, yes.
Yeah. So, when that is there today, then the bank's ability to move faster and move it in a more seamless manner is much better. And that will be one thing that we will look forward to. And as more of that happens, you will find that more of the phygital processes could actually move into fully digital processes.
Thank you very much. So, just to add to your point out here, some IT secretaries from states like Karnataka, Maharashtra, they have been a part of panel discussions out here, and they have very clearly mentioned that they are not only just digitizing citizen data, but they are also looking at technologies such as blockchain, hyperledger, etc., to actually make it tamper-proof. And absolutely, the states are working towards that kind of an environment technically. Uh, Ashish ji, I'd like to come to you about the physical model, and then I'd like to hear from Siddharth ji as well. So over to you.
Yeah, I do agree with Anita, the what she told about the phygital. Let me put, my views into the three parts. The first is the why phygital, why not digital or why not physical. The point number one is that, there is a shift post-pandemic. Now people are, you have all the data and before, the initiator of this, she already told all the data, like how much mobile penetration and the telecom penetration, internet penetration, mobile banking penetration. So what I say that now people are want the minimum hassles in the entire process. Point number one. The second behavioral what you want to know is that people still want to have a trust. So that is why physical something touch has to be there, particularly when the money matters or the finance is coming.
Absolutely.
Now the third point comes, if these two are there, the third behavioral shift which is happening is, now you will not get, still you will get 5,000 crore, 1,000 crore, the proposals. But the today's shift is that you may even get 10,000 rupees proposal, which you have to underwrite. Now, if suppose, if you see the trend, 38, 39% there is a growth in this segment, consumer durables, 50,000, 1 lakh, 2 lakh, in this segment only. Now, if we work upon my old model, and I cannot underwrite 20,000 proposals in a day with my people in the processes, in the appraisal system. So I need to be digital. Now, if I'm coming on that, so I feel the digital is compulsory. That was my first part. The second part, why it is physical, the government has come with the digital banking unit. Now that there are two issues with the maybe any bank or MFI or NBFC. The first is the cost of operations. So I agree what Anita said that, while you are underwriting 10,000 rupees, 50,000 rupees, you need to ensure that you are cost effective. And at the same time, you are meeting the expectation of a customer. So if you want to do that, then again, you need to be on the digital side. But at the same time, if I take the smaller loans or maybe the JLG and SHG, and SKDIDP is one of the finest example of that. So what I feel, you need to be very, very closer, to the group, to the people for the credit monitoring side and the collection side. And so what I feel, what is going to happen here onwards, that certainly there will be synergies between banks, maybe NBFCs, maybe smaller people, bigger people like that. So suppose a bank, if they engages, either there is one option of digital banking unit, so you can be closer to your people, with few people, some tie up with BC, so that arrangement is already on. Now if a bank engages or collaborates with an MFI or an NBFC, then you are very again closer. So probably it will give again to being physical. This is the second option where you are going to collaborate maybe 1 year, 2 year, 3 years down the line. And the third thing, what I feel, if we put together both of them, and making the system so well that it is that all our DLP protection, data leakage prevention and other things you are putting into right. And there are support system for resolution of customer grievances. I think these three, the phygital will work probably next to 5 to 7 years in our country.
Thank you very much, Ashish ji. I see a very clear trend emerging here regarding the phygital model, and I'd like to hear your thoughts about this as well, please.
Yeah, I mean, it's covered both by Anita ji and Ashish ji very clearly. I'd possibly just try to draw an analogy. It's like teaching a kid the first lessons of cycling or swimming. You possibly you are better off to do a bit of handholding for the kid. Otherwise, that particular kid might be scared to go for the first step. But once he learns how to do the cycling, you try to hold him, he will object, right? So that's typically the case which we are seeing here also. So basically, what we if I try to see my bank's experience clearly, we have a lot of units and very no frill kind of accounts units in many deep rural places. Also, a lot of presence in the eastern and the northeastern part of the country, which is relatively less penetrated in terms of, or presence of banks is relatively less. So we started this particular model of the phygital model in our sense was that give people the experience of digital, but do a bit of handholding because their mindset is bit different from the urban millennials. So you need to do a bit of initial handholding, which will generate the momentum, and we are seeing that. Now, having said that, I think I try to touch upon one particular point about the percentage growth in terms of some of the years that Ashish ji mentioned, that in some of the cases we have seen numbers in possible growth in 60%, 80% kind of zone. But my sense is that the kind of base from where we started this particular journey, percentages would eventually mean relatively less. At some point of time, I will not be surprised when that real takeoff happens. Some of the percentages in some of the years might be a few thousand%. And there is nothing wrong and nothing to be served. It's exactly like the takeoff of a flight. When from zero you are moving in 20 kilometers, 30 kilometer kind of speed, but then when you really take off, the speed is absolutely not comparable. We haven't really reached that stage as a nation, but the way things are gathering momentum, very confident of seeing that over the course of the next 3 to 5 years.
So that's very heartening to know that the best is yet to come for the Indian economy, especially for the rural sector. One point regarding strategy of micro lending that we were talking about earlier. Have any of your banks adapted to this particular trend of the internet boom and post the pandemic? Has any of the bank probably changed their strategy in terms of micro lending or reaching out to their customers other than what's basically been discussed here? Siddharth ji? Oh, yeah.
Very clearly, yes. Yes, in the sense, I'd not say the broad philosophy of the business or business model, but operationally there had been a very significant difference in terms of we now give our, if I call it our, some of the staff, field level staff, frontline staff who are interacting with them, they are also trying to become a lot more efficient in terms of capturing everything digitally. That gives us provides us a situation where the same data flow actually goes into many different pockets. The credit analysis is done very quickly, parallelly, and the decisions are taken and conveyed very quickly. Also, we have been able to offer a lot more flexibility to the customers, wherein earlier they were, this micro lending customers, they were mandated to come in groups. Now, in case of a lot of them, we had been able to give them the flexibility to make the payment in a different format electronically. And we are, as I said, that we have started seeing a lot of pickup in that across geographies, and which is really, really heartening to see. And I tend to say that there has been very decent pickup also in rural and deep rural areas. Connectivity is an issue. In areas where you have relatively good connectivity, the experience is very different compared to others.
Excellent points. Ashish ji, you were mentioning about land records verification and operationalization of many processes at the back end. Could I have a few thoughts on that, please?
Yeah, when we take, particularly since you have talked about land records, I believe that you're talking about the underwriting of the loan.
Exactly.
Loan part. So let me put forth, we have been lending all the banks and BFCs. But what I feel, with the collaboration with the fintechs, with the data aggregators and all the people, the underwriting which is happening now is far, far better, when it was happening in an individual basis. So that is the power of, the
Sure.
data, because you were doing the underwriting, appraisal with your own data, internal data, not much of the external data. Maybe with the bureau companies you will get something, but then otherwise not. So the first point of engagement I feel is, I'm just giving is this, when you get outside data, it is one of the best thing, you quality of asset increases. The second important point, the end use, which is a concern for any lender. Now, if you get the, if you are in a position, because again we are going to deep. So for certainly when you make, finance a bridge or a railway siding or an airport, you know where the site is. But when you are financing a crop, and particularly, that a small 1 hectare or something like that, you do not know actually where it is. And somebody has to go. You cannot make it figure out in your appraisal process, you cannot keep in your records. So when this digitation land record has happened, particularly Karnataka, let me tell you, they are the leading one. Even Maharashtra is going very strong.
Yes.
So what has happened, there are even some fintechs, who are giving the geolocated that which you have financed. So I think what best can be the use, and from that you can even see how exactly the crop is, where that is, if any flood has come. So generally what happens if any flood or anything rains have come, so entire 50-kilometer area will say there is a something natural disaster. But what happens that you can figure it out, how is the crop, whether anything has happened, drought or something, and you can very well locate which is the area which has been, mortgaged to you. So I believe if we are talking about, other than the microfinance, JLG and SHG, if we are talking about the financing, the rural India, where is the agriculture of the higher amount, this land record, I think this station is going to make a big headway. And the players which are there, my compliment to them. So very good that they are bridging the gap from the government side, state government side, where the database is there of the records, and with the banks, appraisal system, and that you're making it seamless from end to end. Probably it will give a way to, I believe, review renewal is itself happening right now, STP. So I think going to that level, it will help a lot both to the borrower and to the banking industry.
So
Thank you.
one thing I would like to add here is that I think there are a lot of databases that must be available with the government regarding our rural population, especially farmers, etc., because a lot of subsidies, etc., are given to them. I think just like, today a lot of banks use GST data as surrogates to calculate what could be the credit worthiness of the particular company that we are evaluating. Similarly, if you have access to such databases, maybe the ability to use those as surrogates to figure out what is a good loan amount to give, which will be good for the farmer and also for the bank, I think will be really good. So if I think that's one of the things that all of us could do together is to figure out what databases are there and how to make it available.
Excellent point. So I'd like to add on that basically government departments and IT departments, especially from governments of different states, have been talking to us. And to put it down in a layman's language, basically they've been saying that look, our land record department has all the records that are needed for farmers or people who work in rural areas who are looking for loans or who are looking for any kind of government services. However, our IT team is not talking to them from a technology point of view. So the paperwork needs to be done. The loan processes have to be filled out. Land records have to. Land record department has to actually approve the loan papers, so on and so forth, which is a process that takes about 6 weeks. Uh, states like Karnataka, like you rightly pointed out, and even in Maharashtra, they're working on models, API models of technology, where a land record department can talk to the IT department, and consequently, they can talk to the banks and make it very easy. So a process that lasts for about 6 weeks to 8 weeks can be basically finished in a matter of 2 or 3 days. And that's about it. And even the underwriting part, like you mentioned, that even remotely through technology, the land, basically the land plot can be scoped out and basically the underwriting can be done. So the verification part and the exchange of information part is being worked upon by a lot of governments. I think that's only going to benefit rural India. So I'm going to open it up to audience questions after this last point. Uh, my my question to the panel members out here is that, especially we are aware that a lot of technology service providers are out here in the audience today, and a lot of banking personnel are there out there as well. From a banking community point of view, what's the one message that you'd like to give out to the ecosystem?
Okay.
Ashish ji, will start with you.
Yeah. Thank you. Very wide question, but very pertinent one. See, I will take a quick shot so that my other panel members can also contribute. I will put it in two, three, the buckets, my replies. The first is, understanding the consumer. So very, very clear that they want no hassles. Secondly, they want to be secured. And third, they want to, somebody to understand them, their need. Because you are not meeting them directly, as we talk digital or phygital. So your system and everything should be in place so that you understand through analytics and behavioral analytics, I should say. The first point is that understanding the consumer shift. The second comes, the banking side. So your technology. So I would say up till now we were talking about, earlier 20 years back about the banking, the lending and other things. Then we talked about technology in the 90s and 2000, 10 and something. Now 2015 hours we are talking about the digitalization. Probably technology is there, but the question is who is going to provide the technology? Now I'm opening a very good question even for my other panelists.
Yes.
So the question is, there is a supplier of the technology, there is a user of the technology. My one point is that digital is digital, but then there is something probably after 1 year or so you will hear more so about collaborations. Because collaboration, what I always say to even my people, which is the cooperation, coordination, and collaboration, which is 1 degree higher than each other. So if we take, the customer relationship, the highest is when you become a stakeholder. The two people, demand and supply, become a stakeholder to each other. It means you are understanding each other issues and you are so closely knit that you are above the level of, thinking about profit and negotiation and all that. And you are living a long-term relationship. Now what is going to happen is technology will be there, but then it will only yield 1 plus 1 is equal to 2. But we are in an era where 1 plus 1 is going to be 11. Now, how you are going to 11, you can be 2 or you can be 3 or 4 or 5, depends upon the level of engagement between the 2 and 3 in the ecosystem. So in the ecosystem, when you're talking about, there is a regulator, there is a government of India, there are various banks, payment banks. So now when I told about the transactions, the frauds which is happening, you need to give a message to the users that you are secured, you don't worry. That would only happen when you are having a frequency of 6 times reconciliation during the day, not T plus 1 or T plus 2. So that involves, collaboration between all the partners. So what I foresee, we are in that evaluation stage, whether the private sector banks or the public sector banks or any people in the ecosystem, including the government, including the Reserve Bank of India. So what I feel that this 4 or 5 pillars which I took across right now, going forward, probably next 2 to 3 years, you will see lot of collaborations happening. As I told MFI, if I go alone as a bank or maybe the bigger banks, it is impossible. You have to onboard lakhs of people. Is it possible? Now, if I take an example, the India Payment Bank or India Post or maybe any MFI, they are already having the, can I collaborate, use that network? So all the three, like, like JLG and SHG, that, the MFI and the bank, all three are in the win-win state. So now the collaboration is a one word which gives always a win-win state to everybody. So my here take is that when you talked about ecosystem and the rural particularly, we are talking about the rural. So when you rural means there has to be collaboration between the ecosystem, and then probably it will really yield the result what we are expecting.
Some excellent points made there. Thank you, Ashishji. Siddharthji, I'd like to move to you. What's your one message on behalf of the banking community that you'd like to give out to the ecosystem out here?
No, I think Ashish ji summarized it brilliantly. just to take it forward, maybe we can think of a few key areas. The collaboration, obviously, the collaboration we cannot ignore in this particular uh, context. Also, possibly two other C's we can think of is possibly confidence and cognizance. What I mean by that, collaboration is across various channel partners and potential channel partners. For example, he mentioned about the India Post, where the network has expanded and has come under a more integrated system. It's up to us now how exactly we take advantage of that. Also, a number of fintech partners which we should leverage. The other part is confidence. We need to ensure that in the initial part of the experience, and initial part means we mean the first few years, that the confidence of the user can never be hurt. You have to ensure that. And if there is a need for taking into account, doing a quicker reconciliation and all, that's possibly critical. Think of two e-commerce platforms. The one which is a little more lenient and supportive in terms of product refund, return, taking into account the customer's complaint, ends up taking the lion's share of the business, even though in the short run it may actually incur 1 or 2% more in terms of those costs. And possibly the third part is always giving people the feeling that your concerns are, we are cognizant about your concerns, your issues, and that's the need for a person, because this particular segment, again, at the cost of repetition, I would say this particular segment is very different.
It requires special assurance.
Special assurances, they are very different from the urban millennials who are very fine in terms of pressing a few buttons, get the transaction done. They are very happy that we don't have to interact with a person. Here, the confidence comes from certain Mr. such and such has told me this, is kind of in the initial phase that particular support needs to be there. So you have to manage your cost accordingly. The large part of the back-end work would have to be done completely digitally, but some bit of presence in terms of a personal touch here would go a long way in terms of ensuring that takeoff.
I think it resonates with our earlier point about the phygital part of the model, where some kind of human interaction is necessary, especially in the rural region, to give confidence to the end users. And even different departments who are working in the background, be it banking departments or even the government departments, to feel comfortable or at ease with doing technology-related transactions. Anita ji, I'll move over to you now. Your thoughts to the banking and from the banking community to the ecosystem.
I think the potential is large. Any help that we can get from any part of the technology providers, any fintech, I think will be welcome. In addition to whatever both Ashish and Siddharth said just now, I would really say two things. I think a lot of the products that banks made for the urban sector is what they have just transposed for the rural customers. That may not be so. So taking off from the first point that Ashish made about saying, do you understand the customer? Based on that, I think developing the right products and ensuring that all our systems are able to deliver that product the way it's meant to be, I think that is very critical. And the last part is about the last mile connectivity. Finally, I may do everything that makes a lot of sense, but if I'm not able to do the last mile, that is actually how the customer perceives the transaction or the communication that's coming to her from the bank, all of that becomes immaterial. So I think these are the two areas which I think need special focus. But like I said, there's such a large opportunity, such a large part of the country for which we need to deliver the right services, right products. I think whatever we have today is probably not adequate, and any additional products or services coming from any part of the ecosystem will be very welcome.
Yeah, can I add?
Sure, absolutely, absolutely.
One thing,
Thank
when
you.
we are talking about phygital, so actually what people feel, that you are using digital technologies and then physical person is going. That's fine, that's good, that is happening. Let me put one more, like a perspective. Maybe down the line, 6 months, 1 year, 2 years, 3 years, actually the phygital will not be actually the human being going and doing everything. Now, on one hand, you see metaverse coming. No, I am putting forward, you are having a very well-developed call centers with any of the institutions. Why video-based AI cannot be implemented? That is what I am talking about physical. So probably you will feel, particularly in BFSI sector, the video and audio-based, artificial intelligence-based, the call center, which is may become a back office branch of any bank and going to even do the transactions. So somebody wants to do NEFT and RTGS, so you want all the papers, or either he has to go by the mobile banking or internet banking. So on the move, if somebody on the video with, see, video KYC is already there if you take the regulations. So if the regulations, the ecosystem, what I said, the collaboration. So probably digital will have a different meaning here onwards.
Absolutely, that's a very interesting point that you made there. We are probably on its way now with the video KYC procedure. It's probably already started, as you pointed out. In the interest of time, I'd like to open up the panel out here for a couple of questions. But before I do, I'd like to summarize two or three very clear trends that have emerged from this conversation. The phygital trend has emerged, the hand holding of customers has emerged very clearly. The speed of transactions was already there, as pointed out by Ashish ji. The speed of settlement is something that will give comfort to the rural sector, and the human assurance that your transactions are going through, and this is how it's done. I think once somebody enables rural India to go on that journey, probably fintechs could have a different approach towards developing applications and UIs for the fintech sector, for the rural sector in particular. So that clearly comes out. The lessons learned from different countries like Africa, that Siddharth pointed out, they could be adopted in rural India as well. There is a strong support from the infrastructure side of things. Governments giving a very great push towards enabling that infrastructure with 5G also coming into play. So I'm sure we are going to see a very big boom in the telecom and internet connectivity side of things. Having said that, these trends are very clear. I'd like to open up the panel for a couple of questions. I think we've got a couple of minutes if anybody's got any questions.
Am I audible now? Yeah. So very good morning to one and all present in the panel. My question is to Mr. Sanyal. So we all know that Bandhan Bank has pioneered the rural banking system, and post 2010 MFI crisis and the reforms that were made by the RBI in the year 2012 for the NBFC sector has made all the financial institutions to go digitize, to become digitized for the lending part that came into full swing in the year 2017-18. So my question has two folds. How Bandhan Bank as an organization is envisaging the collection part, and what is the roadmap to that? And the recent circular which came from RBI in the month of March, that has increased the cap and the number of lenders in the rural sector. So how is this going to play? Because as you mentioned that Bandhan Bank has started collection and lending to individual members, don't you think this will dilute the JLG and SHG model at a larger scale?
Well, I'll put it this way. In terms of your second question, that in terms of some of the caps and all, we internally had always been very, very conservative in terms of some of the numbers. If the regulatory requirement is up to a certain level, we typically love to keep a bit of a margin with ourselves. We are very stringent in terms of our credit evaluation, and then go ahead about that. So the new set of norms also doesn't really put too much of a change imposed on us directly just because of that. The other part of the question, that whether this is it's a move from the earlier group lending model or something like that. I think it's not a lock, stock and barrel movement, and it's rather offering our entire customer base with greater number of options. We do evaluate very clearly, first on the basis of income, then on the maturity of the business, and their credit history, and their overall maturity, some kind of a both quantitative as well as qualitative judgment on our part that whether this particular person is fit for a group lending model or is or can actually be moved to something beyond that. And there, even if the customer prefers in one particular way, and even if the income is significantly higher, but if there is a lot of volatility, seasonality, et cetera, we are pretty reluctant to move them that way. So it actually is driven by a large number of factors, very rigorous method. And then if we see that, then we offer people or that particular segment greater flexibility. Now, it doesn't really reduce any focus, any rigor from the group lending behavior for which we think that is the segment for whom it's needed. But for a segment who have possibly moved on from that particular model, and it's possibly little more easier for us also to deal with them as well as for them to also carry on their regular business. They are possibly not needed to come to a group every week. They have gained that maturity in terms of both their business and thought process, and then possibly we are happy experimenting with the new model. And the initial results for the last few years had been pretty encouraging.
Next question. I could see someone over there. Please.
If I can, yeah. Good morning, everyone. I just wanted to ask it to the panel. Am I audible? I just wanted to ask it to the panel that every time we are talking about the rural transformation when it comes to the kind of fintech evolution we are having in the country, all we are talking is about the digital lending part and the payments part. But there's a huge chunk of, like, almost everyone knows, more than 97% of people are not integrated to the financial markets. So why aren't we putting some efforts in that particular context of, allowing them to leverage the financial products which the tier 1 cities people have been leveraging instead of going for FDs and RDs kind of stuffs? Thank you.
Yeah. Yeah.
Anita ma'am?
Yeah, so I think there's, I think the point that we talked about saying that what is the aspiration of the rural customer and what is the size of it. I think that is the most important question here. All the products that we have are actually amenable for them to use too. What worries is the in terms of the infrastructure that is there, because some of the technologies are fairly heavy and are very time bound. So if you don't do a click in within a couple of seconds, that particular rate may go away, etc. So I don't think that from a bank point of view, we are saying we are not inclusive in these products. But I think what we are saying really is that the aspiration today, or is the aspiration more simpler? I think the second part is to say that when is the right time for them, and it has to be a fairly decent size. It can't be this one person in a million that is interested. It may not then make economic sense.
Can I also?
Yes, please, Ashish ji.
See, there are three things which you can offer to a customer, apart from the fourth, which is very common, which is grievances and the hand-holding, which is a call center sort of. Three things. One is the asset, liability, and services. Let me put the entire the banking and finance in the three buckets. So actually, if you ask me as a banker and even a technology partner or anybody, the digital lending is a bit tougher part. Otherwise, if you take the services and the liability side, it is very easy. So even now this BSBDA, now I'm coming to the rural, it is already online sort of. And the second is video KYC coming into the picture is fully online. Even person is not a BSBDA. Now if I take the creation of the FD and other is all digital only, even breaking of the FDs, even taking loans against the FDs. Now I'm going beyond actually what you wanted to know. Can I invest in mutual fund? Can I invest in stock? Can I even have a GSEC of 1 unit? So today, if you see, there are players in this, and they are having the tie-ups with the banks or the NBFCs, and this is offered to everybody. Now I would go to the third part, where if you want to make a nomination, you are not nominated anybody in the account. That is one of the services, and you want to check whether nomination I have done or not, and you want to nominate. Can you do it the sitting at home? Yes, NECL is there, which helps digital document execution, and it has been implemented by banks. So sitting at home, you can do the nomination, you can do all the things, which is even the lockers. Why you cannot? You can, if you go to the bank website, you can see which locker is vacant, whether it is down or not. Choose your own, select, and that the agreement 500 rupees is there. You can execute through NESL digital document execution, and you can purchase your locker then and there itself. When it is convenient, you can go and keep your belongings. The third important, coming to Government of India, Atal Pension Yojana, NPS, Suraksha, it is already on the way. So what I feel that even for the rural, not only the lending part or the onboarding on the liability side, on the services, actually the government schemes you can implement very well. And in Rajasthan, I have seen the farmer can online take the subsidy, put the application, and even bank finance is happening. So I think it is on the way. Yes, we are evolving, and I think
I think what Ashish ji said resonates with Anita ji's point out here is that the question is not whether we can do it. We can absolutely do it. That is what the banking community is saying. The real question is the time for it, has the time come for it yet? And will the user basically go to that stage where these advanced services are used? So on that note, I'd like to draw the session to a close. Shri Ashish Pandey, ED of Bank of Maharashtra, Shri Siddharth Sanyal, Head of Strategy from Bandhan Bank, and Shri Anita Pai, Chief Operating Officer of Yes Bank. I'd like to give you a very big thanks on behalf of NPCI and IMAI to be on this panel, and I'd request the audience to give a very warm round of applause to all our panel speakers here. Thank you very, very much for being here today. Thank you.
You can remove it, sir. Yes. That was again a very engaging round of discussion, ladies and gentlemen. On this note, a quick thank you and acknowledgement to our partners, beginning with our co-powered by partner Amazon Pay in association with Perfios, our theme partner WhatsApp, our spend partner Encash, our payment partner Cash Free Payments, and our CEO's dinner partner HSBC. Thank you so much, panel, for that amazing and riveting round of conversation. I think very practical and based on your experiences. So thank you so much. It was lovely having you. Mr. Bal, very well moderated.
when it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
Thank you.
ए भाई ए भाई जरा स्कैम से बचो ऑफलाइन ही नहीं ऑनलाइन भी
लॉटरी ही नहीं कैश प्राइज भी ओटीपी ही नहीं
क्यूआर भी
मैडम आपका बैंक अकाउंट ब्लॉक हो गया है अपना यूपीआई पिन देंगे प्लीज
यूपीआई पिन कॉल सेंटर से जो कॉल आया है डिटेल्स उसे कभी देना नहीं
पिन नहीं नंबर नहीं
काम नहीं
एड्रेस नहीं
पासवर्ड नहीं
कभी नहीं
थैंक यू ए भाई जरा स्कैम से बचो ए भाई
फ्रेंड ने जो पैसे मंगाए हैं करना उससे पहले वेरीफाई है
वीडियो कॉल से ऑडियो कॉल से
तरह तरह के वॉइस नोट से
डीपी से स्टेटस तक
लास्ट सीन से इमोजी तक
अच्छे से जांच करो ए भाई जरा स्कैम से बचो ए भाई स्कैम का सर्कस है और प्यारे स्कैम ये सर्कस है और इस सर्कस ने बड़े को भी छोटे को भी दादा को भी पोते को भी मम्मी को भी पापा को भी नीचे से ऊपर तक ऊपर से नीचे तक घेरा है
जरा देखो जरा सोचो जरा स्कैम से बचो
Going into the second half of play, hoping it's as exciting as the first.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
ए भाई ए भाई जरा स्कैम से बचो ऑफलाइन ही नहीं ऑनलाइन भी
लॉटरी ही नहीं कैश प्राइज भी ओटीपी ही नहीं
क्यूआर भी
मैडम आपका बैंक अकाउंट ब्लॉक हो गया है अपना यूपीआई पिन देंगे प्लीज
यूपीआई पिन कॉल सेंटर से जो कॉल आया है डिटेल्स उसे कभी देना नहीं
पिन नहीं
नंबर नहीं,
काम नहीं
एड्रेस नहीं
पासवर्ड नहीं
कभी नहीं
ए भाई जरा स्कैम से बचो ए भाई
फ्रेंड ने जो पैसे मंगाए हैं करना उससे पहले वेरीफाई है
वीडियो कॉल से ऑडियो कॉल से
तरह तरह के वॉइस नोट से
डीपी से स्टेटस तक
लास्ट सीन से इमोजी तक
अच्छे से जांच करो ए भाई जरा स्कैम से बचो ए भाई स्कैम का सर्कस है और प्यारे स्कैम ये सर्कस है और इस सर्कस ने बड़े को भी छोटे को भी दादा को भी पोते को भी मम्मी को भी पापा को भी नीचे से ऊपर तक ऊपर से नीचे तक घेरा है
जरा देखो, जरा सोचो, जरा स्कैम से बचो।
Going into the second half of play, hoping it's as exciting as the first.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
ए भाई ए भाई जरा स्कैम से बचो ऑफलाइन ही नहीं ऑनलाइन भी
लॉटरी ही नहीं कैश प्राइज भी ओटीपी ही नहीं
क्यूआर भी ए भाई ए भाई जरा स्कैम से बचो ऑफलाइन ही नहीं ऑनलाइन भी
लॉटरी ही नहीं कैश प्राइज भी ओटीपी ही नहीं
क्यूआर भी
मैडम आपका बैंक अकाउंट ब्लॉक हो गया है अपना यूपीआई पिन देंगे प्लीज
यूपीआई पिन कॉल सेंटर से जो कॉल आया है डिटेल्स उसे कभी देना नहीं
पिन नहीं
नंबर नहीं
काम नहीं
एड्रेस नहीं
पासवर्ड नहीं
कभी नहीं
थैंक यू ए भाई जरा स्कैम से बचो ए भाई
फ्रेंड ने जो पैसे मंगाए हैं करना उससे पहले वेरीफाई है
वीडियो कॉल से ऑडियो कॉल से
तरह तरह के वॉइस नोट से
डीपी से स्टेटस तक
लास्ट सीन से इमोजी तक
अच्छे से जांच करो ए भाई जरा स्कैम से बचो ए भाई स्कैम का सर्कस है और प्यारे स्कैम ये सर्कस है और इस सर्कस ने बड़े को भी छोटे को भी दादा को भी पोते को भी मम्मी को भी पापा को भी नीचे से ऊपर से नीचे तक घेरा है
जरा देखो जरा सोचो जरा स्कैम से बचो
Going into the second half of play, hoping it's as exciting as the first.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
Thank you.
ए भाई ए भाई जरा स्कैम से बचो ऑफलाइन ही नहीं ऑनलाइन भी
लॉटरी ही नहीं कैश प्राइज भी ओटीपी ही नहीं
क्यूआर भी
मैडम आपका बैंक अकाउंट ब्लॉक हो गया है अपना यूपीआई पिन देंगे प्लीज
यूपीआई पिन कॉल सेंटर से जो कॉल आया है डिटेल्स उसे कभी देना नहीं
पिन नहीं नंबर नहीं काम नहीं
एड्रेस नहीं
पासवर्ड नहीं
कभी नहीं
ए भाई जरा स्कैम से बचो ए भाई
फ्रेंड ने जो पैसे मंगाए हैं करना उससे पहले वेरीफाई है
वीडियो कॉल से ऑडियो कॉल से
तरह तरह के वॉइस नोट से
डीपी से स्टेटस तक
लास्ट सीन से इमोजी तक
अच्छे से जांच करो ए भाई जरा स्कैम से बचो ए भाई स्कैम का सर्कस है और प्यारे स्कैम ये सर्कस है और इस सर्कस ने बड़े को भी छोटे को भी दादा को भी पोते को भी मम्मी को भी पापा को भी नीचे से ऊपर तक ऊपर से नीचे तक घेरा है
जरा देखो, जरा सोचो, जरा स्कैम से बचो।
Going into the second half of play, hoping it's as exciting as the first.
like it like that. You like it like that.
Check, check. All right, ladies and gentlemen, welcome back to Global Fintech Fest 2022. We are on day 3. exploring, delineating, brainstorming on different ways in terms of fintech industry disrupting the world, and really talking about India's preparedness to tackle the fintech needs of about 1.4 billion unbanked adults all over the world, and how prepared is India to handle 6 billion customers all over the world in terms of their fintech banking needs. On this note, ladies and gentlemen, I'd like to introduce our set of next panel members and our moderators. The topic that we're exploring is Future of Financial Services, Banking 4.0. The pandemic, ladies and gentlemen, has truly turned a lot of elements and services that were convenient into absolute necessities. Banking that majorly involved people visiting brick and mortar outlets now attracts digital traffic and requests. To give you a point of view here, the global value of digital transactions during the pandemic 2020 was around $5.2 trillion. In the evolution of BFSI sector, we stand today at the dawn of what we call Banking 4.0. So let's begin with our panel discussion. To navigate, maneuver, and facilitate this part of the conversation, I'd like to call on stage our moderator, Mr. Vivek Belgavi, who is partner and leader at PwC India. A big round of applause for him, ladies and gentlemen. And joining him on stage are going to be the following speakers, beginning with Mr. Anish Achyutan, co-founder and CEO at Open Financial Technologies. Next, we have with us Mr. Ram Gopal Subramani, Chief Strategy Officer, Peros Software Solutions. Then we have Mr. Naveen Kukreja, CEO and co-founder at Paisa Bazaar. And we also have with us Mr. Rajiv Ahuja, who is the head strategist at RBL Bank. So with this context, I hand over the stage to you. Let the panel discussion begin.
Thank you so much. Good morning, everyone. Quite a novel format. I must say it's nice. It's novel and it's quiet when you think through certain things. I couldn't have asked for a better panel for this conversation. As I was reflecting on the topic today, I felt all the 3-4 days we have spent at GFF is effectively moving towards a topic like this. Like, what's the future of financial services? How do all the trends that we have been talking about come together and set the stage for next 3 to 5 years? But really, to open it out, let me start with Rajiv. And first is a more open conversation for everyone that we have heard so much about UPI. We have heard so much about new to credit. InsurTech has been growing. The wealth tech trading platforms have been growing. So really from here on, for next 3 to 5 years, how do we broad base our financial services? What are the avenues where we feel the financial services will get further broad based? That's an opening salvo, and we'll go around the room here and take everyone's views. Rajiv, I'll start with you.
Thanks, Vivek. I think if I have to pin down one thing is the broad basing of credit. I think we are at that stage where a lot of the building blocks are in place or coming into being. A lot more formalization of many aspects of the market. So I think one of the big areas we see is the broad basing of credit. Beyond the the direct to consumer thing which has happened over the last 5-7 years, MSMEs, small businesses, as well as consumers from tier 2, tier 3, tier 4 segments. So I would say that is a big focus area, not just for us, but I think should be for the industry. Vivek.
Thanks, Rajiv. Naveen, your thoughts?
Thank you, Vivek. If we kind of look at where India is today, the announcer mentioned that 1.4 billion people, 1.3 of them connected through a digital identity over the last 7-8 years. And we look at the financial services in general, only a fraction of the population. You look at any category, whether it's credit, whether it's insurance, whether it's investments, which has seen quite a spurt over the last 2 years. But if you still look at the number and the penetration, it's all in single digits. So 5%, 3 to 5% of the population. You look at the number of mutual fund investors, 4-5 crores, 6 crores. You look at the number of taxpayers, people who file tax, 6% of the population. Not everybody pays. So broad basing is probably the most important thing that India needs to have for it to become the economy that it wants to become over the next 10, 15 years. And the great thing that has happened is over the last, I would think, 12 years, first led by e-commerce when Flipkart, Amazon, etc. started late 2009, 10, around that, and then of course led by Aadhaar project, uh, Jam project, and then just the expansion of internet and mobile internet, and the users who are on smartphones. And then, of course, UPI becoming and emerging as the best payments technology in the world. It set up the rails very, very nicely for the country to now capitalize and the ecosystem to now capitalize. So, from our perspective, I think it's probably, I was discussing with Ram earlier in the morning that, people who started in 2008, 9, 10 were probably 5 years too early, 6 years too early. Whoever has survived is in a great position. But there was never a better time to be in fintech in India.
Thanks, Naveen. Interesting thoughts. Anish?
Thanks, Vivek. So, if you look at the last 10 to 12 years, like Naveen mentioned, what we have built is a foundation for the future of financial services, an open foundation. So, starting with the UPA, the account aggregator, democratization of financial services, which was earlier available only to a few privileged companies. Now, by banks opening up their platforms, the fintech ecosystem has developed. So, I think we are just starting, the foundation is there, and the rails which we are building on top of this foundation, how it can actually lead to open banking, embedded finances, where financial services get democratized by these things. So, that's the way in which I look at currently where we stand.
Can you just, because embedded finance was one big theme playing in my mind as well. Can you bring some color to that topic?
Right. So today, we keep now talking about this, that okay, 3 years, 5 years from now, we will see actually more non-fintechs and corporates offering financial services more than the fintechs or banks. Today, due to things like open banking or OCAN, a lot of non-fintech players can now offer financial services either to add value to the customers or monetize their base or creating new revenue opportunities. For example, let's look at the SME space. A payroll company can start now offering expense management or salary accounts embedded into it. Or even a consumer e-commerce companies may wanted to actually use their data pattern to offer. It's already started, the pay later and all. What we are actually seeing is in the embedded finances. But as the more and more rails are available, you will actually see more and more services which will be easier. So rather than the provider worrying about connectivity with the banks or creating solutions, these are actually easily embedded into their existing services to achieve this whatever which we mentioned basically.
Yeah. And I can imagine this giving a lot of stress to regulator, because as it becomes invisible and all pervasive, how do you start regulate? But it'll cover it at some point.
That's yeah, but I think that's where like the things like PSD2 and the regulatory compliance, which is actually seen in Europe and all, becomes very important for market like India.
Super. Ram, in your initial thoughts?
Yeah, thanks Vivek. Just putting the headphones feels like you should be dancing and not sitting on a lighter note. So yeah, see, obviously, like Naveen Anish talked about it, the foundations are in place. Account aggregator is becoming mainstream. So now you're seeing a lot more consent. People have control over the data. So, and I feel like all this for a broad base, it is reaching to a much more larger part of it. And if you look at the unit economics of reaching to a larger base, cannot happen without the combination of data and technology. And I think we have a lot of data in the country available, which is also kind of validated, verified. I mean, just the fact is freight financing is always a risky business, right? But now you have e-way bill. Can that be leveraged to bring in? So and then the same part is not just in terms of financing the e-way bills, but then also transit insurance. So what we do see is, I completely agree with the fact that with Anish's, embed is probably going to be more and more. I mean, there's a lot of government initiatives. GEM has been pretty successful in the last couple of years. 54,000 crores GMV on that platform alone, right? Financing those smaller businesses. And then you have ONDC, which is now kicking off, which has kicked off with a few of the banks coming to play. Interesting space in terms of the payment, the commerce journey, and then the financing. So that way, the point of sale or point of financing is moving away from the institution branch to more at the point of consumption. We have seen this a lot with the consumer, but I think the shift would happen to the more on the business side. And also the other part is, the other aspect I think would also evolve is, a lot of focus has been on Gen Z. Okay, But there is obviously
As Ram said, you move the financing from the branch or your app to the point of sale or the point of consumption. So in RBL, we are channel agnostic. So, and the way we believe is that, the top layer of the financial stack, if you want to call it, is all about innovation, is all about segmentation, it's all about reach. And that is being supported by layers below, which are public protocols, banks, NBFCs, and a certain partnership and data mindset, which I think is all evolving. So we are obviously we're not there in every channel, but we decide which the segments we want to service and what's the best and the most cost-effective way to reach to that customer segment. And more often than not, we have to assume that as banks, we may not have access to all those segments ourselves and even the full understanding of those segments. So, so we're doing supply chain. You can call it embedded finance, but supply chain has been around for donkey's years. We are doing MSME, which is linked to, e-commerce platforms. We're doing many things which basically leverage partner ecosystem, partner data, and trying to create financing on the top of it. So I think this is going to proliferate. I mean, and as more and more data becomes available to all people in the system, especially the account aggregator, I think this will become more and more innovative. The idea is to reach to the customer segment, widen the access at lower and lower costs. And for that, you need partnerships to reach, and you need a certain data set, which becomes a public good.
Great point, Rajiv. Naveen?
More than, again, if we take a step back, what's been the challenge in expanding? If I look only from a credit perspective for a minute, the credit over the last 20, 30 years, and why is it restricted to the top 5, 6% of the population? India is a large country, so the cost of reaching out and providing a product, even when as a lender you were ready to underwrite, was expensive, and hence only a certain ticket and above was what was viable till as late as 4, 5, 6 years ago. That was one. And the second was that India is also a very large self-employed economy, and it's just very difficult to determine what the person actually earns. And from a credit underwriting perspective, it becomes a nightmare if you're trying to give money to somebody where you're not sure on what the person earns. So technology and the channels will evolve using the technology, whether it's reaching out through digital mediums where you reduce the cost dramatically to reach out to the customer, whether it's fintechs or the banks or anybody who's a service supplier of credit, and hence in all channels, whether it's end-to-end digital or we've heard HDFC Bank saying that they're going to double their branch network at that high scale over the next 5 years. And I don't think they are being stupid in saying that. They have a thought process that India also is a very low financial awareness country, and hence a mix of using technology to reduce cost, by the same time assisting / advising to get the consumer to understand what they are taking will work well. And second part is that some of the channels, whether it's GST integration, whether it's the e-commerce channel that has evolved, where there is a lot of data that gives a surrogate of income, whether it's transactions or business payment transactions, whichever is able to give a solid, good surrogate, which replaces the net worth or income estimation, those channels will continue to evolve and grow and help the expansion of the credit.
Interesting, Naveen. So what we've been hearing is clearly when fintech started, a lot of focus was on digital, but physical channels are important, and phygital is the way which is evolving. Anish, your views on channel?
Yeah, so I completely agree that while a lot of services would move digital, physical or a phygital model will only expand. Let's take the example of some of these fintechs, right, where we target the millennial, but the number of frauds, if you look, versus if there is some kind of a phygital model to verify, there is a huge difference. Secondly, even in some of the SME-focused fintechs, if you talk to them or players like us, we had always seen that okay, the quality of the transactions or the balances are more on a physically acquired customer through a digital model compared with the digital channels as well. Now, again, when you're talking about the channels, now let's look at it from the different perspective. From a bank's perspective, we all know now, apart from their own direct channels, partner it through fintechs and other distribution channels. So that will start getting expanded more and more. For example, I think Raju just mentioned about e-commerce. Probably like help maybe in a platform like a Shopify, getting connected to an Amazon or a Facebook account for revenue-based financing, or those kind of models by virtue of like embedded finance opens up opportunities. So I think channels will be, it's going to be channel agnostic, because ultimately when you're like an open platform, it all depends on multiple distribution channels gets opened up and the ecosystem actually gets collaborated for that. This is my view.
Great.
If I can just add a
Yeah, Naveen.
point on the channel, on the work that still needs to be done in the country. So, for example, on our platform, we get lending inquiries from more than 1,000 towns, which is, and if I look at the beyond top 100, the inquiry ratio is already more than 50% coming from beyond the 100 towns, similar to what happened in e-commerce over the last 5-6 years. But when I see the amount of loan that was getting disbursed, the beyond 100 still contributes only about 20%. That is a collective work to do for the entire industry on how to continue to expand the channel and the reach at a cost effective manner to just provide the product that the consumers are looking for from those cities.
Probably what's a bit unsaid also is uh, we have seen non-financial services becoming, and whether it is ERPs or payroll, the examples Anish you gave, or Rajiv you spoke about commerce, we've become comfortable with them sourcing financial services business. Uh, but I think the model where we can be happy with some of them fulfilling that business in whichever way possible, and probably do only a small part, and being allowed to do that small part and being compliant and yet still be accountable to a fintech or a bank is something which can evolve. But just a thought when I heard you, Ram.
Yeah, so wait, actually that's true. Like, see that I think the fundamental parts. First, from a channel perspective, I mean, we worked across a segment of fintechs, lending fintech, wealth tech, private sector banks, public sector banks, private insurance companies, public insurance companies, right? Now, branch access and BCs, business correspondents, right, are a big part of the channel, right? I mean, like what Naveen talked about is the 1,000 cities. So in those cities, how do you access? I think we kind of we are solving for the channel, but we have not yet solved for the product. Because, I mean, just to give you an example, on the government e-commerce marketplace, right? You see POs of the amount of 8,000 rupees. No bank is going to, I'm sure Rajiv will talk about it, no bank is going to lend a loan for 8,000 rupees. Now, how do you kind of innovate on those parts? So I think digitization is probably something where we have matured, but digitalization is a big part. So how do you kind of innovate on those products and bring in? I think Rajiv
So
wants to.
let me just, while you're right, Ram, treads, for instance, we do as small as 50,000 rupees because it's all electronified. Documentation you don't have to recreate, and once you link with the APIs of the exchange, I mean, the smallest size could be 1 rupee, but I think the lowest I've seen on our side is 50,000 rupees. So the costs of doing it, I mean, and I'm just saying it's getting there.
Yeah.
If you talk to anybody on treads 5 years ago, nahi hoga, never. Today, we've seen almost quadrupling of value and volume almost every quarter. And, I'm sure there are other players as well. So I think there will be things which will not work. There'll be a lot of things which will eventually work. So we need to find the anchoring. Is the anchor a kind of a regulated platform like Treads, or is it a more public or a kind of created thing where you do a supply chain? Then I could do 8,000 rupees if the anchor is good enough for me.
Let me bubble up that thought, and Ram, Rajiv, great points there. The other thought which came to my mind was, and I'll give it an anecdote. One of my friends runs a tech fin company, for the lack of a better word, which works in the MSME space. Now, one of the needs they came out with, and to your point, Ram, was that with many of these smaller MSMEs, we don't really have a model where, let's say, we don't have a corporate card product which exists, right? That was one tactical example. But as I'm thinking more, where fintechs were successful was they could identify a product like a need, a niche, and create a product there. But very soon, and now we're in this journey, and many of you and Naveen have been in this journey for last 5 years plus. Now, I don't think fintechs are also very simple anymore. Right? So they're also becoming complex, and probably it's like a routine or a cycle we are running through, where we are finding opportunities and getting into complexity. But we still don't have a model where we can create bespoke products. So is that just a wild thought here? Can we get into a space where you can create bespoke products as opposed to thinking upon need, almost acting like a FMCG company? We see a need, we create a toothpaste and we push the toothpaste, right? Can we create products on the fly? And talking about future of financial services, but thoughts across the board.
If I may just, I think, Vivek, a lot of it is happening. It may not see the light of day in terms of newspapers or these conferences. And if you see some of the successes today, 10 years ago, they were a thought. I mean, if you look at, I mean, Treads as well. I mean, it's as bespoke to the MSME as you can make it. The guy just goes and gives an invoice. It's all electronic. So I'd say that I think there are certain foundational things to be ready. One is, and India is very, very unique because the foundational aspects are public goods and which reduces the cost of accessing, processing, and risk assessment. So I think this is a journey, and I don't think we can hope for perfect solutions because none exist. So you'll keep evolving. And the way I see it is that if you're working with a certain framework in mind, especially when you're working with partners who bring unique insights, I think the costs will keep going down. And at some stage, if it doesn't make sense, it doesn't make sense. So we continuously get surprised. Financial inclusion, which we started 12 years ago, is as old a model as banking has been. Suddenly we find the groups are actually using electronic payments. And this has all happened during COVID because there was no other way of doing it. So I'm just saying that sometimes you need to give it time and maybe certain situations, solutions will bubble up themselves.
Super. Any other thoughts?
Yeah, so definitely there's a lot of innovations and experiments happening in different parts. Some of them would be successful, some of them would be very nascent for it. For example, the no code, low code platforms for embedded finance. I'd seen like platforms wherein they can, for example, helping a retailer to build their own branded, co-branded card, because typically the banks used to work with only the larger airlines or the larger institutions. But here, like, they work with the banks basically, but for within 5 minutes, you can actually create it like a co-branded product or different kind of like a revenue-based financing product as a widget kind of things. But some of these things would be very nascent or it would requires. But what is important is that the foundation layer. For example, if you look at launching something in India versus Europe, I can go to like a Ting in Europe and get access to 1,000 plus European banks, and even I can debit the transactions. And I can, so if I'm an e-commerce company or a B2B company, I can actually do that. So as long as the more and more of this open banking layers, things like ONDC, the account aggregator, everything comes into shape, this will actually lead to a lot of this do-it-yourself kind of things, or widgetified these things, or new innovations that can come up. So that's my view.
Interesting.
If I can just add, it's a great point, and we've seen that over the last 4-5 years, especially, it's already started to happen. Let me take a few use case on examples where the product was created because the need was identified. Whether it worked or not is a different matter, but there is an ability and opportunity to innovate. You look at example where when e-commerce started to become large, e-commerce vendor financing based on transaction data launched by some of the SME lenders was such customization of product. When Ola and Uber was at the peak and growing really fast, Ola driver financing for buying a car became a product. Didn't work really well from a credit perspective, different matter, but there was an ability to innovate. What happened in small ticket personal loan and what's happening in BNPL are great examples where they're scaling up. The jury is still out on how they will behave. And one of the products that we do, for example, where consumers need an instrument for payment and convenience and rewards, but they were not getting credit cards because it continues to be a fairly super prime product, where we've launched a product with a bank partner bank. It's offered against a fixed deposit. there is ability, and the ecosystem is evolving. Of course, and as the things like account aggregator, as the GST ecosystem starts to come together, the opportunity and ability will only increase. Um, from a I think from an ecosystem perspective, not everything will work. That is fairly clear, and that's the job of maybe the regulator. I mean, us as an ecosystem also, on trying to figure out which ones are a little risky for the ecosystem. And sometimes it might feel like, from a fintech perspective, that why are you curbing innovation too fast? But the regulator is in a different position, sees some of the risks which it wants to control at. But the opportunity to innovate, create customized products is only getting started, will continue to just become big and big.
Just my last thought there, Naveen, is the whole debate we have seen recently around between a card and, let's say, a personal loan loaded onto a wallet comes to my mind as a classic example. Because as a customer, it's a product differentiation, which has regulatory differentiation, but from a need perspective, it is tapping the same need which is out there. So as we get deeper into it, I would guess we would get into more such situations unless we get into fundamentals and saying, okay, what am I regulating and what my product, what is the risk I'm managing as a bank, and what product am I creating for my customers. But one last thought on channels, that no one touched it, which is why I thought I'll broach it. And I know it's nascent, but the idea was banking 4.0, future of financial services, and we're talking about channels. So any views from panel on the emerging areas like metaverse and Web3? And the thought coming in my mind was, he's talking about physical channels, digital channels, and maybe in my mind this is more like for the lack of a better word, a de-physical channel, because it's digital first, physical back. Any views on, and let's accept that, let's say we don't want it tomorrow, right? So let's say next 5 years, what's the view?
So I think, Vivek, that would be, I'm sure people will experiment. You have already seen, for the lack of word, right, robots in the airports, okay, to assist, right? Some banks have experimented with customer experience, which is there. And I know there are gamification of stock markets for people to learn. Now, I think those things will come in from a customer experience perspective. I was looking at a study, the impact, right, of some of these things from a business transformation perspective is actually low. But it probably has a lot of user experience, this thing. And again, if you look at the part of in a country like India, which is so diverse, and there's language challenges, education, all those things, right? Local vernacular and localization of it becomes interesting enough to experience.
Just to build on, and maybe let me nuance that point, right? And I do personally feel that we are already into a bit of a metaverse. As if you're spending so much personal time into the digital world and across all segments. If you go into rural India, the amount of time which is spent on YouTube or TikTok is fairly high. Now, if you think about in our today's parlance, you can engage, you can create, you can get employed on a YouTube, so to speak, but your financial system is still outside YouTube, right? So in my mind, that's a today's scenario where there's a possibility for commerce to exist at that point of economic activity generation. It doesn't. It is offline. And if you extend that to the metaverse world, then probably just true.
I'll just touch upon the last point. May not be a direct this thing, but since you touched upon the YouTube, so there is like fewer fintech platforms like a Carrot, which is a neobank for YouTube creators, wherein you connect your YouTube account based on your settlements as well as your influencer marketplaces. They give a credit card. Anyway, that's not directly related. But coming to metaverse, I think again we are at a very early stages of discussing. It may even happen 5 years, 6 years, or maybe faster. But I don't. It's naturally will evolve, and probably you will see a newer way of like things, maybe digital branches or virtual branches where you can actually interact. Because today, even a lot of services are do it to ourselves, and we have created better user experiences digitally. Still, the why we are still talking about phygital is because that part is missing, and that's where technologies like metaverse, wherein it can lead to a further more innovation on financial services.
Sure.
Just 3 points. First, let me qualify the next 2 points I'm making. That technology has a way of surprising us over a 5-10 year period. It may look, very, very odd in the short term. 10 years ago, I did not have a smartphone. Now, I or everybody is spending a few hours on smartphone. You talked about YouTube, TikTok, even otherwise, even if you are at work. How smartphone has taken over our time from the day is amazing, but it's happened over a 10-year period. And so what metaverse or some of the newer technologies can do, it's very difficult to predict. However, let me make the 2 points that I wanted to make with that qualification. That, when a professor at LSE had once made this remark a few years ago, that countries like India, uh, which is at a 2,000 rupees per capita GDP. You look at any financial product, like I said, it's at 5, 6, 7% of penetration. Uh, all we need to do as a country is to put our heads down, do the basics right, make financial education widespread, make financial product access widespread, and that has been done very successfully and efficiently in the world. We now have the advantage of technology behind us to expand it much faster than the time some of the developed countries did. But we have a different path. Some of these pieces might be relevant for some other economies, some other segments. So within India, of course, there's a segment of top 10 million, 20 million consumers who are actually different from India. These things might sound very exciting for that segment, not for the other part of the India who's struggling to get a loan to expand his or her small shop, and they need a 2 lakh rupee loan. And when you talk to about these, they're saying, okay, can it help me get the product that I want eventually to expand my business? So India is in a very different zone. I think I hope that what we focus on as a country over the next 5-10 years is just figuring out how do we expand the 5 to 25% of the population.
Fair point. Rajiv, you want to weigh in on?
I'm sorry, I'm a little old-fashioned. I don't know what metaverse is. I don't know what it does. And forget Web 3.0. I think I'm basically saying go where the customer is today. The customer evolves, you evolve with the customer. And the best combination for doing that is you got a lot of public platforms and partnerships, and technology will find its way. I don't think that's the business model. But again, I'm not a I don't know what it means, so I'm sorry I won't be able to weigh in.
No, sure. The only reason I brought it up was, again, knowing that some of these would be in future, what is already done, we know what works well. We were doing some study on Web3. Amazed to see 2-3 findings I just shared with the group here. One is the number of crypto wallets in the country were in excess of 100 million. A crazy number. Doesn't really mean everyone does trading, but from different use case perspective. Second, the highest number of users from NFT and Web3 perspective were in the age group of 20 to 25. Again, this generation, which we call as Gen Z, is also moved on, right? What we call as Gen Z now is probably 30 plus. And the next generation coming between that 18 to 25 could be very, very different. So it's probably something to keep one eye out for and not to jump deep into it, but it's an interesting shift which is happening there. And personally, in our thought leadership in PwC, NFT is one area that we are going deep after. We know the regulators' view on currencies, and I don't think that's a big problem to solve, so to speak. CBDC will come. But NFT is something interesting to take a look at because it will, to your point, formalize a lot of economy. We got a lot of this market today which is working on handlooms. They don't even have a proof that they have created it. You create a lot of video content. What proof do you have? So as you start creating that creator economy, there could be a bigger play, but that's besides the point. The next point really I want to bring up and to nudge the conversation forward is for the innovation to happen, and we spoke a lot about fintechs, distribution channels, the BC models. Anish Ram, you touched upon need for creator platforms. Naveen, Rajiv, you've spoken about the channels and product innovation. But one challenge that we have seen is if we look at the overall end-to-end value chain, the technology maturity and acumen across that whole value chain is bumpy. It could be innovative at edges, it could be legacy at core, and something else in the middle. So for a lot of smoothing this out and broad basing where we start this conversation from, it might require to bring everyone up to a certain common standards and levels. Probably Ram, I'll start with you. For a Perfios, it's been a kind of a problem statement. Yeah. So what are the challenges and what are the solutions that you see?
See, first of all, I will look at the fact is compared to 10 years back, where we are, right? Most financial institutions are having some form of API gateway, which means, I mean, payment was, UPI was the starting point of it. But today, there are platforms where account aggregators is a mechanism where banks are sharing the data, right, for people to consume. And SEBI has given the mandate, so hopefully the capital market will also come on to play, right? But, and I think it is a process because you're going away from a legacy. I mean, we were doing implementation for a large public sector bank, right? All inside within the bank, okay? Compliance, information security. I don't want to be anything on cloud. It's a shift, but that shift has happened to a large extent. Most banks have understood that it is about collaboration to a large extent. Consumer experience is also on the edge. So, and it is a process of getting those things in place, right? So, if we, I mean, just to give a part, right? The finance minister mandated that all public sector banks need to be on account aggregator by July 31st. It happened. Think of this would not have been possible 5 years ago. I mean, 4 banks we know went live in 3 weeks, right? So that way, I think the progress that has been done is this thing. There's a long way to go. There are challenges in terms of scale. There are challenges in terms of, again, unit economics, right? What are you building out? What does it take? Because if I look at it, this is the, I mean, like my current role is about separating from BAU and strategy, right? Now, the focus is always in putting out the fire, but you have to also have made structural changes to look forward. So I think the many things on this part, in the last 5 years, most financial institutions have a chief digital officer. There's a separate digital team which is looking at the part of it. I mean, obviously, Anish and I are working together with one bank in getting a solution rolled out, implemented, right? So I would say, I mean, we probably are very critical about ourselves as a country and as an industry, right? But if we, I think we just need to take a minute back to pause and say that we have done a lot. I mean, like account aggregator is an ecosystem which is first of its kind in the world. So again, we are seeing the same thing happening in the insurance space and other places. So it is this thing, and I mean, like change doesn't happen overnight. So it requires a bit of perseverance and patience. And I think in the next 5 years, it will be a lot more stable and achieve the scale that we desire to.
Thanks, Ram. Anish, your thoughts?
So a while back when Rajiv mentioned his old school, I was thinking about myself. So I always get scared that somebody should not ask me about crypto and Web3 because, and I feel like okay, at 40, you have become like really old, wherein it's very difficult to keep updated with the latest technologies. But one thing which I'm noticing is that, so if you really look at when the digitalization happened in the public sector banks, the private banks, in the initial days, it was very difficult for a lot of like those bankers to catch up with that. But if you look at the last 3-4 years, it has drastically changed. Every bank you talk to, everybody they're really updated about what's actually happening around them. I've also seen even both people from the banks as well as, so I'm talking more from the bank's perspective, taking initiatives to learn about like things, APIs or newer technologies, then trying to, and also building out things which fintechs are building. So first 2 years, all the fintechs thought that, okay, hey, now banks are just the license, I will actually build everything. Now, if you really look at like, banks are giving strong competition for every product. They actually waited, watch. And because of all this, our ecosystem being developed based on the rails and the fundamentals, all of those things, it is leading to everyone to feel that, okay, if I'm not really updated with what's actually happening, I'll actually lose it. So I don't really see, actually we are in a very good position wherein the knowledge and the innovation, basically, the base layers, they're getting that right so that it will become easier, both the banks as well as the fintechs and everybody in this ecosystem.
Rajiv, your thought?
So I think first is to recognize technology cycles will be bumpy forever, much like the roads, with all the stuff you're doing. And then it's to also say what kind of expertise you want to build in-house and what kind of expertise you want to borrow, buy. I also have to concede that refresh cycles in traditional technology are becoming faster and faster. So what was a 10-year cycle is now a 3 to 5 year cycle. So you then have to figure out what will you own within the boundaries of the regulator and the data security. So I think we'll all struggle through it. While my colleagues are on the panel are all young companies in that way, I think in a few years they'll find that they're also having a lot of legacy debt. And I think it's not just the technology, it's also your internal organization and your experience and expertise. So I think that is a recognition first is important, and then how you organize for it, knowing that you can't be perfect. And so we've basically said because we built a, not built, reinstalled a new core banking in 2012, we had
plus players that we work with, ranging from the largest bank to the newest fintech. Uh, what has happened over the last 2 years post COVID is very clear and moving everybody in the single direction. There is clear realization that technology, digitization is something that we need to adopt, even if it's the largest bank, because the systems are large, as sir said, that some people will take longer, but they'll get there. And Anish talked about the fact that banks are super smart, right? They look at things, they let it kind of simmer, get to a certain stage, and then if it's attractive, they attack. Banks will get there with a little bit of a lag. The fintechs will probably get there faster because they don't have legacy systems. But I think the key theme would be how the rails are built and developed in the country.
Vivek, sorry, one.
Yeah, Rajiv.
I have a bone to pick with Naveen.
Yeah,
He
please.
called me sir because I used the word COBOL.
Good one. I think let's segue into the time really flew. We are almost at the end of the hour. We'll segue to the last closing remarks from everyone. A lot of interesting thoughts on how do we broad-base financial services, what are the channels which are emerging, what needs to be done on the tech side, so on and so forth. Last, really, the closing remark query for everyone is, as an industry or as a request or recommendation to policymakers, what would be our few asks to smoothen this journey over next 3 to 5 years? And Anish, maybe I'll start with you.
I think some of the, while we all talk about that not getting regulated is actually a good thing, but I believe that it's very important that, for example, today the sectors which we operate are not directly regulated, like neo banking services. We are regulated through the partner banks, but it's very important that okay, this gets regulated. Secondly, the ask would be like the open banking frameworks that gets implemented in Europe. I mean, the account aggregator and all are towards the first step towards that. But I think if we can actually get the PSD to equivalent kind of like compliance, and then companies can get applying like an NBFC plus license kind of a things, that would really aid this innovation. At the same time, from a compliance level as well, or from a regulatory aspect as well, it will not actually it will actually lead to a lot more innovation and things like that's my ask to them.
Sure. Ram?
So I think Vivek, regulators done a lot in the last few months. So, and which is probably, I think one of the big part is fintech is mainstream, right? It's not anymore an experiment. So which is where, so which is good. And then obviously there are new segments which are coming in. So I think as they see those changes coming in, they are doing the tweets. What they see as clear risk, acting very fast on it, and what they think are things to experiment with. I mean, as simple as this, having an interchange for the whole A's. I mean, it's complex. Multiple license providers, multiple entities integrating, right? So they're saying let the market evolve. So I think which is where in the interactions and all the things which you have seen, there is clearly, I mean, they're not being a watchdog. I think they are being watchful and where they think makes sense. And then they're letting things evolve, right? I mean, definitely, and I think as an industry for us, we have to also we have to recognize the fact that we are not anymore cowboys, right? Okay. So which is where we need to become more compliant. We need to think about security, and the PDP bill is important. I think because that brings in a part of it. But because one of the challenges, just few bad apples, right, made the whole thing. I mean, we see large amount of volume of transaction with those two, are 3.5 to 4 million requests a month, right? And if it'll be a part of, right? In that kind of segment, we have not seen any impact. So we've been, probably we've been fortunate that we have not had some of the bad apples in our portfolio of customers or clients. But I think that had an impact in the last several months. The regulators given clear directions on the digital lending part of it. And I'm sure as we evolve into the whole neo-banking and wealth tech space of it all, right, this thing comes in. And the part is because it is technology driven, there is the whole risk of virality and impact. Okay, I think that's something. So which is where data compliance and data governance has to be really at the forefront of our thinking.
Fantastic. Data compliance, data governance, neo banking, good themes. Naveen?
Uh, Firstly, the regulator has an awesomely difficult job to understand, figure out how technology is evolving so fast and how do they regulate while allowing innovation, avoiding big accidents. Um, Having said that, I think my ask or my request, and I hope that that's how it pans out, is that the regulator takes a step back, forms a view that technology and the newer, smaller, younger companies, whether they call themselves fintech, techfin, etc., are going to play an important role in expanding, which is a clear need for the country, the financial products across the population. And having said that, if that is clear, how does if the regulator could spend more time, money, investment into understanding technology? They do have a fintech innovation hub. They do have a fintech team, but if they could just kind of be a larger part and spend more time, I think that'll help the regulator also understand. And finally, I hope that's how it pans out, that the small accidents, when you are disrupting, expanding, small accidents will continue to happen. The regulator's job would be to avoid nuclear accidents. They would hopefully be conscious that the small accidents will continue to happen. Sometimes we've seen, the digital lendings are a result eventually of a set of incidents that happened about a year back. And sometimes they are not the great way to bring about regulation, but it's a complicated piece. I think the last point I would say is that if the regulator could just hopefully be a little more conscious on spreading out. It's not easy. Instead of implementing something immediately which causes a great impact, but agreeing with the ecosystem that that's the right thing to do and we'll give you more time to adjust, that could be great.
And talking about formalization, they've got a fintech department now. In Bangalore, they have set up RBI Innovation Hub, which will engage with startups. I think The building blocks are there. It's matter of now executing it. Rajiv, bring us home.
Okay. So I think Naveen's point is valid, but I'll just maybe broaden this to the entire state. When I look at the state as really governments, I think they have the two most important assets and advantages. One is they can establish a legal framework, and they have done that. Second is the procurement strength they bring. See, whatever has happened in the last 8 years started with the adoption of Aadhaar by the current dispensation. We are all sitting here because that started. We were all saying, why the hell is this happening? But I think that's led to a lot. So, government impetus is the surest way to accelerate, access to financial services, reducing costs, and then making it legal from a data perspective, from a contractual perspective. I know there'll be ups and downs on the regulation side because, people evolve. To me, if that and more is done, I think you will find that things which we are not able to access because it's very costly will become easier and easier for us, all of us, to build good business models on top of.
Fantastic. Government impetus and data formalization. Thank you so much. Thank you so much, audience, for your patience. Thank you so much, my panelists, Rajiv, Naveen, Anish, Ram. Fantastic conversation. Time just flew by, and we have just hit it on the spot. So I'm sure the MC would be happy. Thank you so much, and have a good conference ahead.
Thank you.
Thank you.
We're doing Q&A? Are we doing Q&A?
You tell us.
1 or 2 questions, sir.
Sure. Any questions for the panel? We got mics which can go around if anyone has any questions. I can see one back there.
Hi, this is Karthik here. I'm the product head for supply chain at HDFC Bank. Thank you. It was a great session. I have a slightly different outlook at this, and I wanted some opinion. We're talking about fintech solving problems, innovative solutions, but wherever you're solving technology and data issues, you can have multiple fintechs doing that. But when you have a decision to deploy capital being taken, the sources of capital are limited. You have banks and NBFCs. Do you think in the coming years, with banks opening up to partnerships, we will see a scenario of a lot of failed partnerships? We will see scenarios of where businesses don't scale, even though partnership makes sense. And will we see a threat wherein banks would probably invest? Because banks are no longer legacy organizations. They're also investing heavily, be it through partnerships and then building their own in-house solutions. So do you think this, I won't say bubble, but this trend will first see a recession of sorts of partnerships and then arrive at what we talk about banking 4.0 with a utopian state where, using data, using cash flows and alternate data points, we are deploying capital digitally or physically and, scaling businesses. What's your thoughts? Anybody on the panel, what's your thoughts on that?
A new equilibrium, Rajiv,
Yeah.
you want to take?
So, Karthik, a good question. And I think if I can just relate our experience, we've seen waves of hype and failures in all our efforts. So whether it's caused by us or partners don't have the stamina or the market is still not there. Sometimes you can be too early, okay? I think this is a part of life. So one should not aim for that there'll be a smooth road. And I think as rules also evolve and capital markets evolve, I think that's the other thing which we are all seeing now, that the capital availability is becoming more selective. So I think what one has to figure out, what's the best way for your business model to become a little bit more robust. I don't think you can get 100%, efficiency or effectiveness. So the robustness means you pick and choose what you want to do, build your foundation strong, and then diversify. And I think there, is a challenge for all of us. At a bank of our size is not fully diversified, whereas HDFC is a lot more diversified. So I think you will find this scale problem at every level. So one has to recognize that and continue innovating on that. But I think we've seen now 2 or 3 waves of this hype and then failures, and then some stamina-oriented companies, some of them are sitting on this dais, have survived through this last 8-10 years.
Fantastic. Any other questions? The last question. I can see someone has raised a hand.
Hey, hi. Hardik here from HDFC. A very pointed question to Anish and Naveen, if you can pitch in. Just wanted to check over the past 5 years, we've seen connected banking, embedded finance evolve. With regulations coming in and with account aggregator, ONDC pitching in, there is surely an overlap in terms of business volumes and business structures. What do you think, or what is the road ahead in terms of a granular approach when it comes to, and there's always, everybody is here to make money at the end of the day. How do you see the partnership between banks and fintechs such as yours evolving? Or is there a roadmap to it?
I think when you talk about connected banking, very handful of banks actually build the connected banking layer. Now with an account aggregator, you have access to more of this banks. So in fact, these are things which we are actually looking forward for, wherein through a single API, if you can actually connect to multiple banks. Now, from a revenue perspective, again, it depends on like what sector you're focusing on. For example, we focus on SMEs, wherein while we rely on the banks for the banking and the payment services, a lot of more our services are more towards the financial automation services, subscription-based services on, say, expense management or accounting or a payroll or third-party ERP systems connecting doors. So that revenue model doesn't change. In fact, all of these things only enhances the experience. Now, today, I can actually pull in the GST, the TDS, I can actually connect multiple bank accounts. So I can, in my vision towards becoming like a financial OS, these are the enablers. And perfectly, this is something which you always like look for. So I don't really see this as like not competing or like becoming like a blocker in our models basically. Naveen, you wanted?
Yes, Sim, thanks for the question. It's very similar to what the first person had also asked, a part of the question. Again, if you take a step back and look at where India is today, you look at the penetration and you look at what segment is penetrated. The opportunity is so high that despite, it doesn't matter whether individual companies do well, don't do well, individual product pilots do well, don't do well. I think the trend is very, very clear and moving in one direction, which is the market is expanding fast. There are technologies allowing opportunities. Of course, they need to be done in a sustainable manner, and hence regulator will keep chiming in whenever it sees any systemic risk. From a partnership perspective, again, the partnerships will just continue to become stronger and bigger. And, so far, you look at partnerships 1-2 years ago, only a couple of banks were talking about partnerships. They were at a certain scale. You look at last 2 years, almost everybody is talking about it. Whether they're doing it or not is a different matter. And some of them have achieved a different scale. And you look at 2-3 years later, every bank would be doing partnerships, and some of them will be at significant scales. Yes, there will be overlaps. Yes, there will be co-creation. Yes, some of the banks will want to do because they will be very, very savvy. They'll figure out they can do things themselves. All of that will happen. But I think the trend will move in the right direction.
Awesome. Thanks, everyone. Thanks for hosting us. Thanks for engaging. Thank you so much. Thanks, my fellow panelists.
Thank you.
You can keep it here. Yeah, thank you. Ladies and gentlemen, a big round of applause for our lovely panel members for such a practical, pragmatic, and riveting conversation. Clearly, data formalization, government impetus is important for Banking 4.0. And apart from that, like they said, that regulators are not watchdogs anymore. Rather, they are watchers who are also quickly observing how the fintech industry is emerging, and fintech is not an experiment anymore. It has really become mainstream. On this note, ladies and gentlemen, it's time to set the context for our next set of panel members and the topic they will be addressing. The topic of our next panel discussion is rethinking insurance with embedded insurance in a digital-first world. Ladies and gentlemen, embedded insurance has become a hot topic for many in the industry, including insurers, emerging insurtechs, and venture capital firms. According to a report by Instech London, the embedded insurance market is forecast to grow to 722 billion in gross written premium by 2030, more than 6 times its current size. Put simply, embedded insurance is bundling of coverage or protections within the purchase of third-party product or service at a part of customer journey. And many of the people, including insurtechs, venture capital firms, see a potential high margin and a promising growth revenue generator. Now, to throw light on different facets of this very relevant and compelling topic, called as Rethinking Insurance with Embedded Insurance in a Digital First World, I'd like to call on stage our revered set of panel members and speakers, beginning with our moderator, Mr. Chirant Patil, co-founder and director, Discovery. Can we give him a huge round of applause, ladies and gentlemen? And joining him on stage are our set of illustrious speakers, beginning with Mr. Arijit Chakraborty, Managing Director of Asia Pacific at Cover Genius. Following him on stage will be Mr. Rajat Sharma, Chief Revenue Officer at Insure MO. And we also have with us Dr. Vijay S., Senior Vice President and Group CMO, MediAssist. We also have Mr. Subrajit Mukhopadhyay, Executive Director at Edelweiss Tokyo Life Insurance, and Mayank Ravi, SVP and Head Group and Embedded Business, Eagon Life Insurance. So on this note, this is our illustrious set of panel members and moderator. Over to you, Chirant. Chirant, just one bifurcate. Yeah, 5-0.
All right. Quick mic check. Cool.
Hi.
Hello.
Yep. Yeah, hello.
I can hear myself. All right. So, embedded insurance, the hot new topic in everything insurance. Let's talk about that. So, first of all, thanks everyone for making the time. Thank you to GFF. Thank you to all the organization and the committees behind it for giving us this opportunity to talk about something very exciting and close to all of our hearts. We all come from different factions of the insurance community. Some of us are insurers, some of us are technology enablers, some of us are third-party digital sort of players, etc., etc. So the idea would be to cover and get as many sort of broad views and engage in a meaningful kind of a discussion and a debate. We'll try and bring the flow out to the extent possible. We'll also open it up for a little bit of an Q&A based on sort of the organizer's recommendation for the last 10 minutes. I'll try and do that as well. But the best way to think about sort of embedded insurance is a topic that is fairly new, fairly nuanced from a buzzword perspective, say a couple of years. And what we would like to do is today we'll talk a little bit about the current state of where embedded insurance is and where it is going to go over the next few years. So let me tee this off, right? So embedded insurance, there's two schools of thought as far as embedded insurance as a space itself is. One school of thought is that it is nothing new. This always existed. We just call it under something called as affinity back in the day, where it was actually just basically introducing insurance products on the back of sales of other products or services. For example, like OEM, sort of motor sales, like motor premium getting bundled at the point of new vehicle purchase, issuing sort of insurance on the back of credit, etc., etc. This always existed. So it's a very product attachment view. The second view is that it is a very consumer experience view, right? That insurance is getting sort of micro, it is getting sachetized, it is bringing insurance to the point of trust. So new kind of experiences are being created for consumers across the board, and technology is enabling it, right? Getting more personalized, getting more sort of nuanced in terms of pricing, etc., etc. And it is allowing whole host of distribution outside of just OEMs and banks. So that is the second school of thought. So I would love to go around this particular panel and get a sense of two things. One is where do you sort of fall as far as your school of thought is concerned? Is this something that has been around, or is this something net new, right? And sort of how do you kind of define that as far as your organization? So precede that. So maybe you can sort of also, guys, speak about sort of your own organization very quickly and how it relates to embedded insurance. So three things, I guess. Yourself and what your organization does as far as embedded insurance is concerned. Second is where do you fall in terms of the school of thought. And third is the so what, right? So how do you kind of define it? What is the so what from your perspective? So I guess we'll go from the left to right. So perhaps Mayank, you can go.
Yeah, thanks, Sharon. Mayank, I represent Egon Life. I lead growth and partnership for Egon.
Now, growth itself is a typical word, if you see, quite unheard of in insurance industry, because whom are we partnering with? We are partnering with non-traditional players who core business is not selling insurance only. So, can I complement to their product? That's what growth for us, and this is what we are trying to do here.
Thanks. My name is Rajat. I'm from InsureMO. Again, we are an insurance infrastructure platform. So whether we've heard embedded now or we've been seeing that forever, my answer is we've been seeing that forever. The only thing that we have seen now is the amount of use cases and the amount of products which is kind of erupted in right now. The only reason for that is probably earlier carriers used to talk about it or banks used to talk about it or a few selected companies used to talk about it. Today, if you go to a utilities company, a power company, an auto dealer, an auto manufacturer, a fintech, everybody wants to talk about insurance. And when their side of the view comes to the table, that is where the innovation, becomes exponential. I think that is the only difference that we've seen today in terms of the number of use cases that these channels are driving more than carriers driving that amount of embedded. So yes, there is both schools of thought, and I think both are correct from our perspective.
Cool. Rajat?
Thanks. I'm Arijit. I'm the managing director APAC for Covergenius. We consider ourselves as a global leading embedded insurtech. And what we do is in a single API, which is multiple markets, multiple product, we come up with very hyper relevant insurance solutions in the same consumer journey with large tech companies and e-commerces. So example, take Booking Holdings, Skyscanner, Agoda. If you're buying any air ticket, flight tickets, we are at the embedded one checkbox insurance to buy protection against a product. If you are in large e-commerces, for example, Amazon, Flipkart, eBay, we are again giving you protection against a primary product you are buying. Suppose a laptop or a smartphone, we are giving you protection against that. Now, given to the question, I feel that embedded insurance has been there as a product bundling and going to the affinity. I think what has evolved is what our company is also obsessed about is a consumer journey and how it is sold and being distributed. Like we are pretty obsessed about the NPS score, which is record keeping like positive 65 to 70, what we have globally, and how the consumer journey happens. Because we co-create products from our distribution partners. We do the end-to-end APIs. We work on the claims journey, payments journey, and then we give the innovative product to the partner, which is bespoke. Compared to previously, I think the affinity model was more about creating products and then finding distribution partners. We are more distribution focused and then finding out solutions which works for the B2B2C customers.
Thank you so much, Arjun.
Hi, I'm Dr. Vijay. I am the Chief Medical Officer at MediAssist. So, MediAssist is one of the leading third-party administrators in the insurance space. So, yeah, that's about it. And on the question of embedded insurance, I come from an insurance background. So, what I would say is that embedded insurance has been around for quite some time. So, as rightly pointed out, it's something we used to call as attachment product or affinity product. But now, with the digital age coming in, true embedded insurance is coming into space. So, embedded insurance is not only about making products and selling them on platforms. So that is one part of it. The true experience of an embedded insurance comes when the entire journey for the customer is seamless. So that's where we come in. We provide digital experience on the claim side as well. So the entire life cycle of the policy servicing and the policy sales and servicing encompasses digital insurance. That's the experience in the global space which defines it. That's all.
So, Dr. Ravi, Dr. Vijay, I apologize. So, since you have been you have been in the insurer side and then with MediAssist, that is more of a digital TPA, if I can say so. You have seen both sides of the coin, at the point of distribution, so underwriting point of distribution and then post-distribution support. What do you think characterizes embedded insurance differently from any of the other products that you have traditional products like retail products? Like what does it mean for you from a MediAssist perspective?
So yeah, I absolutely agree. That's a good question, Chirag. So see, from an insurer's perspective, embedded insurance is very different from the traditional insurance. So traditional insurance is where a product is made. It has all the features and it is just sold to the customers as such, and they don't have a choice on choosing the benefits. Whereas the insurance industry in last couple of years has changed. We underwrite products, we pre-underwrite products, that is the prices are fixed and the benefits are very flexible. So say take an example of somebody going to a Flipkart and trying to make a purchase of a mobile phone. So at that point of sale, so there is an insurance product, say a personal accident or a hospicash product, which is sold along with it by the insurer. Uh, the advantage for the insurer is that there is no operational hassle. Even the customer has the same benefit. So on the same platform, through the same payment gateway, he gets a product. So that's what is on the insurance side. So the reach that the insurer has at a low cost is the big benefit that he has. Whereas if you see from the customer, so talking from the servicing side, I would say that at Medias, so say today we service around 10 million customers through Ola and Make My Trip at Medias. So the seamless journey that they get, so the claims come in digitally. They are able to submit claims through WhatsApp, and the real-time updates that they get. So that seamless journey is what helps them to have a great experience of insurance at the end. So if you see what does a person want from insurance, he pays for it, and at the end of this day, the claims is uh,
That's the
what
moment of
defines
truth.
you. Yeah,
It says,
exactly.
they say claims is the moment of truth, right?
Absolutely.
So if you think about it, like, I think Dr. Vijay makes a great point. Embedded insurance, from a insurer perspective, it's about sort of getting these pre-underwritten products, micro products, and distributed at scale at a very low cost, which means that there is a lot of data throughput also coming on the back of the business volumes and all of that, which makes underwriting more efficient. On the distribution side, it is about sort of, really taking these products at scale and being able to sell more with a whole lot of, lesser amount of operational hassles. And the consumption side is easier because you understand these products that much more easier. The affordability is there, accessibility is there, and awareness is also there. So it's easier for insurance products to get sold, a traditionally push-based product to be sold. So that's what is sort of, tying it all together. So Arjit, coming back to you, I mean, you guys are doing sort of some interesting embedded insurance use cases at scale across the globe, right? So what stands out? Like, what would be your one or two sort of favorite use cases? It doesn't need to be in India, but what are your top two or three different, say, use cases that you see having played out at scale, and why do you think those are relevant for the future as well?
Sure. Thanks for that. I think how we operate in 60 plus countries, right? And we come up with, again, hyper relevant products, which is distribution focused. Now, I'll give you some use cases which we have recently worked on. So there's a global partnerships which we have done with a fintech player called ZipPay. So ZipPay is a leading payment gateway, payment wallets. And what we have done with them is whenever you are using a Zip as a checkout option, our algorithm can then verify that what are the items which are insurable. And then based on that, at the checkout option, you can have a protection against that particular product at the checkout. And if you don't want to convert at the time of checkout, you don't want to buy, again, post purchase, we can also prompt you to buy in the first 30 days. Now, if you see this model, it can be replicated across any fintech, any payment gateway wallets across the globe. And we started with Zip, and it's a very successful
And this assumes,
partnership
sorry
which
to
we
cut
have
you,
done.
but this
Sure.
assumes that Zip has been able to identify the categorization of the purchase.
So generally, if you so Zip to some extent does, but most of the payment gateways are not able to categorize like what item you have bought, but they have the information that what merchant or merchant code they have. So from that merchant code, we know that it's a OTA or it's a fintech or if it's a retailer or it's an online e-commerce. And then from there, we can then push a particular travel insurance or retail insurance at the back of the merchant code, right? So
Very interesting.
yeah, so that's one use case which we have recently done. Other one examples, I'll give it of Ola in international markets. I see my partner in Ola sitting in the room as well.
I think he's a partner for many of us here.
So what we have done is why this product, what we did in international markets with Ola is interesting because I compare this product with where I come from in Singapore with Grab. Now, what Grab has done with Zongan and Chubb is only when you are doing a ride, it protects you against death and disability while you are in the cab ride. Now, we all know that what is the amount of claims you'll get out of that, like hardly anything, right? But we curated a product for Ola which covers things like when there is a delay in your cab ride, we pay a $10 voucher. If you take the cab on time, but you are still, because of traffic, you can't make it to the airport, we actually pay for the flight. If you lose your personal belongings, we pay for the personal belongings. Even though you retrieve the personal belongings, we also pay an inconvenience fee. So this is all packaged as one-time opt-in, and it goes auto-debited for every ride. So that we have seen a lot of traction of that. And similarly with the whole, the whole COVID situation and the whole travel, this thing, everyone has a conventional travel, but we came up with like products like cancellation for any reason, products like parametric flight delay. And then if you go to any OTA, you see a fixed pricing, flexible pricing. That we are distributing. The flexible pricing is actually our product. So what has happened in embedded insurance, which we were all talking about, convenience. So insurance, we never wake up in the morning and say, let's go and buy insurance. But how embedded has changed is when you are buying a hotel ticket, you will buy a flexible pricing because you want that flexibility. But in your mind, you don't think you're buying insurance, but that's actually an insurance product. So we are moving from insurance selling to insurance adoption, which is making the whole embedded journey more interesting. And that's why it's kind of disrupting the distribution of insurance.
Very interesting use cases, Arjit. Thank you for that. Rajat, moving over to you, I guess as building on to what the other two gentlemen mentioned, you are an infra company, you're building the rails, and then you can make anything sit on top of that. You can make underwriting sit on top of that, distribution sit on top of that, etc., etc. Some you do it yourself, some you kind of have a system implementation partner. We're exchanging notes about that. Very interesting model, and you've done it at scale, right? And you're talking about some partners like IRCTC and others where you're doing more than 1 million sort of policies per day. Now, what does embedded mean to you in the context of building an infrastructure company, right? Because you're not really acquiring for the cases of embedded only. Yeah. Embedded becomes a use case on your platform. Yes. In a way. So how do you think about embedded?
So yeah, that is where the hype has to be cut out. Now there is obviously hype, right? When you talk about something new, there's big hype. But the fact is now, if you look at insurance industry, let's come to the core of carriers, right? Now people say that embedded will be $3 trillion in business in 2030, right? That's what we've been hearing. And currently, if you look at the total GWP premiums of globally is around $7 trillion. Now, embedded versus a traditional product, the biggest differentiation that we see is it is not to be run just the way our traditional products have been run. The way we look at it is there are three very important parameters. We call it the 3 V's. Volume, variation, and velocity. And till the time these three are not there, an embedded product should not be existing in a scenario. Now, the reason for that is a unit metrics or unit economics, when you apply from a traditional product to a bite-sized product, that immediately fails. The reason for that is, if you're selling a traditional life insurance policy for 50,000 rupees, right? And if you're selling the same bite size or embedded for 50 rupees, you can't apply the same metrics which is required to build a product on the traditional side, and same for the your embedded, right? So that is where the biggest differentiation comes is, can people go and reuse as much as stuff on the embedded? Can there be infrastructure component that can reduce your cost to zero of launching these embedded products, right? And there's obviously not profitability. I have not heard of any company which are very profitable doing embedded products. I'll give you an example.
Arjit, would you agree with that?
Not really. We have a very healthy margin globally on embedded.
So maybe Rajat, you're talking about more about it from an India perspective?
No, I'm talking global. Now, okay. I'll give you an example. So last year we did around 65 million policies in 24 hours. 65 million policies number, not the GWP, the number of 65 million policies. The same day, we wrote around 500,000 policies for the traditional type of products, which are big ticket, motor, a fleet, travel, that kind of products. The profitability, the losses that you make doing embedded products gets covered by the profits that you make from an embedded, from a traditional product, right? And that is where we see that, yes, calling it 65 million policies, that sounds very sexy, right? That sounds very cool. But the fact is, making money out of them is one very difficult, because those 65 million policies are getting issued from, say, 100 channels. Now you have to consider the cost of connecting to those channels. You have to consider the cost of doing those 65 million policies would have come from, say, 1,000 products. We call them SKUs. A motor insurance product might have 100 SKUs for that. Now that is where the doing and building those products, and you also know it because you're also trying to do the same thing, right? From building those products and getting them to the market, there is manpower, there's labor, there's tech cost, everything involved. Now if you can bring it down to zero, yes, that is when it makes sense of doing stuff. And now why Cover Genius is successful is because they're very focused.
Yeah.
Right? If you ask Cover Genius or anybody else, can you do 3,000 products and make it profitable? No. I don't think so. Yeah. Now we do the same thing, right? So we write $20 billion every year on the platform. And every year we are growing almost 40%. Out of that $20 billion, 90% still comes from the GWP, comes from the traditional. Whereas the volumes, 80% comes from the bite size. So that is where the numbers and the metrics show, because we run the infrastructure and we try to visualize every scenario.
That's a key point. Embedded insurance can be a loss leader product if you're not focusing on it. Incredibly high volumes, incredibly low margins. To sustain that as a business model means that you are going deep in it, as against that being one of the. So that's a fair point. So I'd like to bring in sort of Mayank here. And Mayank, we've been talking a little bit from sort of the distribution side. We're talking about in terms of post-distribution support. What do you think from an insurer? How do you guys think about embedded insurance? Is this something that is, again, something that has been around and you've just had to add more color to it via APIs and sort of, all the sexiness that comes with making a product micro and those kind of things? Or is it something that you think is going to be a long tail, sustainable sort of a business model for you guys as well? How seriously are you guys taking embedded in the context of maybe life insurance, but also if you have seen your counterparts on the non-life side, how do they see embedded? It will be great to hear both sides, please.
We see great value in embedded. If you're looking at the protection gap in India, it's close to 70%. So it's all about matching the demand supply. And so the way insurance is sold and the way people, so it's like an old saying that insurance is never bought, you sell that, right? But now I think we need to change that approach, right? So can I make it simple for customers? Can I make it very, very simple? It's not about just a product, just a distributor. It's about simplicity, the journey that I'm having for a product. Maybe underwriting for that matter. For example, for our organization, underwriter is not a human being. For us, it's just an algorithm. So we are trying to make it very, very simple for people, quick decision. There are no lags. And this is how we think that we can make a lot of difference. Now, because a lot of people who are not exposed to insurance, right? And there's hardly any, and so if I make it very simple, at least I can make people familiar to insurance, at least life insurance. And this, I think, embedded will play a great role, because what we are doing is attaching with the primary product. That can be a travel platform, can be a lender, can be a health platform. So they're already enjoying the benefits of that particular platform. And why not insurance along with that? And at what cost? Hardly any. But yes, as you rightly mentioned, it's all about volume. This needs good volume to manage. So if we have a small volume, of course I will say that yes, it's a bit tricky. But if the volumes are high and if you're able to write lives well there, I don't see a concern. This will really help at least cover that protection gap that we have in India. And we are quite serious about it.
You mentioned cost, you mentioned margins. Let's talk about deeper economics on that side. So what is the cost of, how do you see underwriting as it relates to embedded insurance products relative to other traditional, more configurable products? What is that economics? Can you walk us through that? Like how does that work out for an insurer?
For an insurer, underwriting, you say, so it's like fluidless underwriting for me, because the sum at risk is not very high. In embedded, I will not be giving a very high sum assured, because it's not a primary product. And it's not a long-term product. It's going to be a short-term product, because the person is buying something else and I am attaching insurance to that. So it's going to be a small ticket size just to make the person familiar with insurance. And then, of course, we can add many more things. So, of course, the margins are not going to be very, very high. But what happens, because the way we are selling that through partnership model, there your margins will not be, so at least I can save on the cost. At least my underwriting cost, my the demand supply, the match that I was talking about, these things are well taken care of. I use technology there. But yes, if I go for human intervention, if you have a brick and mortar model, no, it's not going to be sustainable.
Can I butt in here?
Absolutely.
So yeah, he's right. In a way, embedded insurance is where we sell to the masses, right? So large numbers and small incidents. So that works out. So the pricing is also on the lower side. So to take an example, I would say uh, our masses lies in the hinterland today, right? It's very difficult for the insurance company to reach the hinterland because of the operational cost it requires. But if you go about bundling or embedding an insurance into a micro finance with a microfinance company, if you embed it with a loan, right, it reaches a mass. So you are giving insurance to a large population. The sum assured is low, and your incidence even in that large population is low. So it remains almost the same. So around 8 to 10% is the incidence rate, right? But your ticket size goes down. So you are able to sell that insurance and still make some money out of it. So that's how embedded insurance works in a way.
And as far as assistance support, just a second, Arijit. So as far as your assistance support that you provide, post distribution on the claim side, etc. Do you monetize on embedded as well, or for you is it a loss leader kind of a product category as well? Like how do you think about economics from your side?
So no, see, everything on the embedded side, the good thing is that most of these have to be digitized, right?
Yeah.
So you cannot have a paper coming in. You cannot process it on a paper. Right? That will be a huge cost. So here what happens is technology supports us. So things come in digitally. So there are claim engines which are built in where automation has been high. So auto approval of claims happens. So the cost of processing even at the back end has gone down. So that helps us in a big way. So it is never a loss-making proposition for either the service provider or the insurer at the end of the day.
Good to hear that it is actually a sustainable,
Yeah, absolutely. It's
channel
a
across the board.
sustainable model. Yeah.
But you need
Arjit,
to
you had a
rethink
point.
everything actually.
I think Arjit had a point, and we'll come back to you if that's okay.
It was more on the reaction to the margin conversation because that's pretty interesting.
Yeah.
And I agree that it has to be a end-to-end digital interface. I have seen before as well that there are insurtechs out of India, Southeast Asia, and other parts of the world. They call it digital, but it's kind of a digital interface. But behind it's all human moving around, like we call it lipstick on a pig sort of a scenario. So if you're creating a business like that, obviously that's not, you can't make margins out of that. Now, what we do in Cover Genius is, our differentiation is we do a lot of product recommendation, dynamic products, and dynamic pricing. So that actually dictates the price, the margins, because there are instances where your program you haven't priced it properly or the incidence rates are higher and it's moving towards a loss making proposition. Then what we do is we have dedicated account managers for every account. We look at what are the guardrails? Do we need to change any product modification? Do we need to do any pricing modification? Do we need to do anything which is changes in the solutioning or how the consumer is buying and claiming the product? So there are a lot of things which you can factor in, which doesn't need to change the pricing per se.
Yeah.
But you can make changes in the consumer journeys and product solutioning so that you can then manage your margins and the losses out of that.
Right.
But if you're working like I also come from in the past, a traditional insurance background, a lot of people just will give a static pricing and on 6 months they will look at how your portfolio is working, whether it is red or green. That doesn't work. In an embedded, you need to work very, very closely with your partner and you have to have skin in the game and grow that account together.
Yeah, that's a very good point. And Mike, I'll come back to you in a sec. But just to kind of juxtapose what Arijit mentioned relative to our own experience at Discovery, more than 70% of our volumes are actually embedded insurance right now. And we see ourselves as market leaders on the credit attachment insurance side, we have visibility into capturing about 20% of the home finance market by the end of this fiscal year. So, and that point is absolutely right. It is about how deep you are entrenched as far as your brand partner or your distribution partner, and providing that entire end-to-end support for it to be a high margin kind of a business. So, if you're going to be providing just the API, right, then you can, very seldomly will you see getting into double digit percentages in terms of margins. But if you're going through the full stack, you're providing the product, the solution, you're working with the underwriter, bringing the sort of the solution to the table, APIzing that, providing sort of the other distribution support post that, then we are seeing sort of, more than 15-20% plus margins as well for certain kind of use cases. So it's a extremely lucrative kind of a business model, but it is few and far between, because not everybody can distribute insurance at scale. So coming back again to Mayank, now we are again talking about it from a distribution perspective and all of that, but as far as life itself, right, what life product will you embed at the end of the day, other than sort of attaching it against sort of attaching credit life, right, against credit? So what, are you guys seeing any product innovation there on the life
Of course,
side?
it's very much important because you need to co-create products with partners.
Okay.
So you definitely is important, and then lending is one. Second is health platform. You can attach with multiple things. So health is, I think, is a good case. Used case here. We have education is a good use case. So there are multiple areas where you can work. It's just not lender. So people always think that attachment is always about a lender borrower relationship. No, it's not. That's not the case. You need to innovate, and you need to make products simple with no legalish kind of words, very simple things, not to be terms and conditions, and things will work out. If I try to sell the same product that we have today in a retail space, and try to embed, no, it's going to work. Not at all. So we have to co-create depending on the partner's requirement, depending on the target segment they're catering to, and we are quite hopeful that this is going to really work in India.
And what is the typical turnaround time for you to create a new embedded product? Let's take two examples, two use cases. One is you're creating a new embedded product from scratch.
Yes.
You have to file that with the IRDA, blah, 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 all of that you have to go through. Or second, you're taking a larger, more configurable product and sort of, making it more micro by extracting the right kind of sort of, a composition of that particular product and pricing it out separately. So what would be your turnaround time across both of this and the economics thereof, if you don't mind, please?
Well, preferably configurable products, where I can design multiple propositions for a partner.
Okay.
So the product needs to be flexible enough to allow me to do so. Also, thanks to IRDA, now we have use and file in India.
Yeah.
So this is going to be a great help for companies
That's a
who are really
great
trying to
tailwind
innovate.
for the space, yeah.
So I don't think so economics here. I don't think is so. So you look at a turnaround time here. For any proposition to build, if I already have a product that's flexible enough, should not take more than a week. And then, of course, understanding the requirement, tech stack. We already have a tech stack, one single API. So we can do everything, right? From onboarding to claim settlement, everything can be taken care of. So it's a 1 week job, of course, depending on the bandwidth at the other end.
Yeah. I mean, insurers to talk about turnaround times in weeks itself is a big thing. So, kudos for that journey and sort of having sort of interacted with yourself and some team members as well. Very progressive sort of, tech stacks as well. So, great journey on that front. Rajat, but is that what you're seeing as well? Because you work across insurers, right? You work with sort of, in India, outside of India. So, what do you see as a technology challenge to enable your insurers to create embedded solutions at scale?
So same thing. So in fact, when Aegon started their journey with InsurMO, this was almost, I think, 4 years back. The same issue of legacy, same issue of traditional core back-end heavy system. And I think what Aegon's vision was to build a more futuristic organization which is more distributed, in a sense that, your one system should not be impacted by another system, right? And that is where co-creating new products, bringing that time from 6 months to 1 week, or even for that matter, we don't even say 1 week. From our perspective, those products are ready. You can pick up an SKU, change your rules and your ratings, and your APIs are ready, which you could give it to your apps, or you could build your own apps with a no-code, no-code player as well. So I think this is a similar scenario with most of the carriers. When we started off 7 years back, it was very difficult for us to go and talk to a carrier, saying that, look, here is a microservices architecture, here's platform, you can get your products, you can get your APIs, and we were like, this is bullshit, this never happens in carrier insurance company, this process, we have to build applications, how will you do that? But today, I think we just cut from that to this date, and we have now 300 carriers who are working with us, and I'm not just talking of a single API, they are building stuff on the infrastructure, and they don't have to go and replace their existing core systems. Let them be there. We don't even educate, going to replace core system. We rather try to reduce that to the system of records. They are good, they're stable, they're already doing their job to fulfill the internal users, underwriters, actuarials, all of that stuff. But these core systems are not meant for customers and partners.
Right.
They were never meant for it. Earlier it was just banks and agents, but today it's not like that, right? Today it's 200 channels that they need to connect to, and out of the 200 channels, only 2 will fire for them, right? So if you were to do the same amount of money of connecting 200 channels with 100K for every of them, that's not going to make sense. So that is where reducing that cost of connectivity to zero, doing that innovation of launching any new product to zero, that is very important. And that is where that 1 week of lead time, and that I think they're doing a great job. And when you're talking to a regulator and even filing it and going live within 1 week, that's immense speed. But even if you could do it in less than a month's time, that is commendable because your tech cost becomes near to zero. And if we used to look at it like a analog and digital scenario. So it's very interesting. When you look at I read a report from McKinsey which was 15 years backdated, and then they used to look at the stack and they used to draw down what the tech cost they were trying to analyze the cost to income ratios of most of the large global carriers. And in a cost, tech and people and process, that covers 90% of your cost. Now that coming from analog to a digital completely changes the game. If your tech becomes whatever that was from 1/10, your processes obviously is getting cut down because of the simplicity in the product itself. The amount of money that you are spending on tech goes to marketing and goes to commissions that you are paying to your agents and your partners. Despite that, your savings are huge, and that is where the profitability comes when you're doing these kind of products.
So when you work with your 300 plus insurers who have legacy core systems and those kind of things, these legacy systems were not even born in an era where embedded insurance happened at scale, right? Or even being discussed about. So what are the challenges that you feel are pertinent in this particular space as it relates to you connecting with those core insurance systems? Is there sort of anxiety? Is there sort of discomfort in them to opening it up to sort of platform players like yourselves? I mean, not just in the context of embedded insurance, but perhaps more so because of for new product creation, right? Because they thrive on a new product creation being a change request, as against that being done on the fly versus via low-code, no-code platforms, etc., etc. We are also experimenting on that side in advanced conversation with a few insurers to use our distribution tech and make it sit on top of like core insurance systems. The challenge that we feel is that people look at it from a cannibalization perspective as well, which is not really so. It has to be pushed from the insurer to say that guys work with them. Right? If not, we are going to probably stop working with you guys as well. So do you see that across insurers, and sort of how do you contextualize that with embedded insurance product creation?
Yeah, big time. So as I said, right, so because we even work with RPG, AS400 green screens. So forget APIs, you can't even do anything with them. Even if you have to write Hello World, it takes 2 days to write Hello World. We all come from a programming background, but that does not work in today's scenario. But what we do is we try to kind of work with them, because we have two models. One, we work either in a two-speed model, in a two-speed architecture model, or we try to create a parallel ecosystem with their existing core system. So both the models are equally popular with us. The other thing that we are doing is, because since we are an insurance infrastructure platform, we are investing very heavily to go and connect with as many core systems as possible. Now that is a burn on our side. That is the investment that we have been doing, and we've been burning hundreds of millions of dollars only to ensure that we are connected with every single core system provider in the world. Now, if you pick up the 5 largest core system providers in the world, if you go and just go and integrate with them, that means you've captured more than 80% of the market. So between Guidewire or eBowtech, or Duck Creek or Aegis or any of them, if you build connectors to them, and you've understood their data models and how that data model could be translated to your data model, I think you've kind of solved a big problem for them. So that is what we are doing very, very proactively. Our R&D teams are working very heavily to go and connect with them. But again, it's not that easy, because these data models, are a spaghetti in itself. Everybody's taken a core system and they've created their own version of their core systems. So eventually, if we're talking of 5, we eventually see 500 of those versions. But yes, I think two-speed model is very famous, and in fact, what you are doing is probably one of those most effective models. You bring a distribution and then try and bring APIs and then probably push bad jobs, or let them consume the APIs. We do see that as well, but I think parallelly doing that and then reducing that core system to a system of records, that has come up with very heavy architecturally mature organizations. People like Aegon, what they did, because they were very, very heavy architecturally mature.
Yeah.
They could take a decision that yes, this is possible, and we could reduce it to a system of records, and we could create a layer on top of a middleware to drive this kind of an innovation. And this is what Aegis is doing with us globally. In 40 countries, we are doing the same thing with Chubb. We're doing the same thing with AXA. So these are all big, large organizations who've taken that call. After 50, 60 years of struggling with these spaghetti, and they can't replace it. Data migration is like, it's like a brain surgery. You don't do it.
Fantastic scale there. Arijit, just to bring you in, so by definition, embedded insurance at scale works when you are deeply entrenched, not just on the distribution side, but also on the underwriting side, right? So to carry forward what sort of, Rajat was saying, that you do need that, capability to being fairly entrenched into the insurer side systems as well. So how have you gone about that journey, if at all, and any use cases to talk about where that has been a challenge and how it has overcome in recent times?
Sure. So what we don't do as a strategy is take like a Bharti AXA product and put it to a distribution partner, or take any other ICICI Lombard and put it globally. I'm giving Indian examples here. But we don't do that because, again, we co-create products with distribution partners. So all product, if one product is available with, suppose Agoda, my Skyscanner product will not be the same. It's actually a different product. So we co-create with distribution partners. We do our in-house underwriting, actuarial modeling, coming up with a product, APIs. We write our own terms and conditions. The entire insurance value chain stays on our Xcover platform. Then we bring that, that's the point when then we bring the risk to the capacity providers, whether it's global reinsurers or direct underwriters.
And that's with an MGA model?
That's mainly. So we are an MGA globally, but as you know, MGA as a concept doesn't exist in Asia, but we pretty much work still as an MGA. So what we do is we bring the risk to the direct partners or the reinsurers, generally with reinsurance, because most of our dealings or most of our partners are either regional or global. Okay. So we bring it to the reinsurers and insurers, and then we see what capacity they can provide. At the back, actually, we also have our global reinsurance license. We have a captive insurance license. So if need be, we co-share the risk at the back end. And again, depends on what kind of a product which we are distributing, right? If it's an insurance product, I obviously need a fronting insurer and a reinsurer to give the capacity.
Right.
But if I'm selling something which is like a service warranty or a product warranty, then I can also package it in a way and take it under my own balance sheet through the global reinsurance, because
those are assurance products, not insurance products.
Exactly. So the thing is, I completely agree that sometimes if you are not the manufacturer yourself, if you do not dictate the product construct and the pricing, you cannot innovate. Then you are still dependent, like whatever innovation you have done on distribution, you're still dependent on manufacturers. So somewhere you need to keep a balance so that you can innovate on that and then come up with the relevant product.
So it makes a lot of sense for brands and distributors to have that one-stop approach where you not only bring the product and the solution, but also the technology integration and post-sale service, support as well as a one-stop shop. But sort of, to do it, but that means sort of you're doing it with, the brand will do it with one sort of provider, right?
Yeah,
In
exactly.
most cases, serious distributors of insurance want a multi-insurer, multi-product kind of that's the strategy. Typically, that's what we are seeing.
Yeah.
So in that particular use case, are you seeing sort of those kind of use cases here in India as well? And how do you think about that? Or are you taking a call that you're not going to go work with a lot of carriers, perhaps go up the value chain into reinsurers?
You mean like become a marketplace sort of a model?
Like, well, sort of, think about what if the Cover Genius story were to become a little bit like a discovery journey. What would that mean with a multi-carrier, multi-product, multi-distribution channel support, right? Do you see value in that, in sort of in markets that you're currently at?
So I think globally, what we don't want to do is, I mean, we do get a lot of interest and requests for that. Like there is a large fintech or there is a large e-commerce. They want to, and there is a lot of traffic coming to their platform. And what they want us to then build is, can you build maybe a mini policy bazaar on their platform, right? And which have 3-4 carriers, and then you are distributing. But what they sort of, those distribution platforms don't understand is sometimes giving multiple choices to customers is not the best way of distributing insurance, because people end up buying whatever cheapest in terms of premium. But cheapest premium doesn't mean it's the right product construct for that particular individual, right?
Right.
So we have been very focused on not to play on the marketplace model, but to create one product which is suitable for that particular platform and the consumer journey, and then evolve in that product. It doesn't mean that it's like you cannot make changes to that. We launch one product, then we experiment with that. We kind of increase the product variance or decrease product variance to make pricing affordable. There are a lot of things we can do. Like if the main product is not selling, in the next page, suppose a conventional product, travel product is not, no one didn't buy because he has it.
Right.
The next page, I will push for a parametric flight delay, right? So things like that, you can evolve with those product manufacturing, but we generally stay outside standalone product. Like on the bank assurance, obviously, people ask for, there is an insurance tab, you have a laundry list of products. We generally stay out of those because we don't think those things convert. Those are not embedded. And second is we don't play in the marketplace model where sort of people choose kind of the cheapest product.
Compare and buy mostly happens in retail products, right? You don't do that for sort of embedded products. You don't give a lot of options. It just should be it should be consumer consent, right? You opt in, opt out, sort of, and then.
Yeah, exactly. But if we want to, we can, because our single API actually can give multiple products in multiple markets at the same time. So if you look at Booking Holdings, which is our global partner in 60 plus countries, because insurance again is territorial, right? So take bookings as an example, right? If you are originating from India, Mexico, China, Singapore, it doesn't matter. Your buying journey, claims journey remains consistent.
But
It's
still
kind
a
of
single product. You could be
it's
giving
single.
multiple products via one tunnel, API tunnel,
Correct.
but single product at the point of purchase.
Single
right?
product at the point of purchase. But if we want to do, again, just to complete that thing, but what take is sophisticated enough that it knows that if you are originating from India, then an Indian insurer will issue the policy through our system.
Yeah.
If it's Singapore, it's a Singaporean insurer. So we have the global infrastructure. Now we do a lot of bundling stuff as well. So we can bundle different services to make a product variant or a differentiation. Now, if we want, we can actually there's a partner we are working with, without naming them. Regulatory wise, they have to show 2 or 3 options of insurance. And if it's a regulatory requirement, we will do that.
Because it's a retail product.
It's a retail product.
And they are
exactly.
And they have an intermediary license.
They have an intermediary license.
That's why
So then we will do that.
Got it.
But as a first business proposition, we will come up with one product which works for that ecosystem.
Very interesting. So I guess a final question to Dr. Vijay before we kind of open it up for the panel for very little time that we have. Question is, I guess, how do you see integrations with insurers? Because at the end of the day, one of the 2 things that Arijit mentioned was customer experience, product nuances. And when you think about it in terms of post-sales support, right, or post-distribution support, for very sort of, the extension to that would be that you have deep entrenchment with the insurers as well, right? So, and you assist across there's hospital network on one end, there are multiple providers, multiple insurers. So what does the tech system for you look like as far as, integration with insurers? Is it deep entrenchment or is it very sort of, on the fly kind of a work? Something to talk about that would be helpful in the context of embedded insurance, please.
Sure. So, yes, as a service provider, we are deeply entrenched with all our partners, basically, be it the front end, so be it the hospital infrastructure or the insurance companies itself. Because today, as a service provider, even regulation mandates that we should, each of our transactions has to be ideally approved by the insurer and payments happen through them. So we are deeply integrated with them, and there is a real-time integration which happens. So whatever transaction is happening, the customer is aware, the insurer is aware, and even the say the provider, the hospital side is also aware at the same time on real time. So we are actually deeply integrated to each of the components of the insurance space. Yeah. So yeah, it is something that is required today.
And sort of has that changed? I mean, the tech stacks are not really mature on the insurer side. We are few and far between, right? So different API standards, different. I mean, how does that work as a TPA, a digital TPA at scale? So integrating insurers relative to distribution.
Yep. Yes, I think we have evolved as an industry in the last few years. So we invest a lot on the digital side today. So we have specialized teams working in that. We integrate with each of the insurers. So being the challenges, being a third-party administrator, we integrate with every insurer. So there are 30 insurers in India today. So they may go up by another 10 or 20. We don't know. So yes, we have a dedicated team which works with them. We even integrate with the providers because we need to get real-time data coming into us, because on the embedded space, as I spoke, I can't rely too much on paper, right? So things have to come in a structured format to me. So I have to integrate with the hospital so that the data coming into me is relevant to my rule engines running at the back end for auto adjudications or faster processing. So we are deeply integrated, and we have invested a lot in that from the service point of view.
Interesting to hear. More power to you guys. All right, so we've got a couple of minutes on the clock, guys, and and first of all, thanks, panelists. This is very exciting. Hopefully, we got out the best of what you guys offer in embedded insurance at large as well in this discussion. So 2 minutes on the clock. Perhaps we have two questions. So time for two questions. Maybe start off with one question here, the other question here as well.
Hi, my name is Sumit Swaroop. I work for Center for Digital Future. We do a lot of research on policy and regulation. That's why I'm sitting on the front. I wanted to ask the first question. But a couple of weeks ago, I was reading that Tesla is developing a system where their cars have IoT and intelligence, and the cars send real-time feedback to a central cloud. And therefore, they're developing insurance. So the insurance actually varies on a daily basis depending on how well the driver is driving the car.
Usage-based.
Usage-based. And I can imagine that, these things are also coming in India with microfinance you mentioned, and other things we've also seen with healthcare, with the pre-existing conditions and age, etc. So usage-based being linked to insurance, what kind of regulatory issues does that throw up? Data privacy? Can an auto mechanic give feedback to an insurance company as to how good the car is doing? Are there data privacy issues that we're looking at here going forward? And second question again is around regulation. As you guys raise more and more money, do you see, and technology is a big driver for your platform. So are you considering, you are a platform, and therefore are you looking at platform economics and platform issues in terms of competition, antitrust, etc.? So both data privacy as well as antitrust questions.
Whom do you want to direct the question to?
I don't know. Whoever wants to take up those questions.
I mean, these are extremely important questions, can't be answered in the next 20 seconds.
Sure.
We'll take it offline, but telematics, pay-per-use, usage-based insurance is what we are working on a lot. There are mixed things about what kind of a data we can get from distribution partners, whether we are taking personal data or we are doing aggregated sort of a data where there is no personal information, but making the whole consumer journey better by usage base. But very interesting question, would like to take it offline with you.
Yeah, we can discuss. In fact, Tesla works with us as well. So there is a lot of data points that we know what they are doing. A lot of it is marketing, but the fact is it happens a bit differently. But yes, I think we can discuss on a lot of that aspect.
Probably a panel by itself. And your second question was on platform economics. I'll request you to kind of take it up with the speakers, and we can happy to share our point of view on that particular bit as well. Pranshu, I don't know what question you would have that we'll answer. It should be the other way around, I guess. But it will be great to hear from you.
I also have a lot of questions for Pranshu.
So the question I have is on the dark side of embedded insurance, right? So it's very easy to get carried away. This is for a lot of, for example, fintechs. It's a new source of income, source of revenue. And because claims at this volume are easy to predict, and most of these products will have lower incidence ratios, you can put in a lot of TNCs. So at what point do you draw a line? And especially when you work with partners, some partners may just be looking at it as a new revenue opportunity, right? And as I said, it's easy to get carried away. So where do you draw the line for this model to be sustainable in the long run? And how do you work on that, and how do you work on that?
Fantastic question. So basically, Pranshu, you're asking is, economically it may make sense, but is it giving
right value to the customer?
Customer value.
Is there claims? Because at the end of it, that's the point of fulfillment.
Great question. Whom do you think would be appropriate?
All the partners.
Maybe
yeah.
all of us can appoint. It's a very pertinent question. All of us can appoint. Maybe Dr. Vijay, if we're starting with you, very quickly, please. 10
So
seconds.
yeah, I think you are very right. So at the point of sales, the biggest challenge with embedded insurance today is the customer getting what he wants, and does he know what he is paying for, right? So that's the first question that needs to be answered. So once that's answered, when we underwrite a product, so we keep in mind the type of losses that we can sustain, which rightly pointed out by the panel itself, was that we keep monitoring on a very regular basis. So we have built in, we understand and we know till what amount of claims can this product be sustainable, and it is monitored very closely in the embedded space. We don't do it on a quarterly or a 6-yearly period. So that keeps
Real-time
the
monitoring.
yeah,
Dr.
yeah,
Vijay, you're saying
exactly.
real-time monitoring is perhaps
Absolutely.
one of
Yeah,
the answers.
yeah.
So maybe we can abstract the answer to the question in a few words. Arjit?
I think I agree. It's real-time monitoring, coming up with a product construct which is consumer-centric. I will say, like, again, given the time, I will say real-time monitoring and consumer centricity.
Yeah, I would say gatekeeping, right? It's an ecosystem responsibility. Insurer needs to make sure that the right kind of product and all of that, and for the right kind of use case, distribution enablers like ourselves should be also make.
But it's more of a responsibility of how you actually perceive the insurance as a product.
So quite a relevant question, Pranshu. So thing is that it's very, very important to understand, and as you rightly mentioned, that it's very easy to get carried away. So tech, your AI ML plays a lot of role here. Of course, I need to understand a pattern. If a claim is very, very high, why it's high, the guardrails needs to be in place. If these things are so, if your right checks and balances in place, I don't think it's gonna be a bad journey ahead.
Great. On that note, it's all about checks and balances. Thank you, panel. It was a wonderful sort of panel altogether, and hopefully the audience has enjoyed it as well. Thank you again. Thank you. Appreciate.
Thanks so much.
I think Chirant made sure that there were a lot of used cases and our panel members contributed immensely. So a big round of applause for this part of the conversation, ladies and gentlemen. Clearly, embedded insurance is the way of future transactions, and what matters is how deeply entrenched you are with your brand partners and the entire ecosystem. And one message is that we are moving from insurance selling to insurance adoption, where volume, variation, and velocity is going to play a key role. At this point, we want to thank our partners who have played a pivotal role in making sure that this event becomes a reality, beginning with our in association with partner Perfios, our theme partner WhatsApp, our spend management partner Encash, our payment partner Cash Free Payments, our CEO's dinner sponsor HSBC, our communication partner for this fest Calidria, and our banking partner Standard Chartered Bank, PayU, AWS, Kia.ai, Paytm. And lastly, our networking partner for this fest, Buddy Loan. So this was about all the sponsors. And now, ladies and gentlemen, it's time to set the context for our next panel discussion, which is going to be equally exhilarating, stimulating, and relevant on the topic of fintech disruption. The topic of our next panel discussion is going to be centered around future of digital lending in the new paradigm. Over the last decade, ladies and gentlemen, technology has revolutionized industries across the world, including financial services. In India, in the last 7 years, there has been a paradigm shift in customer behavior from offline to online financial transactions, along with the rise of fintech companies that have really enabled and catalyzed this change. The digitization of this process has had mixed results globally, and what we have seen evolve today is completely a holistic hybrid model, where a combination of technology and feet on street offers the most viable and scalable proposition. So with all these massive changes happening, What is the future of digital lending in India? This is the premise, this is the space, this is our realm which we're going to be covering in our next panel discussion, which is the future of digital lending. And to lead this part of the conversation, I'd like to call our moderator, Ms. Aditi Olman, Director at Cash Free Payments. And joining her on stage are going to be the following set of speakers, beginning with Lizzie Chapman, co-founder and CEO at Zest Money, Vineet Tyagi, Global CTO, Biz2 Credit and Biz2X, Amit Jain, partner, Pricewaterhouse and Company LLP, Vinay Matthews, founder and COO at Faircent, Gaurav Kumar, co-founder and CEO of UB. So with this context, can we give a huge round of applause for this set of panel discussion, ladies and gentlemen?
Thank you. Thank you. And for sure, I don't look like Aditi, right? I think Aditi is on the other side. Yeah. My name is Sameer Singh. My name is Sameer Singh Jaini, and I'm part of the Digital Fifth. I think in terms of digital lending, the way we understood in 2016-17 when the fintech wave came, today what we understand now is very different. We understood it that you could do new innovations at pace. You can build new models. You think about new data points. You can do embedded finance. You can do everything. And there was a very limited focus on regulatory oversight, right? That's largely how we understood it, right? But of course, things have changed in the last few years. And of course, there has been a dramatic reduction in the regulatory arbitrage as such, right? I think it doesn't exist anymore. The world has changed dramatically. Now, in that context, I want us to all think about what's going to happen next. How would co-lending work out? How would, let's say, for example, there's a focus on reduction or removal of FLD. There are different interpretations happening in the market. Everybody is right now also looking for getting a NBFC license as well. I think things have dramatically changed in this period. I never used to read much about regulation, but I now know regulations by heart. I can read lines by lines, and I don't know what. I never wanted to become one, but yeah, we become one. So I think as we go into this area, I think it'll be useful for us to maybe understand from each of our panelists here a quick perspective on their view. So maybe my request to each of the panelists is if they can quickly introduce themselves, and then maybe spend a minute on their first view on the entire space of digital lending, how it will pan out over the next few years, right? So I think we'll start with Aditi. If you just quickly introduce yourself and talk about, and you're not moderating, right? I'm moderating, yeah, fine.
Thank you. Thank you so much, Sameer. So I actually lead new initiatives for cash-free payments. We are a payment aggregator and an API banking company. And for us, I think when we say new paradigm for lending, our focus has been how do we enable these new and innovative lending models. We have, for example, Gaurav here, and he'll be talking more about co-lending. So there's co-lending, there's BNPL. So with all of these new innovative models in place, how do we ensure that we can enable disbursements, repayments, the entire infrastructure? How do we support that while also ensuring compliance, right? Especially with the new lending guidelines in place. That has been our core focus. Happy to talk more about how we're going about that. But I think the important part here is, ensuring a seamless experience for the RE, for the regulated entity, for the LSP, for the borrower, and yet being compliant with the guidelines. I think that has been a focus for us.
Thank you, Aditi. Thank you, Aditi. And I think a few years back, or maybe 2 years back, when we said co-lending will scale up, I think we did not know how it will proceed, and it's done very well. So, Gaurav, quick introduction about yourself, your company, and maybe a few thoughts on this subject as well.
Sure. I'm Gaurav. I'm the founder of UB. We are building infrastructure to deepen the lending market and the debt market. I think one of the reasons why we exist is because if you look at the lending ecosystem, the debt markets have not penetrated, right? Whether you look at the loans market or retail loan market or securities market. And our thesis was that unless and until you build infrastructure, right, the markets will not deepen, right? Because there is a trust deficit between providers of capital and the borrowers on the last mile. So we are building that infrastructure on the lending side, three parts to our trifecta. The first part is the protocol, where we are becoming the unified protocol for lending, where most of the banks today have integrated. The other parts of the ecosystems are also integrating. The second part is the network. Once you get to our protocol, you get today a network of over 6,000 enterprise, including lending companies. And the third part is depending on the financial product you choose, and there are currently 7 stack on the financial lending side, we orchestrate the digital banking infrastructure. So that's the third node of our trifecta at UB. And as we get in, I'll also talk about what our experience has been and why digital lending is accelerating the way it is.
Thank you. Thank you. Vineet, we met almost 3 years back, and you were entering Indian market with your own stack on digital lending. So maybe you can introduce yourself and your company, and maybe talk about what you have learned and what's your view on this segment.
Sure. So thank you everyone for being here. My name is Vineet. I'm the global CTO for Biz2Cred and Biz2X. So Biz2Cred we've been a digital lender in US since the last 12 years. We've predominantly built our own technology stack to enable end-to-end digital lending happening, and we focused on SME lending in US. And about 5-6 years ago, we've focused on the Indian market. And what our learnings has been that as the whole fintech world started booming, there's a lot of digital eruption that happened, a lot of digital nativity that has started happening in India. I think there's going to be a lot of innovation, a lot of innovative thinking that we've all seen fructify till now. It has its challenges, and we are seeing that those challenges are coming to an head now. Regulators are issuing guidelines that are affecting some of the use cases and business models. I think we'll deal with them and we'll move forward. So, I'm going to talk about maybe much later about the learnings that we've had and what kind of new use cases and business models can scale from here on.
Thank you. Thank you. So, Vinay, in terms of, we'll not go in deep, but maybe we know that P2P lending started with a regulated entity structure long back, right? And you have been at the forefront while others are not regulated. You are always regulated, right? So maybe quickly introduce about yourself and maybe P2P lending, just a very quick view, and we will go deeper later on.
Okay, so my name is Vinay Matthews. I run FairSint. FairSint is a two-sided marketplace, just like any other two-sided marketplace, Ola, Uber, Amazon, Flipkart, Swiggy. So we have two sides of customers, the lending side, the borrowing side, demand-supply side, and large number of customers on both sides. That's the way the marketplace operates. So classically, we are a two-sided marketplace. So what we do is that we originate lenders and borrowers using the existing ecosystem, right? So for example, on the lending side, we have wealth management companies, IFAs, we have wealth tech companies. We ride on them and we distribute the products to their customers, right? There are customers who come directly also, but a majority of the customer comes through these channels, right? Similarly, on the borrowing side, there are DSAs, there are aggregators, there are companies, tech companies who bring in their borrowers to us, and we may bring in the journey of those borrowers onto our platform and make these transactions, fructify. So when we started, regulator had put out some guidelines through which this was to kind of be operated. As it moved on, the maturity set in. The program also set in. Maturity kind of came. A lot of big partners also started to come in. Just like any other, Flipkart when started with books and eventually got on to kind of getting Samsung TVs and iPhones sell on the platform. Similarly, for us also the journey has been starting a little slow and going on to mature products and mature relationships. So that's how typically this marketplace works. So we've been in business for the last 9 years. We've done close to 4,000 crores of disbursement. It's all public money. We do close to 150, 200 crores of disbursement on a monthly basis. So that's the rate. Thank you.
Thank you, Vinay. And Amit, I think quick introduction from your perspective, and you see a lot of entities as you are a consultant as well. So maybe quick view from your side will be very useful. I do hate to have another consultant on the same panel, but I know you know more than me in that area. Yeah.
No, that's fine. Good afternoon, everyone. My name is Amit. I'm a partner in Pricewaterhouse and Company LLP, and I lead fintech regulatory practice at the firm across segments, payments, lending, neobanks, and others. Now, just to make this point, like what are we seeing today? I just want to go back 5 years, like when we had digital payments as one of the segment. We saw significant changes coming in the digital payments across the board, whether it is on security, authentication, data localization, KYC measures. There were reactions, actions from the regulators at times. There were business resilience coming in, whether to adopt, what not to adopt and all. But where do we stand today? Like we have achieved a lot more maturity, certainty, and the way we have progressed in the entire ecosystem. I think this is where we stand today in the digital lending ecosystem, where there is a lot more, I would say, noise happening. Like, is it right? Is it not right? But to me, it appears that, as always, the regulators have followed a customer-first approach, and with that, they notified these digital lending guidelines with a lot of sort of arbitrages wherever that existed. I think what the emphasis over here is they want to put back the obligations back on regulated entities the way they have been operating, and not only take care of them, but even the partners with whom they want to sort of use for offering these products and services. So I think to me, I see this as a moment where we actually, once we kind of look back and see what things are needs to be corrected and addressed in the short term side, it's going to be a lot more brighter for digital lending ecosystem as a whole to grow in a very responsible manner. So I think that's where like I hold my point, and maybe, I can take up other points later. Thank you.
Thank you. And I totally agree that RBI has taken a customer-first approach, and I'm all for it. That's just that I work with a lot of startups in different ages, and I think it has been a bit more painful to them at this stage where they've raised a lot of capital. Many of them have millions of customers also on board. And NTC has been category which will get impacted adversely because there's the same category which was never getting credit at all, right? This is sad because I'll give you one perspective. I keep talking about the same thing is that millions of women in India get credit when they are in villages because they are trusted. But when they're in cities and they're homemakers, they will never get credit, right? I don't know why, because they're NTC, right? NTC is the abuse, which I think some of these entities were solving for, but unfortunately that has not happened. So I think it's two sides, right? It's positive is that it's all going to work well, but there are challenges, right? But I think co-lending has been sort of very powerful, and we have seen a growth of it. I think Gaurav, if you could just quickly guide us on how fintechs, how NBFCs, and how banks can actually onboard the co-lending journey rather quickly, and how can this scale? So it will be good for us to understand your perspective on that.
Sure. So I think for the audience also, what I'll do is I'll take a step back and more talk about partnership lending, right? Because you're talking about two partners in the ecosystem. One partner which is lending, the other partner is actually acquiring customers, servicing, and performing a lot of roles on the ground. How do they come together, right? So today we are seeing largely three parts. Part one is what is called the partnership lending or digital lending, which is like 100-0. You're partnering with, the other partner, which is now under the RBI definition is like an LSP. Or you are doing co-lending, where you're partnering with another RE, right? And the other RE might be providing 20% of that loan, and you might be the dominant lender. And within that same model, you can actually lend real time, or you can lend at a lag, right? So there are three forms today which are currently prevalent, right? Now, if you take and look at the journey over the last 2 years, the co-lending guideline more or less came out almost 3 years back, right? But why has this started accelerating now, right? And I'll just give you some numbers today. At UB, at our platform, we do almost close to 85,000 loans per day, right? On this particular platform. Now, why is that acceleration? So I'll kind of briefly touch upon three things, right? One is on the technology infrastructure side. When you are bringing two partners together, there needs to be significant amount of alignment between these two partners, right? And the biggest challenge was that partner one cannot integrate with so many partners on the other side because your systems have to talk, right? So for you to communicate between the two, you needed a very high quality protocol, right? Where with one integration, you can actually talk to multiple partners on the other side. And if we look at the equivalent, that is what NPCI did, with UPI, right? And led to a rapid acceleration. So that's one piece. Second piece is about how do you manage the entire piece which Samir was talking about, once a partner comes on board, right? Right from alignment, because the customer is being underwritten by a partner on the ground. How do you align accounting? How do you align a lot of those processes, right? Because I think that's been the next challenge. The second cohort I will also talk about, it's not just about technology infrastructure. It's also been about providers of capital coming in. While the focus and attention has been a lot on fintechs, but one of the reasons why co-lending is becoming large rapidly is because the largest of NBFCs and housing finance have now adopted to co-lending as an originator, right? So today, if you look at volumes, large part of volumes in the co-lending market actually comes from housing finance company and not on the personal loan finance, which unfortunately or fortunately constantly remains in the news. But because large parts on the originator side have adopted to this product, the provider of capital is trusting this overall product much more than what they were doing a year and a half back. And last point very quickly, I think the regulation has got reset, right? So if you look at last 2.5 years, the regulator has chipped away on regulation, which means that today, if you look at the digital loan, whether that loan has been originated by your own branch or your loan has been co-partnered on the co-lending model or it has been acquired through a direct assignment, right? The regulator expects you to have the same treatment of that loan the moment you actually become the bona fide lender, right? And it can be any financial product. It can be a securitization product. It can be a direct assignment product. It can be a co-lending product, or it can be a joint digital lending product. The treatment now remains the same, right? I think these, to my mind, has really gone about accelerating. And last piece I will leave it with you, which is our own take, that 5 years, 10 years down the line, we think, given what we are seeing now, almost 40 to 50% retail lending will actually start flowing through partnership on digital lending, right? So,
thank you. I think 40-50%. I think it may be higher as well, right? Because that's how distribution happens, right? I mean, why would you put so many branches, so many people when you can originate better and cheaper as well? I think BC model in the villages has been always around that, right? Partners largely do all the processing because the salary structure is also very crucial to the whole process. And then on the ground, you can't hire that many people, right? I think it's difficult. And sitting in BKC is tough, right? Sometimes, yeah. Sorry for that. So I think, Aditi, we know that when we are advising with our customers, the biggest challenge is also coming on the implementation side. That how do you manage the disbursement and collections, because fintechs are no longer allowed to handle the money at all, right? I don't know if you have looked at the regulation. It's very detailed. I mean, when we were putting this document out on some overnight, we realized that there's so many changes, right? So one critical was how do you handle cash and how do you handle money, right? So maybe if you can quickly give your view on how it can be handled and how it can be positioned. So repayment and disbursement without touching, can we be compliant, right?
Sure. So I think talking about disbursement first and then repayment quickly. So on disbursement, if you look at the guidelines, there is a requirement that there cannot be pooling of money at LSP level or any intermediary level. So there, our focus has been how do we give the same experience of disbursement of loan, bulk disbursement, and the same experience that the borrower and the lender is getting while also being compliant. So what we're doing there is, enabling multi-party escrow setups with the regulated entity, enabling connected payouts, right? So the same experience that they would get from payment aggregator escrows, enabling the same in the RE setup, right? And here the focus for us is how many banks can you support, right? Because there are obviously also regulatory requirements on the lender can only open, for example, a current account, if there is certain lending exposure and so on and so forth. So there, the focus for us has been how do we provide the same tech stack and the same support while enabling the compliance of money moving from a lender to a borrower, right? So that's on the disbursement. On the repayment side of things, while our soft understanding and our interpretation right now is that the job of a payment aggregator is collections. So we do believe that this will be an exception because we are a regulated entity and, from a compliance standpoint, that is our job, right? Collection of money, making sure it's done in a compliant way. So we believe that payment aggregators would be an exception. But having said that, we also are enabling flows where there can be direct repayments. For example, portability of, ENACH, right? Making sure that there can be direct direct repayment that can happen into an NBFC's escrow or an NBFC's current account. So essentially, that's how we are looking at it. So, how can we make sure that the process is just as seamless, but we can make sure that the money movement happens direct from lender to borrower and vice versa. So that has been the focus.
Thank you. Thank you. I think in terms of the implications on payments is very clear, but on an overall basis, Amit, uh, the guidance are very deep, right? And you go about impact and implementation. I think while it is already live, right? I mean, on I think 2nd of September it is already live, which means that all your current, all your new transactions and all of that you are doing, you have to take care of, make it compliant, and also by I think 30th of November they have to make the previous one compliant, right? So compliance and more compliance. So how do fintechs and banks, because both are impacted right now, comply to it? There's also an audit requirement of compliance. How do they go about doing it? And I always believe that there was a outsourcing regulation available which was hardly utilized. So maybe your thoughts on how now we can optimize and manage it well.
Sure, thanks. So there's always this debate around should the regulations be principle-based or rule-based? Should it be prescriptive enough so that you don't leave it for any room of interpretations on the other side? Should it be risk-based? Like which side of the risk regulators are comforted with? I think all of that generally have been the thought process whenever any new regulations comes in. And this time too, RBI adopted a similar approach where they have defined a lot more prescriptive do's and don'ts on some of the functional areas of the entire digital lending process. So I think that's where we stand today, where we know what are the overall boundaries within which the entire processes have to be designed, the partnerships have to be set in, and the customers have to be served, keeping their interest in mind overall. I think the best way, I was just thinking, reflecting on how do we go about on all of that is, I think, should we first look back, what do we do today? Like, so RBI has already defined what needs to be done, and therefore, like, let's look back, what are the things to be done? And that's where I think the first journey has to be that if we go back to our drawing board and start defining the entire customer life cycle, starting from sourcing, customer acquisition processes, onboarding, KYC, disbursements, servicings and all. And against each of these activities, if we look back, what are the controls and data access which both partners are doing it, whether it's banks, NBFCs at the back end or fintech at the front end. Who is accessing what data? What is the purpose of that particular data to be accessed by the fintech or the banks? I think that's where the importance comes in, like who is the right owner of that data and who should be processing that data. So I think these are the things which needs to be taken care of when actually going back and revisiting all the processes. And once that's done is where the overall sort of commercials and the contractual agreements have to be put in place. There are going to be some changes to the existing setup, the way that the partnerships have remained, like the FFDG is already sort of, the jury is yet to be out, but a lot of noise has already happened in what is going to happen and what's not going to happen. So a lot of these commercials are going to change in the way those have been structured and communicated to the customers at large. And therefore, like, is there a better way to kind of restructure the contracts? And that's why, like, I want to just make a reference again to the digital payments ecosystem, where we have seen a lot of success stories around TSP, like the technology service partners, as one of the entity who supports regulated entities in serving their own set of customers. Can we adopt a similar framework for this kind of a ecosystem as well? So a lot of things have to go back and see in what best interest, keeping in mind what is the expectations that we know, and therefore the innovations can definitely still happen on how to communicate customers what needs to be communicated, whether it is on charges, whether it is on any other terms of the contract. I think that's where, like, the people will have to spend time on innovating a lot of these processes. So I think a lot needs to be done, but we know where we have to get to. Thanks.
Thank you. Thank you. Thank you. And I think from moving to P2P lending, right? I think where we realize is that this was always regulated and other entities had no regulation. So there was a challenge where others could get away with so many things. Now, P2P lending has been somewhere in the sidelines, has done well for some, not for all. There was the idea that this segment will scale a lot, but it's not. Only few entities have done well. So what is the future of P2P lending in this context where you guys are always regulated and you had all the right things happening? So how will you think P2P lending will actually work in the new realm?
So just to kind of clarify, in any tech business, okay, eventually, if you are on a particular line of business, eventually there will be 3 or 4 players existing, right? You take any category, be it shopping, be it traveling, any category, you will see you will not more you'll not be able to name more than 5 players, right? So if you're doing a tech play, it's going to happen that way. Okay, eventually it's going to happen that way. Okay. Now coming to the regulatory side of the P2P, we've always been regulated, and we've been playing the game as per the rules of the game, right? Now, the problem has always been there has been a lot of work which has happened on the acquisition side, on pushing the customer to kind of give a loan side, right? But has been no work on the other side, whereas the collection side, the recovery side, the legal side, right? Which is very important. So I think in future, the way we look at it, the collection and the legal tech is going to be a big emphasis for companies like us, right? And we are spending a lot of money, time, energy to make sure that that happens, right? We had 60 partnerships at one point in time, right? From all tech companies in this country, we used to lend to everybody. We have diluted all of them, okay? COVID taught us that the process of the tech, the process of collection, the process of reporting was a mess. We didn't use to kind of get customers' data point to report back to the bureau whether the customers actually paid the money or not, right? So this entire thing is becoming a little difficult for the regulated entities. That's the reason this is stopped. It has nothing to do with RBI. RBI had to kind of stop this primarily because at the end of the day, it's very funny. 75% of the lending which has happened had happened with organizations which didn't have regulatory licenses. And 25% of the lending has happened with companies which had the license, right? So, and they are the ones sitting with all the losses, right? And the the ones which didn't have the license, they had to kind of just have the exposure 15%. That's it. So from that point, it's not fair. Okay, so suddenly there's a brakes applied, and RBI came along to kind of so having said that, so there has to be a lot of emphasis on the other side, as I said. That side is also very critical. Easy to give money, difficult to get it back. Now, in that context, it is not just about digital. Okay, it has to be phygital. Somebody mentioned just before the so why is it that a microfinance? Somebody mentioned the panel microfinance does so well because there is a phygital component to it, right? So we do a lot of lending on the microfinance side. Okay? Great success story there. Okay, so online we do push the money to these partners of ours, and offline leg they run, right? So there is a beautiful combination between offline and online to make this work, right? So there has to be a focus around collecting the money also as we go along. Only then this will work. The spirit of the game is that you have to lend and get the money back. Okay? The only this thing is not to just lend. A lot of people are trying to just lend money and not focus more on the kind of collection part of it. I think that is going to be the focus all of us have to put in the next few years to make this right.
Thank you, Vinay. I think we are on time, right? Not bad. So I think Vineet, we are going through so many changes, right? We had credit on prepaid, which is no longer permitted. BNPL scaled a lot, but it's not going to be very different. I think it'll be primarily for banks offering or NBFCs offering for their current customers. Going to change a lot, right? Credit card, which was never a critical model, is going to scale up like anything. Increasingly for a smaller ticket credit card, right? More like a 10,000 rupees credit line, which is what will come up, right? And co-branding will increase. So things will change dramatically. So what's your view? What will work? What will not work? You see the system very closely. We work with so many entities. So your views on overall how the market will grow?
Well, we are in interesting times, I think, especially in India. A couple of statistics that keep standing out for me every time. I'm reminded every time that we talk about digital lending and everything. It's 54% of our population is under the age of 24, and 2/3 of them are below the age of 16. And about 80% of India's population is below the age of 44. So that puts a lot of digital natives on the planet in India, and that also opens up and answers the question why so much digital innovation and so much digital lending innovation is happening in markets like India. Whether it's BNPL, whether it's credit cards, whether it's different variety of these use cases which have emerged, they're all innovations. But if you fundamentally look at it, these innovations are being driven from the fact that how do you make credit simple from the consumption perspective, make it so simple so easily and ubiquitously available to these new generation people that they can consume it. Now there is the retail side of that business and there is the business side of that business. So there's the B2C and the B2B segment. I think the buy now, pay later model, the use case, uh, perfectly solves the simplicity and the ubiquity problem. It will continue to exist. We've run into some rough weather because, as the other panelists have pointed out, uh, there was lack of self-regulation. There was lack of uh, regulatory compliance, and the focus was mostly on growth and on lending, not getting the money back. Lending is about lending your money judiciously so that you can make profits when the money comes back. Uh, these models will continue, they will thrive, they will proliferate. I think what's going to happen is that newer forms of regulation will drive more ecosystem driven coming together. Different models like co-lending is happening now, will deepen more. Uh, you know, the banks and the fintechs will come together even more deeply. I think right now what we keep talking about is mostly the fact that we should collaborate and fintechs and banks will come together and everything. I think the focus there will have to be on building the ecosystem and also on the fact that we will have to not just collaborate, but the banks will have to think beyond banking and open banking type of use cases, especially the beyond banking where the collaboration of the uh, you know different financial entities is more customer centric. So I think BNPL or whatever else will continue, will get stronger. I think regulators are protecting the interest of every party involved in this, putting the customer at the center. Even the lenders are being protected. So I think we have a very bright future for the next 5-10 years.
Thank you. Thank you. And our time is up. Maybe I'll try to conclude with few pointers here. Do we have time for questions or no, right? Okay. Yeah. Okay. So I'm taking a clue 2 minutes, right? So I think at a very, very broad level, I think few thoughts on the banking side. I think the best part is all large banks and NBFCs have also realized the power of digital lending because they are partnered with so many. They are building their own strategies around onboarding their own customers. So we believe that 30% of the business will happen digitally for the banks themselves, right? So because they will go digital, almost every NBFC, every bank is going through that journey, and we see so many of them working together with others and us as well. So that's one part. On the fintech side, many of them are taking a more technical TSP kind of framework as well. So that segment will grow as well. Not many will go directly and try to acquire customers. So there'll be a change there. Embedded finance will increase because that use case is still available where any of those guys who are aggregating and have already customers, they will aggregate. So overall pieces, embedded finance will grow, partnership will still grow, TSP framework will grow, and bank and NBFCs will actually grow their own digital business. With this, we conclude now, or we have time for one question? No? Okay, I'm scared. Thank you. Thank you. Thanks a lot, guys. Thanks a lot. Thank you.
That was one engaging round of dialogue, with the bottom line being that banks are going digital. 30% of the revenue is going to come from the digital transactions. And there are already upcoming and newer regulations in place to make sure that the transactions are hassle-free. On this note, ladies and gentlemen, we would like to acknowledge our partners, beginning with our country partner, UK FCO and King Netherlands, our credit score partner, Paisa Bazaar, our conversational commerce partner, Caris, our P2B lending partner, Faircent, our VIP lounge partner, Cred, and our insure tech partner, Cover Genius. Folks, the context of our next panel discussion is again relevant, compelling, and has a business case to it. The topic is using digital to tap the untapped credit market. The global credit market is growing at a breakneck speed as the needs of the people are intensifying by the day. To make use of this wide market, deploying digital technology can be a very handy tool in the long run. So it's very important for us to understand the granular idea about this facet using digital to tap the untapped credit market. And we have with us, like always, our set of experts, influencers, thought leaders from the world of fintech to elucidate and share their depth of expertise and diversity of experiences with us. To moderate this part of the panel discussion, we have with us the co-founder of Buddy Loan, Mr. Srikanth Burreddy, and joining him on stage are our following set of illustrious and revered speakers who have created a significant impact in their sphere of work. We have with us Mr. Saurabh Puri, Chief Business Officer, Credit Cards at Zaggle. And we also have with us Mr. Pramay Jain, co-founder and CEO at Tartan HQ. So on this note, I hand over the stage to you, Srikanth. Over to you.
I have to speak in this? Yes, thank you. Yeah. Hi, guys. Everything is perfect? Nice. It's very difficult. I need to see my panelists. Can you help me, please? I don't know how many panels. Thank you. Thank you so much. I don't know how many panels we have with only 3 or actually 2 panelists. And Saurabh and Pramay. Thank you for being here.
Thank you.
Yes. Am I too loud? Because I'm perfect, right? Thank you. See, the topic is like well-designed topic that how the growth, we talk about the growth of digital marketing, growth of digital lending, growth of how we can reach to maximum people. The topic is how, what, and how we are going to get into untapped market, digital lending. I want to ask both of you, what is that one reason that digital lending is taking time beyond e-commerce? Like digital lending is much older than the e-commerce and commerce. But why digital lending is taking more time than e-commerce? Because e-commerce cracked it by doing 2 things. One is fast, one is cheap. Is this fast and cheap is coming in between the growth of digital lending in untapped market? Sir.
I think that's a very good question. If you have to compare e-commerce versus the other segments, I think it's more to do with the segments we are talking about for lending. I think one of the reasons why digital lending has not taken the kind of shape it should have is the way we are underwriting the customers. I think that's a very, very important aspect to understand. The conventional way of underwriting, especially the MSME segment, if you take an example, the current banks will not be able to underwrite given the current framework of credit assessment. I think that's one reason why digital lending has not been able to catch on. Whereas digital lending on the other side can redefine the entire process, how the customer is underwritten. So there is so much of data available today. Let's take an example of GST. So today, using GST data, the transaction data, UPI transaction data, there's billions and billions of transaction data available now. We can build scorecards around that and move away from, asset-based lending to a cash flow-based lending or transaction-based lending. So that is one reason the way the banks are underwriting, the lenders are underwriting, the conventional underwriters, they have to change the way lending is happening, and it has to change to a new kind of lending.
I have a slightly different view, actually. So if you look at who's driving e-commerce, who is driving digital lending, if you look at India as a geography, as a population, we are a pretty young economy, right? And 66% of the population is below 35 years of old. And if you look at e-commerce, there are very repeat use cases typically that happens. I want to buy a phone, tomorrow I want to buy something else and everything. And if you, another aspect to look at it is the e-commerce is also being driven by the digital lending, if you look at it that way. That a lot of transactions that happen, high ticket transactions especially that happens on e-commerce, are digital in nature and driven by lending, right? There is a card behind, there's a EMI behind, there are certain things behind, right?
That is there, but is it there in the untapped market? That is there in like metro cities, tier 1, tier 2, it continues, but what the topic, what we are talking, is it there that people are buying through credit card in a small village?
Yeah, I mean, even e-commerce is driven by those geographies, right, when we are talking about. But in general, the point that, is lending behind e-commerce, the answer is certainly yes, and there are aspects to it, obviously, in terms of regulations not being, being getting updated now. There are new models being tried out, like BNPL. Again, that is happening. There's a PPI cat that is happening.
Yeah,
So,
but
yeah.
Pramay, from where I'm coming is whatever you are saying, it exists. It exists in the market, what we know. Does it exist in the market which we doesn't know? So I'll continue with another question then.
Sure.
So I always feel that everyone need growth. Every category, every organization, every industry, everyone need growth. Does India have enough money to tap into the untapped markets? Is the restriction of they don't have enough lending power? That's why they don't want to get into the smaller markets with a bigger risk. Sir, Saurabh.
No, I don't think it's about the money supply part of it. I think it's, as I said, there is definitely a demand side of it. If you just look at the demand side of it, if you look at the credit gap today, only 10% of the entire MSME population gets credit through a formal channel. So I don't think that's the problem. The problem statement is these are small ticket loans. The conventional way of collecting money from these borrowers is a difficult ask. And that's the end of the day, you are lending money. It's a public money what you are lending. And you have to get this money back. And unless you have a very good collection mechanism, the underwriting will not change. You will look into all those credit histories. You will look into income proofs and bureau footprints and things like that. So I will repeat my point that it's very, very important that how do we go about underwriting these customers, the unserved ones? Maybe start with small ticket size loan, and then bring them into fold, and then gradually you can graduate them to a larger ticket size loan and for other needs and all. So I don't think supply is an issue. I don't think geography is a constraint. And e-commerce and the topic what I'm talking about, the segment I'm talking about, these are like two different use cases. It's e-commerce is more of a retail kind of loan, slightly tier 1, tier 2, tier 3. And if you're talking about credit card as a product, I don't think credit card even scratches the surface because it's hardly any penetration in India. And then if you talk about other retail lending products like consumer durable loans or BNPL, that is also not very deeply penetrated. The lending need is it's beyond retail, So I think that is something which is still not happening, and we have got a long way to go on that.
Pramay, please.
Yeah, so definitely I agree with Saurabh that demand is a challenge, and how to cater to demand is a challenge. Supply is never a problem. I think in a country like India, there are people who are ready to put money as well. But I think what taking away from what Saurabh just mentioned, the entire infra, in terms of how to lend and collect, there are a lot of missing pieces in the entire journey. And I think while there is a lot of work happening in terms of the India stack that is coming up, the account aggregator framework, there are a lot of stacks being built. But I think slowly we are getting there in terms of the entire digital market can reach to everybody. The good part is now everybody, 750 million people have mobile phones now, right? There's such a large population. A lot of young people are there. Again, as I mentioned, 66% of the population is below 35 years. They know how to use digital devices. They know how to use their apps, etc. So eventually it will come, and with the right infra that is getting built now, I think it will pave way for future to get where we want to see, where the digital lending and other things have to be.
Okay. Do you guys see, is there any trust issue? So why I'm saying the trust issue, the growth, one has to stop, or two people has to stop. One is borrower stopping the growth, or is the lender stopping the growth?
I would tend to believe it's more the problem is on the lending side of it. As I said, supply is not a problem. If you're talking about financial literacy here, yes, this used to be a problem maybe 10, 15 years back. I think this country is young, it's becoming savvy by the day. I don't see that as a challenge. I think it's more to do with the lending models what we have.
So lender is stopping the
Uh, I agree with Saurabh here. There are frameworks that are getting built. I think people are too scared to make certain attempts at times, in terms of, we saw what happened with PPI and BNPL. While the idea is right in terms of there should be right regulations, who should lend, how it should be lent, etc. But I think there is limited scope in general to experiment and go all out in the market and, experiment. So yes, there is a marginal, I would say, uh, call that, many fintechs want to take, but they can't take, in general.
What is that?
In terms of taking risk and, go out and take the money. So there is a risk element does, hamper or,
No,
slow down the growth.
that risk exists everywhere. I mean, risk exists in the metros also. Maybe there is a higher surety in the metros than the tier 3, tier 4 kind of places. So the brand, there is every category they have sub brands, and intentionally or unintentionally we keep seeing. For example, in the loan sector, the salaried as a word become very big brand, and self-employed, which is followed with that. Now, do you think a third kind of category which exists in the untapped market, which banks or the fintechs not able to coin any policies towards it? Saurabh.
No, so as far as customer segments are concerned, obviously you have to classify between a salaried and a self-employed. Salaried, as I said, it's an easier problem to solve. I think you know what kind of income the person has. You can always find out what kind of obligations the borrower has. The problem is more on the self-employed side of it. India being a country where the data is not available. So if you're talking about the ITR filed by self-employed, I think that's not good enough data to underwrite those customers. If you're talking about those new startups who don't have a credit history, then obviously that's a segment where the problem needs to be solved. So salaried and self-employed, more than that, I think, as I said, how do we go about using alternate data to underwrite these customers? That is something that needs to be resolved. I think that's where the challenge is. And there's enough and more data. I was just mentioning that, GST data. GST could be a surrogate for finding out what kind of turnover the SME is having. Maybe it defines loan, maybe it could start with a small sachet loan kind of thing and to a large ticket size loan. So all of that can be resolved through that.
Okay.
Yeah, so I think the customer segmentation is very important in a country like India, because India is so diverse, right? We were discussing before the call Satara versus Mumbai, right? For example, completely two different profiles of customers. Thought process mindset is very different. Salaried, not salaried, these kind of things are there. Even within salaried, people in Mumbai versus Delhi behave very differently. If you look at the adoption rate, the risk rates, etc. So I think the customer segmentation needs to be broken up even further. I think, and the onus is on the lenders and policymakers in terms of how do they want to actually connect to the customer and offer the best product. So I am a big, coming from analytics background, I'm a big fan of creating more segments, do more customization, personalization in terms of how can we actually serve customers better. But, having said that, the systems, and again, I'll come back to the same infra problem, can they handle that many segments of customers, right? Can they create those many products, to be able to serve those kind of various segments, right? Can the business rule engines or loan origination systems, can they create that many products in the system? It actually boils down to that. But, coming to more segmentation, it has to be there and it should be there, basically.
So I come back to my first question.
I'd just like to add what he said. I think the point perhaps is, apart from this, is there a geography plays, is I believe you were trying to ask. Yes, definitely. There's a purchase parity which you have to take into account. A self-employed with X turnover in a tier 1 city versus tier 2. Those kind of segmentation is something which you can work. But as I said, the larger problem is how do you go about capturing that information? I think that's a very, very critical.
Yeah. See, I don't know what banks play a role in this and the fintechs, the NBFCs, which play a role. I have this a question, a kind of a surprise that a fintech who does into lending celebrate 100 million funding or 200 million funding in India. But India is vast. India is big. The 200 million, the funding what they got, I asked them, what is your monthly expectation to give the loan? They told that we want to touch 1,000 crores. तो आधा चले गया पैसा उसमें तो. 200 million में तो 1,000 crores is almost more than 50-60% is gone. So, but you want to grow. Where you want to grow? What is your how you measure your growth? You grow. You want to grow beyond what you are serving areas today, or you want to kind of double up the loans for the users who already you giving? What exactly is that? So does banks and the fintechs really believe? एक खाली topic है. Or they really believe that they want to go the corner of India and give the loan to the people, which is half secured, like a metro person, surety than a metro person. Yes, sir.
Yeah, I think here fintechs can play an important role. As far as you were also talking about the size of the book, what they are building and all. I think the role of fintech is more on the kind of business models you create. There, I think fintech can play an important role. You create a proof of concept, and if that proof of concept is working well, then partner with bank. They have deep roots, they have deep distribution, they have deep penetration. So you can go to the Bharat and lend. But the very concept of building that model is something where fintechs can play an important role. I think that's how the partnership between banks and fintech can really work well in this segment.
I think there are two elements, I think, where banks and fintechs can partner and it can go a long way to go deep root. One is basically creating awareness. Having digital platforms available in the deep pockets of India now is very important. That first they create awareness. It could be local or it could be on a global level, whatever it is. And second is create the right products. Again for those segments, right? So, for example, when we talk about lending, typically it's a personal loan or a consumer lending we talk about. If you look at microfinance, it is it is available in deep geographies. It's a completely different segment, different way of underwriting, different product, different ticket size, and everything is there. But I think we need more such models to be able to cater to those segments, to be able to get more out of it. But I think that's where I think fintech can create products, create awareness, and behind the bank, banks and NBFCs can power them to do more lending, etc.
How you place this last minute thing? So what is the last minute? Like if you go to the smaller regions, smaller cities, smaller villages, if they need money, if they need 10,000 rupees for the health, for the school fees, for anything, the turnaround time is 1 hour. The answer, yes, I'll give the money, or no, I don't have the money, right? But when it comes to the digital space, it takes time. Is one of the gap that the trust factor that my TAT is 1 hour. I'm okay to pay a little more interest in the local, getting from the local person rather than depending on the digital. Although we say 2 minutes loan, 3 minutes loan, but is people not believing that? Are we able to achieve the TAT? Yes.
No, as far as digital lending models are concerned, it has the potential of giving loan not in 1 hour, it can give loan in 10 seconds also. And we do have models available today. Most of the lenders today are able to give loans to their existing set of customers within seconds, So that's not a problem. It's again, because they are sitting with so much of information about that customer, they can take a call on that. So if the answer is yes, digital media can or digital lending can easily create those models where you can give the loan. The thing which is really hindering this kind of approach is perhaps one is obviously the penetration. Are you present in those locations, those areas? And secondly, to an extent, we haven't worked in rural India much directly, but yes, given my past experience working in automobile industry, there's definitely some bit of trust factor that also comes into play. Still, you will have the local lenders having a deeper connect with the people who are taking loans. I think that part it's changing, but I don't know whether it has changed to the large extent or not.
Okay. Thank you. Thank you so much. So this is part one questions. There are part two questions which we have, which are going to come now. Before that, I want to ask anyone have any questions to Saurabh or Pramay? One or two questions, please. So we are entering into the next subject. Anyone? Yes. One gentleman. Nadim, can you help with the? Yeah. Can you give a mic, please? Yeah.
So I'm Vignesh. I'm founder of Pentafox Technologies. We are into small-time API infrastructure for lending. I just want to know how will co-lending or consortium funding will play a major role in reaching the full potential in the untapped credit market.
I think co-lending is a very good model, and one has to also see how the regulators are looking at co-lending now as a model. But if, as I said, that if fintechs are building models, business models or product, and if there are NBFCs and banks who are willing to partner, then co-lending could also be one way of figuring out what is the proof of concept, whether it's working or not, and your skin in the game. So fintech has their skin in the game in a model like that. In my personal view is co-lending is definitely a very good model. But given how the regulators are viewing co-lending or the FLTG models today, one needs to see in what direction it's moving now.
I'll just add a few points here. Like in today's world, I think a lot of things are very volatile, like stock market. So the key thing is results don't come very quickly. I think these models are getting tested, and there are a lot of good results coming out at a lot of places. So I think the fintechs can create the point that I made earlier. Awesome products, create awareness, while behind the back lenders and NBFCs and banks can actually partner with them and deliver. So this model, at least I'm very positive about, that it will pave a great way further in terms of lending.
Okay, thank you. So, Saurabh, that farmers are the biggest kind of big population. Do you think this digital lending, how kind of integrate with the farmer's requirement? Not just a farming loan, farmer loan, or is there any way that you think this, because one of the untapped market, this is the largest population, which I understand. So can you just throw some light on that?
So I'll just answer this question with an example. When we were having one discussion with the ministry, so one of the problem statement they said, and this discussion was slightly related to this. So we were discussing about mudra loans. So one of the simple challenges what today government is facing, that those who are showing interest in getting a loan, and that information the banks are supposed to, the local state-run banks are supposed to capture that, even that's not happening properly. And there are a lot of customers who have shown interest, there's no paper trail, there's no track of that. A simple thing like digitizing the entire application process can go a long way in helping. I think that could be the starting point. And then obviously, then it's never ending. Like if you're talking about like Kisan credit card and all those things, obviously that will also require some bit of the payment ecosystem to evolve. So if that evolves simultaneously, and it will take time, it's not that easy, but still things have moved in the right direction. Then obviously payment and the lending aspect integrated together, I think there's a future for getting into these segments.
Pramay, can you chalo loan de diya, paisa untapped market mein gaya, because you are a data person. So can you tell me how one fintech or bank should handle the risk?
I think great point. So I think you'll hear this very often, that the risk process starts not post lending. Actually, it starts pre lending, right? The time customer touches your branch or individual or your app, your risk process starts there itself. And the key process is that you start collect right information about them, right? What does the person do? Why does he need loan? Is it an aspiration loan or is it a need loan? What it is? Can he repay? Can he not repay? What are the potential rates we should price them better? So that information collection happens from there.
वो सब अभी कर दे तो लोन ही नहीं दे पा रहे.
I mean, yeah, you're talking about risk, but let's say even if there are certain parameters that we have taken some risk on. This is important to be able to rightly monitor what happens post loan, right? So, typical. I remember in my previous days, let's talk about the Kisan credit card or other farmer loans, etc. There used to be a process that I've seen with the bank that people will go and visit the customer as well, right? So if you think of doing a digital instant loan in that, sort of a situation, it's hard to be able to have a policy where person visiting it, verifying it, and then coming back and then signing off the loan, right? So digital is very difficult to do that. But containing risk, basically post lending also, right monitoring, ability to collect in omni-channel way, not just cash collection, but right ways of collecting the money is also very very important in terms of to contain the risk.
So, the thing is that if you little sensitive for both of you and for everyone, this is a little sensitive matter. Recently, in last 1.5 year, I'm hearing that given the loan, the way the collection happened was very bad, and too many calls, friends, and everyone is going. It's because digital this happened. That's why the people came on Twitter or social media started making a noise on this. But ये तो सालों से हो रहा है. But किसी को लोन दिया आपने, किसी से लोन लिया, if you don't pay, they come and take your bike or they lock your house or they will come and make a noise. आपका इज्जत निकाल देगा उधर घर के सामने आके. वो सब करता था. वो पहले से आता था. इस डिजिटल जैसा लोन दे दिया, इस डिजिटल थ्रू लोन मांग रहा है, बट ठीक है अनएथिकल प्रैक्टिसेस है. आई एम नॉट सपोर्टिंग दैट. But what must be the borrower mindset? Saurabh sir?
And there will be customers who will not have the willingness to pay, and that's the reason today models like in the lending process psychometric analysis is also is becoming a little popular now. There are a couple of fintechs who are trying out these kind of things. So there will be customers who will try to defraud the system, those who will not have the willingness to pay and all. Here, I think in collection, AI
Sorry, I want to correct. Willingness to pay और मेरे को पता नहीं वो किधर है, मैं उसके ऊपर नॉइस क्रिएट कर सकता हूँ. इज एनीवेयर फिनटेक एंड बैंकिंग लाइक मैं बताता हूँ अभी जो अनएथिकल प्रैक्टिसेस बाय इलीगल कंपनीज हैड ए सीन in last 1.5 year in couple of states, because they can't go into the major cities, they have to go to the untapped market as we say, and they try to had this stint there, and they had a created little bad mass. So what I'm saying that is the ethical legal active companies, banks, and are they really face these challenges if they give the money there, the risk factor यार हम जाके उधर करेंगे तो वो लोग चिल्लम चिल्ला करेगा, rather not enter into that market, recovery will become a bigger challenge.
It's pretty much part of this. So obviously it's part of your entire lending process. So yes, you will have certain kind of sections where you will have such kind of issues.
So that's why my first question is borrower stopping or a lender is stopping? Because in this case,
no. So there are two different things we are talking here. So one is we are talking about a market potential. So there the question was more on the borrower or the lender side problem. There, as I said, that it's more of demand is not a problem, it's on the supply side of it. This is a different problem. We are talking about 2% of your entire lending population. How do you go about treating them? End of the day, there are 2% of the people who are not repaying. So I think market potential and this aspect of the business is something two different things. And obviously, there could be a play of improving the way we recollect in the market today. There's no two thoughts on that. Today, you can build AI models which can recommend actions which we can tell to the collection agents that use this action. This is how the propensity model is suggesting that this is the way to collect money and all. All that thing is still not happening in the collection side of it, but there is definitely scope of improving that side.
So I have see the question what I asked the first one and this one, there is because atmosphere makes a huge difference. What kind of atmosphere you are creating. I'll ask a connected question. Is Dharavi is untapped market or is don't want to give the loan market?
I think it's a difficult, it's a practice, it's an unwritten practice. We all understand that. Yes, there are areas where there is a community which restricts and banks have a way of, but not necessarily every person staying in Dharavi is a bad customer. So yes, data analysis and all those things, you can create models. I think maybe you can answer on that, how to go about creating models who stay in Dharavi.
I would say regulations are important, right? First of all, who's lending? Are they doing the right thing? Because We've also seen lenders doing a wrong practice by giving loans in a click of a button without doing much authentication and then doing all this, right? Uh,
What
and regulations from the individual point of view also, that they have to follow a certain behavior in terms of after taking money, right? And if that doesn't happen, obviously lenders, you can think that they will behave customers with full empathy if there is a situation that they cannot repay, etc. But I think there are regulations already in place. I think they do work best, and obviously any lender or anybody, they are into business, right? So they would want to see profitability. They would want to see how much effort that's there, that's going into making money in that segment, etc. So I think probably regulations in the business model will play a bigger role in terms of making those decisions.
Okay, this I'm hearing for long, but that is not happening. So, do how you guys are deep into the corporate world, and how this AI and ML works helps this decision making or handling the risk.
Well, on the lending side, two areas I can think of. One is obviously the customer experience management. That's one area where I feel that all these AI and ML models can play an important role. So, to give an example, the propensity scorecard can actually give you a fair sense what kind of product should be sold to what customer. I think that's right product for the right customer. Or on the service side of it, those AI-enabled chatbots can actually predict the profile of the customer, and obviously in the process you can service the customer better. So these are the areas on the customer experience I feel AI can play an important role. We were talking about risk management. I think that's another area where I think AI can play an important role, whether it's a pre-ac or post-acquisition, both. So post-acquisition, we just now spoke about it, that they can actually find out what kind of collection action needs to be taken for those defaulting. So you can have such mirror cohorts, and you can figure out what kind of models what kind of action you can recommend to agents and all. Pre-acquisition is all about analyzing the alternate data available in the market today, whether it's a GST data or a utility data, telecom data. There's a lot of data. There's so much of digital footprint available today. So marry that with a conventional way of looking at a bureau and create models, and that's where I think AI and ML can play an important role.
I think that's the future we are getting towards. I think we are going there. I think I don't know any bank or any NBFC or any fintech doesn't lend without scorecards and lend without having scorecards or predictive models in place. There are a lot of marketing team, a lot of institutions who use data to the core, and I think that's where I think the models will come into play. The key question here is again, what data is there, because it doesn't become a garbage in, garbage out situation. So, what data is lenders can collect, what data they can play around with. I think that's the critical thing, and any next action, not just the product, but any action for a customer can be predicted with very good reasonable predictivity in terms of what will they repay or not, what product they should buy, how much they should be given loan, etc. So I think there are a lot of scope there. I think probably we are scratching the surface, but it takes again, it's a long journey that will keep evolving, and there will be again different business models that will come in. Different ways of modeling will come into picture to be able to succeed, basically.
Thank you. So Saurabh, you are into this credit card. Credit card market is, I mean, I don't know, is it growing? Is it degrowing? Is it stagnant? One question. The number two is, when a farmer or a person who living in a village having a decent income, someone like urban 30,000 rupees or 40,000 rupees monthly income, can go to a bank, or bank can go to him and tell, this is your credit card. Will this generation of farmers will see that, or will have to wait generations to get a card? Because less than 5% is equal to failure.
Yeah, that has been. I think that's what you're saying is true. I think credit card penetration in India is pretty low. Maybe 3.5% is the penetration, and reason being, it's a fairly risky product, and there are only limited number of banks issuing credit cards in the market today. So obviously they are pretty
I
much.
have a thing. How you can say it's a risky product? जिसका सैलरी 40,000 रुपए रहता है, वो बॉम्बे में रहता है, उसको आप क्रेडिट कार्ड देता है. जो गांव में रहता है, उसका जमीन है, उसके पास घर है, सब कुछ है, उसको क्रेडिट कार्ड क्यों नहीं देते?
You are from lending, so you understand lending pretty well. But if you look at, let's take pandemic as an example and how much money banks have lost. So you will realize that why it's a risky proposition. And it's not only once. I think many cycles you have seen why credit card is a fairly risky. It's a highly profitable business also in good times. But it's a risky product end of the day. So that's the reason why the penetration is low. And the other factor, which is very important to understand here, is credit card is issued by banks and two NBFCs. So they are pretty much defining how the credit card industry will evolve, right? So it's their willingness or it's their ambition or it's their appetite which decides the market of credit card. As far as going deep into Bharat on credit card, yes, it will take time, but there are ways and means of doing it today. Things are opening up, and I'm hopeful that it will penetrate into smaller cities as well.
Yeah, hopefully this generation.
No, but if you look at it that way, credit cards, like it's a more of a cash flow kind of product, right? You use it daily, wherever you go, transact, etc. And there is a product in place. Kisan credit card is there, right? Where they can withdraw money at any point, and whenever they get the proceeds of their harvest, they can repay. So in form that's there, but key thing here is where will farmer use the card? If you look at it from most of the credit card users in the country, they're more of aspirational users. I would say they would want to go shop around in mall. They want to go do e-commerce transactions. They want to do other things. But typically, that kind of behavioral change we are yet to see in the farmer's lifestyle as well, right? And once that happens, probably it will reach there.
No, that could be a blessing in disguise because one of the problem today with allowing withdrawal is that the money is not getting used for the things what they are supposed to get
Right.
used, right? So if you create a payment ecosystem, it could be a boon, it could be a blessing in disguise to that extent. So
I
that's a payment ecosystem that needs to evolve.
Exactly.
I have a last question that anything or any business, it has to grow from aspiration to business to profits and to end as a cause. So is lending is a business or is a cause?
No, it's both if you ask me. For for lenders, obviously it's business first, and then obviously it's a cause. But having said that, why I'm saying it is also a cause because it helps in financial inclusion. That's a fact.
It cannot be both, sir. Only one hoga.
No. So it depends on who's wearing what lens. I think it depends on that. But if you just look at it in a very generic way, from a government's lens, obviously, if you're talking about financial inclusion, then lending has to be part of that. But if you're purely looking from a lender's perspective, obviously it's business for them. So I know, I think it's a difficult question to answer that way, but in my mind, for anyone who's lending, is a business first.
In my view, it has to be aspirational because India is so behind in terms of credit penetration, cards penetration we are talking about, etc. So until we have aspirations to become an economy that can make credit available to most of them, I think it has to go there first, aspirations, and then maybe grow as a business.
Yeah, I don't know when that will happen. It is a business for me. It says because there is where causes which address every sector of a person. Business is when you address a certain sector of the people. So I consider it as a still business. I don't know when it will grow as a cause. Thank you so much, Saurabh. Thank you so much, Pramay. And any questions? Yes, there is one question from Aditya Save.
Thank you. This was a really fascinating conversation, and I realized that there are no easy answers. One of the things that I picked up in this conversation is that there is a lot of hesitation on fulfilling the demand that already exists, right? So, if you sort of zoom out and say, let's not talk about the entire untapped market, and let's talk only about, let's say, the next 30% growth. And I would love if all three of you could respond to this separately. Is there a problem of time, which is that we've not spent enough time in digital lending? Let's say, for example, the way e-commerce already has, and therefore learning that evolves over time. So is it a time problem, or is it a trust problem, where you don't know enough to be able to even trust the person that you want to do business with?
My short answer will be trust. I think people have not experimented with segments which they are not very comfortable with. I think time is not a factor here. It's not very difficult to solve for the problem, but I think trust is something which people are hesitant. At the end of the day, as you said, that it's a business model also. One needs to make money in whatever business they are in. So my short answer will be trust.
For me, it's actually both. Um, if you just look at pure data perspective, uh, there has been the credit market. If you remove the pandemic period, maybe a couple of years, it has been growing at a very consistent rate. Indian credit market is growing at almost I think the maximum speed in all the economies in the world, right? Forget about the developed market; they're already penetrated, but even under developed market, India is growing pretty fast. So it is a time factor. Probably we'll get there. I don't know this generation or maybe next, but we'll get there. And trust factor is definitely there because if you look at a lot of population, when there were certain segments in geographies, untapped geographies or rural locations, etc. Many people did not have even documents. Before Aadhaar, if you look at it, if you want to go and ask for an ID verification, etc., people did not have documents. So, which are now in place. People are living, they have now Aadhaar, there are few other documents that are coming into picture. So I think slowly and steady we are evolving, probably not at the pace that we would like to see, but it is happening. So I think both trust factor and time factor will and are playing a big role.
I think they have not spent enough time, and there is a like factor, and also there is a demand and supply issue is there. There is supply issues because they like to work with the already experimented markets and not want to get into untapped market and experiment with the available supply chain. So I think if they spend some time on this notion, like 4% or 5% जितना इंडिया पॉपुलेशन में जितना है उतना क्रेडिट कार्ड से I mean, it says purely that they don't want to get into certain market. Otherwise, the cards giving is not a big issue. This is what I say, because it cannot be so low, 4 to 5%. That's it. Any more questions, or we are good? Good. Two, three questions, but no one is asking. Chalo. Thank you. Thank you so much. We're good.
There's one.
There's one? Okay.
Yeah.
Sorry. Yeah.
Yeah.
Yes.
My name is Pavitra. So, what I try to understand from the banking perspective, I mean, do we not have much of a trust in our SME business or in the individual side also? Because we always talk about SME is the backbone of the country and everything, right? Now, when it comes to the loan lending part of it, we always look for, rather than getting into the business model of the SME from the unsecured side of it, because a lot of them do not have properties. The first question a banker asks, "Yaar, property kitne ki hai?" That is one question. Secondly, I look at it on the similar way in the retail credit also. People or bank or even in fintechs, they are more comfortable to a lending to a salaried customer rather than somebody who is earning his own money, right? Maybe I'm having a 50,000 income from my business. I would not get a credit card approved. But if I'm having a salary of 50,000, I will approve. So when we are talking about an example of a farmer, it is not only about farmer, it is about a small businessman also. So do not have trust as a financial system on our SME business?
I'm your side. Okay, the question to them.
Same here.
Okay.
Same here. I think it's related. I think it's related to the previous question. Definitely trust is an issue here.
I think the system is yet to evolve and get there where we want to be, because if you look at the same SME example or somebody, yes, people ask for property, but the next question comes, how do I evaluate you as a customer that you are worthy enough for X amount of loan, right? So you need something to get evaluated. If you look at like pre-demo period, probably if you look at anybody's bank statement, you wouldn't find a bank statement that you can use to evaluate and give loan. Let's say if the person is demanding X amount, but you will see there are no credits in account, right? So the trust factor is again is there, but again it has to be both ways, I would say, rather than just putting everything on bank and says that, hey, they don't give us lend money, etc. But I think it has to come from the other side as well, that they have the right documentation, right things in place. There's a right purpose for the loan as well, right? So while I'm not defending banks and policies, etc., but I think it has to be both ways. And again, we are evolving there. Even there's so much government push through Mudra loans, etc. That's there. So it's not that it is getting hampered, but again, with time, it will evolve. Business models and those things will evolve, and it will become easier, I hope.
Okay, so one feedback. So I'm basically a banker only, career banker. So I have nothing against the bank. So my query is that, so for example, let's say a shopkeeper, right? A bank is co-lending through a fintech partner to that shopkeeper, right? Without any security. If the same person goes to the bank, then he says कि either ये shop आपकी अपनी होनी चाहिए या घर आपका आना होना चाहिए. But in case of a co-lending, the bank doesn't ask for it.
Because bank has mitigated risk with the co-lender, right? So bank is a is a risk business at the end of the day, playing with the real money, and they have to ensure that the money they are getting from the savings account person or current account person, they have to maintain that money as well, right? At the end of the day. So if there is somebody who's ready to take the risk, even half the risk or majority of the risk, why would a banker say no at the end of the day?
Got it. Thank you.
Thank you. Thank you so much. Thank you, Saurabh. Thank you, Pramay.
Thank you. Pleasure. Thank you. Thank you, everyone.
Thank you, audience.
Thank you so much. All right, that was engrossing, engaging, and most importantly, a very candid take on how we can harness the power of digital to actually get the best from the untapped credit business. On this note, ladies and gentlemen, we'd like to acknowledge our partners, beginning with our co-powered by partner Amazon Pay, our in-association partner Perfios, our theme partner WhatsApp, our spend management partner Encash, our payment partner Cash Free Payments, and our CEO's dinner partner HSBC, our co-agenda partner Lyra and Paypoint, our session partner Feedzai, Bureau.id and Rico, and finally our gold partners Jokata, Payton, Innovity, and Beams VC. Ladies and gentlemen, as we are at the day 3 of the 3rd edition of the Global Fintech Fest, this is going to be the second last panel discussion, conversation and dialogue that you'll be witnessing in a few moments from now. But as I said before, this fest is all about getting the best minds, getting the experts, most revered speakers, entrepreneurs who have put their skin in the game and really turned around businesses. I just want to announce that at 3:25 p.m. sharp, we will be having another round of the finale panel discussion here. And that panel discussion, again, with a very relevant topic, will be shared by the co-founder and CMO at Boat, Aman Gupta. We'll also are going to have co-founder of Wow Skincare, Mr. Manish Chaudhary, and the Chief Operating Officer at PayU, Mr. Mohit Gopal, joining us. And we'll also have Bhavik Vasa, who is the founder of Get Vantage, joining us for that discussion. So that panel discussion is going to be relevant, very important, trending, and disruptive in every point of the way. So I'd request you all to make sure that whoever is leaving from this hall comes back at 3:30, because you cannot afford to miss that riveting conversation, which is going to be happening in Jasmine Ballroom 2. So make sure that you come back timely. On this note, ladies and gentlemen, let's bring forth another compelling and promising topic on the facet of fintech and digital payments. This topic is about frictionless payments, an emerging trend for our payment processing. We all nowadays are dependent on apps like Paytm, RuPay, PhonePe, to name a few, to really complete our simple day-to-day transactions. But modern consumers and modern merchants, in some way or the other, seek out flexibility, convenience, and security when it comes to online and in-person payment options. That's why opting for frictionless payment method has become popular more than ever before. In fact, the International Marketing Statistics portal, Statistica, estimates that the frictionless payment technology will grow to a whopping $8 trillion by 2024. And these statistics alone highlight and reinforce the importance and significance of frictionless payments around the world in the days to come. Our next panel discussion revolves around the topics of, once again, reiterating frictionless payments and emerging trend for payment processing. Now, to navigate this conversation, I'd like to call on stage our moderator for this panel discussion, Mr. Anil Kumar Gupta, who is the partner at Microsave Consulting. Can we give a huge round of applause for him, ladies and gentlemen? And joining him on stage are going to be the following panel members: Swapnil Jambale, co-founder and COO at SafeXPay. We have with us Sanjeev Subba, Chief Executive Officer at Nepal Electronic Payment System. Shruti Kharbanda, Chief Operating Officer at Pay10. And Anoop Nair, CEO of the domestic region at InSolutions Global. So with this context, I hand over the illustrious set of panel members. Over to you, Anil.
Am I audible?
Yep.
So, thank you for this great round of introduction. And I welcome all my panelists here. And a great welcome to all the audience here. I think you all had your lunch. And probably we will make sure that you don't feel sleepy during this discussion. Coming to the discussion, see, I think payment is all about money. Actually, we all deal with money, and I think money can keep us awake. Typically, what we do with the money is that in some shape or form, we store it and we send and spend it. There's another concept with the money is what we call it friction and flow, and this applies into the payment side also. Flow would mean that it flows seamlessly with very limited friction, and a lot of people would love it. And friction would mean that people want to have some friction. Someone like me would prefer some bit of friction, if not complete friction. So I want to take you to two different parts of the country. There is one gentleman by the name Radhesham. He lives in Western Rajasthan. He keeps money either in cash or he puts that into a bank account. And even for doing that, he needs some assistance. So he gets assistance either from the bank branch or he goes to a banking agent through which he is able to do the transaction. And most of his expenses are in cash. And because of that, he faces several challenges. For example, he has to stand in queue while making utility payment. And he wants to change, but I think he finds it very, very difficult because of his own digital savviness that he has, or lack of that he has. And he continues his life in the same fashion. On the other side, we have another protagonist by the name Sapna. She lives in urban areas. She's suave, she's sophisticated. She leads her economic life based on a set of cards and off late phone, which has been her lifeline for making all the payments. She likes and she is very comfortable with making digital payments, and she is irritated with some frictions. So these frictions, it could be additional factor of authentication or sometime putting in same information again and again. So before we go deeper into digital payments and frictionless payment, I just want to set the context that we are trying to cover three fundamental points. First is cash and digital. So what I always say, is it a paradox or is it an opportunity? So it seems that countries like India, we love cash. And it may sound understatement for some of you, those who are not tracking cash in India. To give you some number, we have about $400 billion of cash in circulation, which is nearly 14% of our GDP. So it's a very large number. Second is that if you look at digital, we love it. So, and we are trending close to 10 billion transactions on monthly basis, which is way above than any other country in the world. So both the things exist. We have the people like Radhesham, we have people like Sapna, and both of them, they are driving either cash or digital. So both coexist. So that gives us an opportunity. Second part is all about the infrastructure. Digital payments, they need infrastructure. And policymaker, they have helped it through India Stack, which is an open API policy, and all other things. All other market participants, they have built their apps or their processing abilities on top of that to make sure that we are able to have such a fantastic digital rail and apps on top of it. Uh, India has over a billion cards, which includes credit and debit card, mostly debit card because credit cards are only about 70 million. And we have about 200 million POS and QR codes. These are total numbers. It's not necessary that we have that many number of merchants because we don't have that many number of merchants. Payment processors, like what we have here, they have built their businesses on top of it, and they are providing incredible experience to all of us. Third, which is a critical segment of it, is users. So users is the last part of the puzzle, and they are very important because ultimately they are going to use. And what we see is that India is a large and diverse country, and there are many large segments and subsegments. We can take multiple approaches to segment them or cut them into multiple slices. It could be age, education, income, wealth, and so on. This diversity means what works for one doesn't work for others. So Radhesham and Sapna, as part of our story, they are two different people. So they are different by way of their education, the way they live, and not to forget the gender. Generally, we miss gender in most of our conversations. So turning to the panel, so we have been talking about payments, and payments means for us is digital payment. But in a real world, we have both the things, cash payments as well as digital payments. This is how, and look at the industry. But there is a lot that goes into this while making it frictionless at the front end. So let me first come to Anup. So Anup is part of InSolution Global, and InSolution Global works in 16 countries with a large number of clients. Its solution touches all stakeholders, customers, banks, merchants, and governments. So Anup, the question to you is, how do you do that with such varied requirements cutting across multiple markets and still keeping that as friction-free as possible?
So thanks, Anil. So let me start my input by saying I have a pet peeve with regard to B2B payments. For some strange reasons, we never had this, the entire B2B payment story has never seen that demigod status which has got attributed to B2C payments. We have so much of glamour and glitz associated with B2C. Unfortunately, B2B has always been a poor cousin as far as B2C payments are concerned. Now, coming back to the frictionless part, so what I believe is that the entire B2B story has gained traction in terms of adoption post the pandemic largely for two reasons. One is the fact that there was this less touch requirement coming in, and number two, there was a huge requirement for work from home. So it brought in a lot of changes when it came to corporate payments because businesses had to go on, they had to innovate, and that's when corporates started looking internally as to how they can best automate their billing systems, because cash was a requirement, and the entire upstream and downstream payments had to be made. So I think the corporates at that point in time looked at three options. First, they wanted to streamline their payments as far as downstream and upstream vendors were concerned. They wanted to get as much as data as possible with regard to making payments. Now, as opposed to B2C payments, when we at ISG start working on B2B payments as opposed to B2C payments across large corporates, large banks, what we see is that whilst we can talk about frictionless, but what we see is friction is one aspect, because as opposed to B2C payments, B2B payments, they're not homogeneous as opposed to B2C payments. There are multiple stakeholders. The requirements are varied. There are a lot of regulatory compliances which are critical requirement. The integration processes, getting this entire upstream, downstream vendors as a part of this entire payments business is a complex exercise, because each have their own requirements in terms of technology, in terms of integrations. So it's a pretty much of a cumbersome process. But the end story, when it happens on a seamless basis, it's a beautiful story to have. So to summarize, I don't think B2B would be as frictionless what we can at best do is make it as seamless as possible through better workflow streams and getting as much as payment partners and regulatory compliances in place.
So thanks, Anup, to differentiate between B2B and B2C payments and making sure that we are talking about friction and seamless, not in the same language. So these are two different things. So thanks for that. So coming to Shruti. So Shruti is part of Pay10, and Pay10 is a versatile electronic payment provider in the market. They help businesses to do their business in an electronic payment way. India is a complex country, or many countries in one country. This is what I used to say. So Shruti, how does Pay10 make payment processing frictionless and cost-effective for businesses?
Firstly, thank you, Anil, for having me here today. Let's take a step back from your question and define what frictionless and invisible payments actually mean, right? We live in a consumer-oriented market, right? And if you see, the trend shows the consumer's average attention span of a consumer is 8 seconds. So at the end of the day, frictionless payments is all about boosting consumer convenience and spending less time on completing a transaction. So these are two basic aspects where frictionless payments come from. Now, we as in Pay10 or Pay10, serving the B2B segment of merchants, or we serve B2B or B2B2C. We have to look at what our industry is asking for, right? Our industry trend is going from the traditional industry to a context-based industry. Context-based industry in the sense, for example, if you're looking at insurance, it's no longer male, female, location. It's all about how healthy you are. The healthier you are, the less your insurance. For example, vehicle insurance, right? You have a black box in your car. The better driving pattern and driving behavior, the lesser the insurance, no matter the age, right? So that's a context-based industry that we are moving towards. So when we look at our requirements, what's coming from our consumers and merchants, we talk about this industry as asking for less wait time, which is quick checkouts, self-checkouts, which in turn creates cost optimization for organizations. On the other hand, that optimization could be used very well. So the people who are no longer doing checkouts can actually stand and do customer services, build customer relationship, the personalization of the customers that we are talking about. It has to be easy to use. It has to be zero error to build trust. Now, frictionless payment to build trust is a big thing. Trust is where the whole industry starts from. My merchants build trust with their customers with products or services that they give, the quality of the product services they give, and how their payments are processed. There are three key items. So Pay10 as a payment solution service provider is a key contributor to its merchant success. That is where we are coming from. So what we are doing is we are focusing on a few key areas to build trust with our merchants, right? First is how do we authenticate payments, right? Payment authentication mechanism. So it can be pre-authorized, it can be biometric. Now, did you know facial biometric for a person with dark skin has more false positives than a person with light skin? Right? So you cannot build a standard based on false positives, right? So maybe use a combination of...
It's like clothing sizes.
Absolutely. So we're talking about using a combination of palm prints, fingerprints, retina, face, facial recognition, voice. Then we're also talking about tokenization for card, security. So data privacy comes into it. With all this data, cybersecurity is a topic that we cannot avoid, right? Ultimately, with all this technology, what Pay10 is trying to do is keep the merchant success rate high. Ultimately, for my merchant, that is my quality of service, right? So, me being in operations, I have a very pessimistic view. Success is great. Let's look at the failures, right? I focus on technical declines, whether that is due to merchants, due to my technology, or my acquirer. And that is what my focus is, to keep that success rate. Now I'll come back to your question that you asked about making it cost effective. Cost effective is easy to say. We are talking about automation. Everybody talks about automation, but that's a decade old. Let's talk about autonomous operations, which is deeply powered by AI, machine learning. And it is a journey that we take our organizations through, right? And with autonomous, we want people to only focus on, my employees or my team to only focus on subjective decision making, right? And then also looking at optimizing the use of technology. We all use clouds, right? Now, how many people would say, let's use Mongo on a EC2 on AWS, as opposed to making sure my technology is able to self-scale and self-reduce so I can optimize the cost? That is where the cost savings come from.
Thanks, Shruti. In fact, you added two dimensions to it. One is all about the context, and second is that moving from, say, uh, uh, old ways of cost effectiveness to autonomous way of cost effectiveness. Okay, quickly moving to SafeX Pay. So we also have Sapnil with us. They provide a fully customized payment services to businesses so that they just need one platform to accept payments from their customer, and they provide unlimited payment options, be it cards, net banking, UPI, wallet, and so on. So let us hear from Sapnil and that how they have done this thing.
Okay. See, always the customer is first. We all works towards the customer experience. Here also the customer word is coming where there's a custom which is coming. The customer may be from a B2B or a customer may be from a B2C. We cater more to the B2B2C, whereby we look at customizations with our limited not only to the payments, but looking at the customer class. You mentioned an example, Radhesham versus Swapna. So you have to be ready to offer a payment in a box where you cater to both the segments. We say cash, we say less cash, we say digital. I think phygital is the way to go ahead, which is very important. With respect to the India, globally, yes, we are already going digitally, but phygital is a way to go because we are in a transformation phase. We can go step by step. What we at SafeXP is doing is we have a customer specific and a sector specific approach. So it be a government, be it may be an education, there is a custom solutions that has been built. It is not a typical payment aggregation platform that offered to us every sector. That actually brings up the value addition for the customer, because some of the cases in the use cases in the government we have seen that if government payments are huge, we have seen a trend which is happening on the UPI. So if UPI is a preferred payment mode, the success ratio has to be high, as mentioned by, because we both are an operations, we always look at that aspects first. So uptime, it is not only with respect to the infrastructure, it's with respect to the transaction processing and the overall customer experience. When we talk about frictionless payments, there are in-app based payments, there are one-click checkouts, there are a lot of things that are coming up. But I think more and more the payment options are coming. People need to have a preferred mode. We need to go deep dive into the analytics of that particular merchant, provide that value-added data, which will be also cost-saving for him. We all know UPI is today in India, there is no cost. And we could see in some of the use cases of government and the education, the larger 60% payments are coming through an UPI platform. So that should be the preferred platform. So that customization also needs to be done. Today, in any segment, you go to Radhesham's example or Swapna, the journey which you say of a transaction is really important. How we can reduce the number of steps for him. Today, we cannot have a customer saying, you go and select a payment gateway or a payment platform and then make a payment. It has to be seamless, as mentioned by Anup. It has to be seamless, it has to be frictionless, and the experience. Today, the TAT that matters the most, and the transaction performance, which includes your payment infrastructure, is also responsible. So there is now a payment infrastructure which is building. And I think we can have a frictionless payments soon building up largely. Thank you.
So actually, your usage of word of phygital, I really love it because in a context like say India or say countries like India, I think that's the only thing which works. So if we are only physical, if we are only digital, both the things will lead to only suboptimal result. Okay, quickly moving to Sanjeev. So he comes from Nepal, our neighboring country, and he's part of National Electronic Payment System, which provide multiple payments option to banks in Nepal. It's a consortium over there, like what we have, something like of NPCI equivalent. These include ATM services, POS and acquiring services, card issuance, and transaction processing. So Sanjeev has heard a lot from other panelists, and I think it's time to hear from him that how any PS has embarked on the journey of frictionless payment or maybe a less friction payments, I would say.
Uh, Thank you, Anil. Perhaps, like to share not only the journey that NEPS has embarked in Nepal, but the kind of the digital transformation that is laid in Nepal as an ecosystem built by a company like actually NCHL and other players in the market. I think Nepal today stands at a point where we are very proud of homegrown technologies, particularly into payment interfaces. We have our own consortium of another company called National Clearing House Limited. They have rolled out many innovative technologies like that of the NPCI. My company works as a backend solution provider to various banks. It's for the industry, by the industry, sort of like promoted by banks. But we work into the backend technology of the switch, card switch stuff. I'll talk about that, speak of that as well. But I think Nepal have had a pretty interesting journey in last 2 years, particularly thanks to the pandemic, number one, and thanks to the central bank governor himself, who went out onto the front line promoting the QR right about sometime in 2020. So central bank governor going out to the vegetable market, to the vegetable vendor, trying to promote the QR. That was a quite very great inspiration and great support to the economy like ours. And the regulators thought on pushing the, promoting the digital payment ecosystem. So we have now pretty robust technologies powered through company like PhonePe or NCHL or so many other wallets. I think in terms of the licensed PSO PSP, Nepal holds probably the world record. We have 27 PSPs and about 8 or 10 PSOs in a small economy, about $30 billion size of economy. So number of players are a lot, but that also creates the innovation.
So one PSP per $1 billion.
Yes. So in the frictionless, what we have done in last 2 years, NEPS, my company has rolled out particularly a contactless solution, tap and pay. So there's some certain ceiling mandated by the regulator, and the QR is quickly being adopted in urban areas. The adoption is really great. Into most of the interoperability is still we are working on the interoperability of the QR because that is one area we still have to work on, and we're learning a lot from what's happening in Nepal, India and other parts of the world. And particularly, I think India is also facing the same issue of demand side. Nepal is no exception. I think many people refer as a Gen G, but I refer them as a Gen I, the generation born after the iPhone 2009, before after 2002, 3 or 4, but right after the launch of iPhone in 2009, this kid started coming actually touch and pay. So I think that is going to be very transformative, very disruptive once this generation starts demanding more and more frictionless solution. So this is where we also are being pretty mindful of about the kind of the new technologies that has to be brought in to disrupt the and meet the expectation. So I think those are the cases from Nepal coming out right now.
Thanks, Sanjeev. I think you neatly helped me segue into the next part of my conversation. It's all about different segment, different generations. So you would like to call it Gen I. I would like to say Gen I, but I stands here for internet. so it's not exactly iPhone. So yeah, so we have been hearing like from all of you. I think let's quickly move to the segments or the people that we really cater to. Ultimately, all of them they are going to serve the some set of customers. It could be individual consumers or it could be businesses. So let me first ask Shruti, because anyways you have been dabbling in few solutions like payment gateways, Bharat bill payment systems, DMT, which is domestic money transfer, and Aadhaar enabled payment system or AEPS. So, and it has users who are generally not as mainstreams as others are. So, what do you think, or how do you look at those consumers, and how will they benefit from frictionless payments? I would just want you to keep it short for about a couple of minutes.
Thank you, Anil. I think in order to talk about benefits, let's talk about what do we need to make our consumers adopt this solution. First thing is to build trust. I keep coming back to trust and customer centricity. Now, in order to build trust, first thing we need is uniform standards, right? Our regulatory bodies need to define common standards and integration frameworks, which is currently being done very nicely by the Indian government. Thank you. NPCI, IAMAI, FCC, PCI are actually playing a very key role in it. We can see UPI and NCMC, which is National Common Mobility Card, as some of the examples that are coming out of this effort. The other thing is very important is to look at customer awareness and adequate disclosures of information. And this is an education exercise not only for the merchant but also for the customers itself, right? So frictionless payment at itself is likely to promote impulsive buying, which will promote more disputes and chargebacks and refunds, which is detrimental to trust that we keep coming back to, right? So clear communication on roles and responsibility for service, product, and price is important. Then provision for customers to cancel the service at any point in time. Then ability for other modes of payment is also required. So frictionless payment is not the only way of doing it, right? Then redressal mechanism. How do we actually address all this? So clear responsibilities and accountabilities. Simplified process, I think my friend touched there, seamless processes for dispute management, chargeback, transaction reversal and void. From tech perspective, availability, disaster recovery, business continuity. So there's so much to look at it that it's very hard to squeeze within the time frame that you've given me. But thank you. So, and I'll keep coming back to data security. I think that is a bane of everybody's life in this room today. And transaction authentication, digital identity protection, which becomes ultimately using technology like AI ML for behavioral analytics for fraud detection, right? So all this will help us build strategic partnerships with entrepreneurs, right? Ultimately, we want to promote entrepreneurs. Entrepreneurs will boost and enhance, come up with products that will enhance customer experience. Then we are going to look at customized and personalized products and services. But ultimately, we are supporters of innovation as opposed to being innovators ourselves in this space.
Fantastic. Actually, I was listening to State Minister of Finance, and he also talked about a lot of collaboration. Probably he meant collaboration between banks and the fintechs, and what you mean here is collaboration between fintechs and other fintechs. I think that's a very interesting and very relevant point. So moving to Sanjeev, so he comes from Nepal and he's already working on several underserved segments, the way we see many of them in India. Let's hear some key messages that Sanjeev has for us and others, those who are trying to build frictionless payments for these segments.
Thank you, Anil. From my perspective, I think we need to be very mindful here when we discuss either digital payment solution or the frictionless payment, because we cannot exclude the people, the marginalized communities, differently able people, and geographically difficult like terrains. So because at the end of the day, all these technologies actually, from my perspective, were designed for, like, from the perspective of financial inclusion. Let's not even forget that, right? So DFS is a core integral part of the financial inclusion, by which philosophically and rightfully this technology should be available seamlessly for the differently able people, like, disabled people, and to people without education, to people who are illiterate, who cannot read and write. So I think this is where the true essence of the frictionless payment for the either like through the biometric, I think one of the panelists talked about it. So it has to be frictionless. The innovation, the disruption, I think next last mile of the disruption should be at that stage to be able to provide the low cost, frictionless payment solution for the people at the frontiers. So Nepal is a, like, geographically challenged country. We have the high Himalayas. India has the numbers, but we have only one thing: Mount Everest. I think your a billion people cannot beat us into 8848.
I completely
That
agree.
we are so proud of it. In other numbers, we cannot beat you, but in Mount Everest, nobody can beat us. That's I can challenge. Anyway, so we have geographically challenged terrains. So this is where we need a lot of innovative, disruptive solution for the frictionless payment for the people, like different able, as I said, disabled people, people without education, people who cannot, read and write. So this is where the next last mile innovation has to come in. And my country, I think we are very mindful about this kind of opportunities as well as challenges. I'm very excited to share that I met a couple of people here who are working in those kind of last mile solutions, and I met many of them here. Perhaps a new collaboration would come up, which we would be able to roll out these solutions. Because for urban people like you and me, I think this is more than other opportunities available. But I think when we discuss frictionless, that is what we have to keep in mind. Thank you.
Thanks, Sanjeev. I think very interesting stories about Himalayan and others. So let me move to Swapnil. Swapnil spoke about that. How do they empower business? And let's hear from him what users say about frictionless payment. Do they want more friction? Do they want less friction, or they want something else?
See, user wants less friction. User wants higher success ratio. Users are looking at how their business is growing. If they want to add up some sort of, if you look at examples of retail or e-commerce, the transactions on day by day are increasing. The purchasing post-pandemic, you have seen there's already a big spike on the transaction trends. Specifically, if you look at the millennials who are still buying on the e-commerce platform, are huge. Now even the next generation, even the older generation is now preferring due to the pandemic, thanks to the pandemic, that even they are preferring. So your load has already taken a spike. But the biggest challenge, which if that awareness is not created, okay, there will be a friction. So first, if we cater to all the segments, all the sectors, it is very important to create that awareness among that this is easy. What we call as our tagline or punchline is a swifter, safer, and simpler, which actually address to all the customer segments, saying that this is safer. So that's a concern which is there in the mind. Is it safe? Is it simpler for me whether I'll be able to use or still use a cash? That's a mindset that is still psychologically playing in tier 4, tier 3. I'm a cash comfortable guy. Even as of now, even we all are traveling. I've been given this example many of the times. We all are using the mobile based payments. We all have a card in the card. But still, at back of mind, we keep 1,000 or 2,000 rupees cash in our purse as a backup. So when we talk about payment infrastructure, BCP, we also make sure we have a BCP cash back and out in purse. So that's a way. So we need to look at the consumer psychology, the trends that are happening. If people are becoming comfortable, if they know, ki, yes, my transaction is going to be 100% successful, the BCP will automatically remove. And I think that's where the payment infrastructure, where we have to work. We need to work, have a collaborative, more and more collaborative approach between the innovative fintechs and the banks to actually produce seamless and frictionless payments.
Fantastic. Actually, in fact, some of the work that we do in the market based on, say, tier 3, 4, 5, 6 towns and small places, what we see the trends on this payments has really picked up, and 40 to 50% of people, they are comfortable or they have made some or other digital payments in their life. So that has been a welcome change that we see in India. Coming to Anup quickly, let's hear some global examples or key lessons on how consumers view frictionless payment. Over to you, Anup.
Yeah. So we see frictionless payments across three categories of customers. So we're talking about international cross-border payments, we're talking about corporate payments, and we're talking about SME payments. Now, by virtue of all these three segments that we are looking at, the number of moving parts across all these three segments is distinctly or significantly different when we start structuring customized solutions. So what all these three segments require are customized solutions. What is true for one segment will definitely not be true for another segment. So it requires a lot of customization. It requires deep integrations with all the ecosystem partners. And as we go down the channel, might be for a set of customers for international cross-border transactions, while a template would be the same, but it changes from country to country. If you look at corporate payments, if I'm doing, for example, we're doing business with one of the largest banks for the FMCG segment. When we do that, if it's a single payment option, good to go, no issues. It's just one card-based payment happens, the deal is closed. But the moment you take another flavor of payment, the conversations are different. The integration requirements are different. The downstream partners become different. And when it comes to SME, by virtue of the fact that they are in a different space, they are in terms of generation of even the technology requirements, it becomes complex. So my simple, so while Shruti and Swapnil were talking about, multiple authentication mechanisms that can go true for B2C payments, a lot of them can, at some point in time, can be used, but a lot of this cannot be used in the B2B space. You need to customize the solutions, and hence the complexity of arriving at an end-to-end solution changes with time.
Thanks, Anup. Actually, I'm just again thank you all for basically sticking to the time. So I have some time to ask last question from the panelists. And since Anup spoke about some of the payments on the B2B side, like what are the things, maybe I'll just extend that first question to him. And I'm just trying to understand that what's likely to happen in future. So maybe Anup, you want to spill some beans that what possibly could happen on the B2B side of frictionless payment? Maybe 2 or 3 points.
So difficult to crystal ball on this, but yeah, regulations are going to be far tighter. It's not that because the requirements of regulators is going to be stringent. That's point number one. So all the B2B players in the space will have to be on top of the ball with regard to managing the regulations. Point number two is data security, data integrity norms are going to be very tight. Okay, what's true on the B2C space in India, or of course, our regulator, hats off to him, has done a phenomenal job. It's not going to go easy on B2B. So data integrity, safety, while B2C, while frictionless is a good word to have, but the kind of volume, the voluminous payments, the size of the payments, I don't think any player in this space would like to do or get into this space without, covering all aspects of security. So,
yeah. So risk is very high. So probably they have to take a measured approach. And Shruti, I'm sure that you have many ideas. Probably some of them are work in progress. So you want to share or you want to enrich us?
Thank you, Anil. Yes, so when we look at the future of frictionless payments, you can actually classify them as short, medium, and long-term future that we see. So firstly, something that will happen in India is availability across all regions, whether it's city or rural areas, and in online, offline space. The other significant penetration that we see is within the high volume, low value ticket items, right? That's where a lot of the penetration we will see. Then, retail, I think retail is one area we've always talked about that frictionless will happen. In this case, like my friend just highlighted, there'll be transaction limitations, transaction size limitations that will be imposed, and it'll be only allowed for certain category of merchants. to make sure there's a trade-off between convenience and security. So then frictionless payments or what we call invisible payments will basically boost omni-channel experience across online, offline touchpoints. So that is another area. Then there'll be a special focus for payment solution providers to make the solution robust, scalable, secure, interoperable, which I think we are all, from technology perspective, looking at it on a daily basis as a grind. Some use cases that we see can be worked on immediately are things like toll and transit, fast tags, which are already coming out. Then we're talking about contextual insurance for travel and health. Then linking frictionless payments to reward programs. That will be another area that we see with real-time offers based on location and trends. Ultimately, all this has to boost customer experience and build customer trust for new use cases to come out. So that's where we see the future of frictionless.
Thanks, Shruti. I think too many to come, and we will see that how it comes. Probably over to you, Sapnil. You want to share some emerging trends?
I think the emerging trend is today you look at all the e-commerce platform where customer is actually logging into that platform or using that application. And every time he is using a separate ID, separate registration. Can we look at something which is a common payment platform? So a single subscription type of a super app type of a thing where he should be able to have access across different all e-commerce site where he
Kind of-
uses the
kind of
same
centralized
credentials,
KYC type of thing.
centralized
Centralized
KYC
ID
type, centralized payment, because he can have then his payment platform. In the contactless space, India already we have increased the limits. But if you look at it globally, our credit cards has been accepted at any value. Here there has been restriction. But I think the post-regulation, thanks to the regulator of pushing the guidelines ahead, and now we will be complied soon on the tokenization. I think post that we can see the surge in the total payments happening in the contactless. We can have increased limit maximum up to 25,000. That will also bring up a large level of innovation. And then maybe NPCI day before yesterday, and they have also launched a lot of products around UPI. So can we see? So we are looking at one use case is, can we have an UPI ID linked with your face? So facial recognition and UPI, if it can be linked for the future, I think that will be the innovative and disruptive payment that we can look at for the future.
By the way, Aadhaar database also has your face in it.
Yes, so that needs to be. So government needs to have that. So we can also integrate with the UID and probably we can take it from there.
Thanks, Swapnil. Actually, moving to Sanjeev. So, Sanjeev, today morning only he signed an agreement with NPCI for taking UPI to Nepal market. So, Sanjeev, we want to hear from you that what are you going to do with that?
All right. I think actually NPCI and Gateway Payment Nepal, a separate company, are already in agreement driving the UPI in Nepal. So my company, NEPS, has signed agreement with the Gateway Payment Nepal, who drives UPI in Nepal. So making particularly a cardless UPI integration. That's what we are trying to do. With India, we have had a historical relationship. What in Nepal, what we call with India, I think we border your Sikkim, West Bengal, Bihar, and UP. So about 35% of Indian population is already connected to Nepal, right? So we have a roti-beti ka relationship. So with roti-beti ka relationship, we have now moved to the Bhutan relationship also with UPI integration. So I think this is very historical, very, like in a sense, with this, I think I encourage and urge all of you to visit Nepal and try your UPI app, whether it works. You must come and visit us to at least try. But Nepal is beautiful, much beautiful than where you are, I'm sure. So you must come and enjoy our beauty and hospitality. Perfect time between now to December, so more reason to come. And more reason to come and use your UPI experience in Nepal. We are trying to work in the cross-border experience, how to make the payment more seamless, more frictionless. I would like to see the UPI app of India working in Nepal and my Nepali Connect IPS app working in India. I think that is what we'd like to do that. And going over, interoperability, cross-border interoperability is one thing that I would really like to see. at least between India and Nepal, because these are the only two countries in the world that share very unique relation. No other countries that comes to my mind that share this kind of a historical, cultural kind of the relationship. And UPI integration, this morning we signed an agreement at the presence of NPCI. Very soon you'll hear the good news. UPI rolling out in Nepal. So with that, again, it's my duty as I stand here representing my country to encourage you and maybe forcefully take some of you to Nepal to visit, so that is my job. So welcome to my country, visit us.
So whenever you are Sanjeev, you are using force, use it on me first. Huh?
Right.
I'll come.
There are special
Yeah,
offers which
and
will
maybe
give.
by next week, I may be in Everest Base Camp. If any one of you in the trekking or stuff, you are happy, welcome to join me. I'm off to 10 days trek into Everest Base Camp.
Fantastic, fantastic. So actually, probably we have a couple of minutes. So in case there are a couple of questions we can take, maybe keep your questions short so we don't run out of time. Thank you. Yeah, please.
Hi, this is Vijay from Lyra. This frictionless and borderless, very interesting topic, and as Nepal. So, how soon we can have, because India and Nepal, actually we have free border. So, it's payment also free movement. How soon we can have? Do we have any timelines?
I think we should be ready as the local partner of NPCI Gateway Payment Nepal. I think their representative may be in this room. I'm not too sure. I think, I think this would be your Diwali gift.
Great. Thank you.
It looks like.
Thanks for this question. Any other question in case anyone has any pressing question? Okay. So, yeah. So maybe this is time to close. So first of all, thank you all for sharing all your thoughts about how it has happened, how people are going to adopt it, and what are we going to see in the future. So from our context, I think we have made tremendous progress over 1,000 years. Like we used barter system, then coins and currencies, then electronic payment. And probably we are moving into a era where we are talking about payments using some electronic codes and the strings so that it can move. So we are talking about digital currency also. And our panelists, they are playing, like so many others, they are playing a pivotal role in making sure that these are seamless and frictionless, not only for consumers, but also for businesses. Before I close, I just want all of us to consider the last few people in the queue to make them as part of this fabulous and awesome journey that will make it much more inclusive and sustainable for all. So thank you all for listening to us. Thank you to all my panelists. Thank you very much.
Thank you so much. All right, ladies and gentlemen, can you hear me well? Headphones can hear me well. My voice must have really become better over all the 3 days of shouting. Can I request you all to please plug in the headphones given to you? Can I request you all to please wear them? You can hear me? All right, as we come towards the culminating and finale panel discussion, which I've been telling you since morning is really riveting, relevant, and most importantly, you will get to hear from the horse's mouth about how fintech, digital payments, is impacting the biggest business, which is the D2C business, in a few moments from now. So what I request you to do is, before we get started and segue into that panel discussion, can I request you all to kindly rise? I just want to do a quick recall check. Can you all please rise? Yes? Lovely. 30 seconds. Okay. So I just want to ensure that we all are listening and mindful. So could you all rub your palms like this for me? Yes? With this, could you please touch your forehead? Rub your palms quickly. With this, could you please touch your nose? Rub your palms quickly, and could you please touch your chin? Most of you, I think now it's safe to say that some of us are awake, some of us are still figuring out our slumber. Can I request you to please settle down, as in the recall test you've all done well. And let's set the context of the finale panel discussion at the Global Fintech Fest 2022. Since the last 3 days, we have understood and demystified how digitization has impacted the world of credit business, rural banking, and its proliferation in the length and breadth of the country and the world over. Like I told you before, our last panel discussion is going to demystify on the topic of tapping into fintech opportunity in India's 100 billion D2C market. There's no doubt that pandemic has changed the way we live, we eat, we socialize. Brands have also realized the power of connecting with consumers directly. They've made the pivots and transformed additional distribution models, done away with the reliance on middlemen, and adopted digital as a platform to educate and engage. The wave of D2C in India can be best understood with the stat that 200 million online shoppers would be added in the next 4 years. This all points to the Indian D2C ecosystem being at an epic inflection point, and market reactions in the recent times have been positive about it, which points out that the Indian D2C ecosystem is at that journey which is driven by seismic move to online and growing social media consumption across the cohorts. Now, to throw light on the different facets of the D2C market, we have with us three mavericks who have actually built scale, scope, complexity in a relatively complex business and entered those markets which were inundated with a lot of competition and proved that if certain basic things are done right, you can create an impact in a massive way, create unparalleled value for the customers. So for this round of the conversation, I'd like to call on stage our moderator, beginning with Mr. Bhavik Vasa, who's the founder of Get Vantage. Ladies and gentlemen, a big round of applause for him. And joining him on our panel discussion is going to be Mr. Aman Gupta, co-founder and CMO of Boat, ladies and gentlemen. And joining him on stage is also going to be Mr. Manish Chaudhary, co-founder, Wow Skin Science. And finally, we also have with us Mr. Mohit Gopal, Chief Operating Officer at PayU. So, guys, a stunning lineup of speakers and panel members. A big round of applause. And on this note, I hand over the stage to you, Bhavik. Over to you.
Perfect. Thank you. Thank you. I think you did a good job with warming up the audience for us as well. No, I think this is a wonderful event, very well organized. But एक चीज हो गई यार, कमी हो गई. So before we get started, there's one problem.
Yeah, big problem. Very big
problem. We're not wearing boat speakers. Aman, is that okay?
No, I'm going. Next time, Latika.
No, but on a serious note, I think great, wonderful to have you, Mohit, Manish, and Aman on stage. And I think we have before us a very large responsibility to talk about 100 billion market size that the D2C space is going to be. And I think if we look back the last decade, right, we saw commerce going digital, e-commerce happening, marketplaces happening, and then 2016 happened. And through my own journey in the world of fintech, 2016 was an inflection point where demonetization happened. Modi ji stage pe gaye aur bole ki, let's talk about digital money and digital cash. And that changed at least consumer behavior. So commerce went digital, payments went digital, and we saw a huge shift in consumer behavior. So I truly believe it is really looking at the last decade that we can truly now know that this next decade, this current decade is going to belong to brands of India. Brands like Boat, brands like Wow Skincare. And with that, let me get started. And Manish, you and Aman, let me get you both to share. Yaar, aap logon ne to bahut time se you all are building a brand, solid business over the last few years. But what has really shifted and changed in the last couple of years? If you were to see from consumer behavior, consumer patterns, digital payments, what has really changed in the last couple of years?
So I'll go first. So I think everything has changed. The consumer isn't the same anymore. Let me ask first, how many of you guys understand Hindi? ठीक है, then it's easy. मैं हिंदी में भी बात कर सकता हूँ. So, the consumer is changing every day, right? And when we entered, I remember I was working for a company which was also selling headphones and speakers. And I went to my boss and I'm like, the consumer is changing. Why don't we guys do this? So he's like, nahi yaar, nahi ho payega. Because, at big companies, they're sometimes resistant to change. Yeah. So I think if you look at the product as such, right? Earlier, there were, in my industry, there were a lot of black and whites being sold as headphones. Look at these, right? Boring ones. So there were very boring headphones being available, and we changed it into a lifestyle category. If you look at the consumer as such, I remember, I had a marketer with me, and I used this line a lot. And he on a Friday wrote, "Yeah, it's Friday." Okay. I'm like, dude, change your, you don't do your autocorrect spelling checker. It's
Right.
called Friday.
Huh.
And then I realized that these guys talk in a very different language. Right. So it was a slang. Friday is supposed to be like good slang. So the consumers needs the way they talk, the way they interact with brands, the way they buy, right? Earlier, they were only offline available, right? Now, if you look at categories, some of these categories, maximum purchases happen online on marketplaces or on your own website. So the consumer's shopping pattern is also changing. So I think consumers will change, and if brands like ours don't change with changing consumers, will die.
Yeah,
I totally believe in that. That if you are not, if you think that you've done it all, or if you think that your consumer, boss, he's changing every day. There's so many fintech things which are starting every day, so many new platforms. So change with your consumer or you die. That's my answer.
Fantastic. Manish, bringing you in, your thoughts, and also throw some light, prepaid orders versus COD. Do you see a change in pattern there, shifts there?
Yeah, so hi all, really excited to be here. Let me top up something at least on the OG of the D2C in India, Aman. Let's talk about when we started. It was 2013-14. At least in a category like ours, who thought about buying shampoos online,
Right.
hair oil, consumers only buying it offline. How did you build trust? That's the first change where we really saw in our category that there's revolution in that, right? And that was just the start. Let's talk about the pandemic. I think that was the best. I can't be selfish here, but got to be honest. I think that was the best thing what happened to internet businesses. Consumers came online and bought.
Yeah.
It's a behavior which has changed forever, if you ask me. It's great to be a consumer in today's era. I think loyalty is at the lowest you can ever find. But what the Twilight gives you a lot ahead is data gives you so much of innovation opportunity where there's a gap, right? So I've told you how things have changed. Now going back to the question what you asked me on COD prepaid, I think digital is something, I mean, we started our business when we saw demonetization. So we have seen that phase where 95% of our consumers were buying COD and you had ad costs which are going so expensive. I remember spending on Facebook in dollar cards, right? We used to put Kotak Visa credit cards with fixed deposits and running it. Just now, a year back since we got a Facebook representative and we bill in INR, right? So you're talking about those era. This is not too far away, how things have changed. But keeping it crisp, I think digital is something which we see UPI being big, like it's our biggest driver, at least on the collection point of view. Obviously, we're seeing credit cards lagging behind because we are a low ASP product. People like to just check out with UPI. COD is still large. We're at 50-60% COD.
Okay.
But as India matures into more of a e-commerce, digital, ecosystem, I think this is just going to be something revolutionary.
But you see a shifting trend. Both of you all see
We
it.
have seen it happening year on year, and I think it's just getting better. Tech and data helping again. How do you offer a consumer who will buy prepaid, give them a better discount, give them better offers? So we've got the tech today alive.
Got it.
To execute this, but really exciting to see these metrics really improve year on year.
Perfect. Mohit, let's bring you into the conversation as well. From your vantage point as a payment enabler, as a payment gateway, as PayU, what are these patterns that you're seeing shift? Just some very macro trends. How are you seeing merchants? How are you seeing consumers transact with different merchants in different categories?
Yeah, hi. So it's great to be here. Very easy question, but I'll give you a tough answer for that, right? Think about a few thousand years back. None of you would have found it odd to actually go to Aman or Manish and bring, say, 12 chickens or a bag of salt and exchange that for headphones or skincare products, right? There was a barter system out there. That later evolved into cowrie shells and other things. eventually into cash, paper money, and then digital forms of money, which could have been meant a credit card at some point in time. And there would have been a physical point of sale where you would have actually swiped a card or eventually tapped it. What we have done, what we have seen over the last few years has been this change to digital. And I've got this very nice product which is launched here as well, where you can use a device to actually tap on a point of sale system. So that has changed. And think about it. Changing consumer behavior is the toughest thing to happen. There was a very, very famous, one of my favorite stories is about this famous plastic surgeon who said that when people actually get rhinoplasty, which is a nose job, it takes them about 21 days to get used to their image in the mirror. It takes that much of time. So habit formation takes a minimum of 21 days. When we think about the sheer growth of UPI and digital payments in India, also remember that some very large companies spent between $5 to $10 billion in changing that consumer behavior. It takes time, effort, and money to change behavior, right? Now today, luckily for us, all that is done and dusted. And if I was to talk just from the framework of the D2C industry, right? What is D2C trying to do? As a brand, the brand wants control over the entire process flow, right? Right from the point of creating the idea to actually the end experience of shipping it to the customer and everything else, right? The second thing is the brand wants to reduce costs that may or may not happen, but they're actually trying to say, we don't want to pay these large online marketplaces something which we don't believe they're entitled to. And the third thing is they actually want control over data. That customer should actually have loyalty towards them, and they should be able to actually tailor that entire experience for that customer, right? So these things are possible today. And from a payments perspective, right?
Yeah.
We are here to support you in this. We are the invisible channel or partner, right? And,
Sure.
and we will build to suit. We already have pretty much everything. All the ingredients are there. Now all that is required to stitch it all together and actually make it big. So I think that's what I offer.
Perfect. So consumer behavior has changed. Payments is enabling all of that. But is this sustainable? So what tech has done, and Aman, I think you get pitched a new brand coming into the market every other day for angel investment. Manish, you're seeing brands come up, literally husband and wife couples setting up a new brand from their kitchens now. So technology is great and it's enabled a brand to come up, but we are seeing thousands of brands, thousands of small businesses coming up. Is this sustainable? Do you really think the market opportunity is that large in India and we are just scratching the surface, or you think it's a bubble that is waiting to get corrected?
नहीं यार, I think अभी तो इंडिया स्टार्ट हुआ है. If you look at US, there are so many brands for every category. India में तो there are not even, even in their category shampoos and all, there must be how much?
50,000.
50,000.
50,000.
ठीक है, इनकी कैटेगरी में मत घुसना.
बहुत
बाकी बहुत
You need a lot of capital for that.
How many in the boat category? How many in the
in
4 or 5?
We were there were 200 brands.
Wow.
Only. I wouldn't say that India mein there are many brands, right? And I think there is space for everybody. They will have niches created. Now even their industry, there is somebody, if they are doing shampoos and everything, there is a guy called Mac Caffeine who's only doing caffeine products, right? So there are niches which will become masses.
Yeah.
And there will be some people who will do only vegan stuff, right? And they'll become masses in that. So I think there is room for everybody to grow. There are, like even in our category, there will be somebody who will take over like probably a gaming zone. Like he takes over the gaming headphone category. There, and somebody is doing like silent, these disco party headphones, right?
Yeah.
I don't do them. So he might build a brand in that category. So अभी तो इंडिया में बहुत कुछ बाकी है. And not only husband and wives, I've seen a lot of friends starting up, brothers joining up, mother-in-law and daughter-in-law starting up.
Yeah.
So there is huge, India mein entrepreneurship has just started.
Yeah.
And digital brands is one part. But there's so many other areas. We see every day new entrepreneurs, new combinations coming up and starting something. And it's the right time in India. If you look at our Honorable Prime Minister, he also said there's a startup day being celebrated.
Yeah.
It is the right time to be an entrepreneur, whether you start up of your own company or be entrepreneurial in the company you're working in. So those traits are being, I would say, being nurtured, being looked at, and people with those traits are growing in any company.
Perfect.
I think अभी तो start हुआ है
Game
boss,
चालू हो रही है.
India. अभी तो
Picture बाकी है.
picture अभी बाकी है, correct. So अभी तो only You know, even if you look at online, there's only 10% of India which shops online. There's 90% of India which is still offline. So अभी तो कितना कुछ बाकी है. मतलब anybody and everybody should not be, क्या बोलते हैं ना उसे, should not be scared कि इतने सारे brands आ गए हैं. अगर ऐसे होगा तो कभी काम ही नहीं होगा.
Perfect. Manish?
Yeah. See, I'm a strong believer in the India story. I think this decade is going to be India's.
Superb.
Consumer, it's a great time to be a consumer here. Not the best time to be a brand, right?
I know you keep talking about not so much loyalty.
But I loved what Aman used the word brands, right?
Huh.
Very less brands in India. I think the entry to barrier into any category is easy going online today.
Yeah.
But building brand is very critical, right? There's a old saying products are made in a factory, brands are built in the minds of a consumer, right? And that's something what Aman's cracked. We are in that path. We are a transitioning product company into a brand. And I think that'll be the differentiator.
And y'all have just signed up a new brand ambassador, Karthik.
Aryan and Rashmika.
Very
but
nice.
I think we should stump the audience and ask them, which is the first D2C brand in this country? Let's see if anybody can come up with a question.
Anyone? I think he's asking a quiz. Do you know? I don't know.
I also don't know.
Let's give them a chance. It's very interesting.
Anyone want to take a guess? First D2C brand in India? Amul.
Washing
No.
powder Nirma.
Washing powder Nirma.
Why is it D2C?
Because he went door to door selling his products, right? That's the story of it.
Nice.
What we have done is just going digital.
Let me
to a
write
consumer.
that for the next section.
Next वाले में
Start
use करना.
Yeah. So going back again, I think it's a great time to be an entrepreneur. Great time to be a brand owner.
Sure.
In our category, please don't come in. There's 50,000 brands. I mean, when we entered, it took a year and a half before somebody could copy us. These days, copies come in 2-3 months. Moats are broken. Then you have to go re-engineer things. I wouldn't say it's tough, but you're playing in an 80,000 crore category.
Sure.
It's a huge place to compete on, but anything is possible today. And I think this decade is India's.
आजकल तो अमन भी आपकी स्टोरी बता सकता है. The apple cider.
Correct. Apple cider vinegar.
But Mohit, how many merchants do you see on your platform now? Is that growing? What pace? Just give us the flavor because you have that vantage point. You're seeing every business go online.
Yeah, so a few years back, it was quite interesting. When we looked at trends, we saw a concentration, especially in e-commerce, going towards the super large marketplaces, right? You could actually see them grow faster than smaller brands. The last couple of years, that trend has reversed. We're seeing a bunch of smaller brands who are actually growing at a faster pace than the very largest of players. And this is very, very interesting, right? It's just started happening. But this trend, if it continues, and you know how trends are, they start off slow and they suddenly start scaling.
Sure.
So I think these guys are going to be super rich. The other thing is, I have a question for all of you here as well, right?
Yeah.
How many of you are from banks? And don't worry, I won't hold it against you, right? Or have had banking experience, ever worked in a bank? Not bad. Now think about it. A traditional bank, right, is a full service bank which does everything from agri loans to vehicle financing, insurance, blah, blah, blah. If you think of making that analogy, what is D2C in the banking space? It will be a digital bank, or it will be somebody who's creating a credit card platform, who's actually going deep, who's specializing, and who's actually saying, I will cut out all the clutter. So if you see the most successful, like washing powder Nirma is a great example, single product. So if you're actually doing something in D2C, please don't come out with 10,000 products, right? Then you are going to be, you need to be on a marketplace, or you need to build a marketplace. You're doing one single product, 2-3 simple products, and then you can actually specialize and win that market. So I think that's what we see, the ones who do the best.
Sure.
Licious is a good example again, right? That's D2C again. Bewakoof, D2C. And all of them just take a theme. You can then have multiple products. So again, I'm saying, let's specialize on t-shirts, have a bunch of t-shirts, specialize in meat. I'm not saying that 50 brands of meat is like, it's just still one product, right? Skincare is one product at the end of the day. You can have multiple pieces in there, multiple pieces of inventory. Why? Because the logistics part of it is the other challenge. So you have to fix that as well. Returns is a challenge. If you ideally have something which doesn't come in sizes, that's great. Shaving blades have done well in the US for that one reason. You don't have different sizes of shaving blades for your face, right? You can just go with one.
Yeah.
And that works for you, right? So try that. But we can see this is going to work. So those of you who are not in D2C, figure out a D2C model, and that includes in fintech as well.
Perfect. Perfect. So let's also quickly spice things up a little, make this a little more fun. We have a shark on the stage, so we have to go in that. Where is the shark? But no, I think when it comes to fintech, financial services, of course, payments and digital payments and tech is one part of it, but relationship with money, right? Capital, financing, funding, very important part of growing a brand, growing a business. Uh, but let me ask both of you in your journeys as from being a founder, an early founder, to then being an investor in multiple other businesses. What's your relationship with money? How has that changed, especially for you, Manish? Manish, you go first. Then we'll have a.
So initial part, we started we were bootstrapped right till 2020. My investors sitting in the crowd here, right? We've been funded by Chris Cap and GIC. So anybody's wanting a check here on spot, Param's here. But prior to this, we built it completely bootstrapped. We deployed close to 27 to 29 crores to build a 250 crore brand, EBITDA positive that time. Capital was required to build brand. That requires money, needs institutionalization of the company, less dependent on founder. How do you build an institution for tomorrow? Got great partners on board, but still continue to behave like we're bootstrapped, though there are investments into the business where the burns are there.
Sure.
But that's for something which is long term, which pays off, which is brand building, which is very expensive today.
Yeah.
So it's been
Yeah.
tactically taken for specific reasons of building brand. So Karan and myself, my younger brother is the co-founder. We are always thinking about where the brand could be 5 years, 10 years. We've got pitch stops where we do a stock check, where we evaluate where we are. But very fortunate to have great partners on board.
Sure.
And
only through the journey, only equity fundraising, or you've taken other forms of capital as well?
If you are a negative EBITDA business, prefer taking equity.
Okay.
If you're in the positive, like how Aman's humbly in it, debt comes into play. But in our category, we obviously high gross margins.
Sure.
We know how to make money at the end of the day, profitability. We know how to, you switch off the marketing side, it'll spit out profits. But you're looking at building something which is long term. You're fighting a tough category, right? It requires capital.
Yeah.
So that's where we are.
Perfect. And Aman, your insights in terms of course, you play the role of a shark. You're also mentoring so many founders. How should one go about building a brand? What are the other ways of raising capital? What are the other avenues? How do you grow from one milestone to the other?
So I'll put this in two parts, right? One is my personal life on finance.
Yeah.
One is the company life.
Yeah,
on
we want the personal one also for sure.
Yeah. So which one do you want? So as a company, we were bootstrapped till a long time, right?
Yeah.
In fact, we were in an industry which was very highly competitive, right? And there were some mobile brands in our space which did not do well. तो हमारे को ना इन्वेस्टर्स बड़े गंदी तरह दिखते थे यार ये लोग ऐसे चाहिए मर जाएंगे sorry one investor sorry not you I didn't meet him that time. So investors used to reject us even before we were born. Our death story was written before we were born, that we will die this way. So we did not get a lot of money. We had no option but to. I went for a fundraise. Initially I went to a lot of VCs that यार पैसे दे दो. क्योंकि ना फंडिंग मिलना भी ना एक सेलिब्रेशन होती है. There is a sense of achievement when you get funding. Right? Everybody starts congratulating you. So you go open your LinkedIn. There are like 200 people. Oh, इसको funding मिल गई, and so everybody is congratulating. So we also, as humans, go into the rat race of funding, right? So हमें भी लगा यार हमें भी फंडिंग चाहिए, हमें भी जाना चाहिए. तो हम भी गए फंडिंग की तरफ. सबने हमें रिजेक्ट किया. तो फिर हम अपने आप बिजनेस बनाया. तो हम अब तो हमने बहुत पैसे बचाए. हर जगह हम पैसे बचाते हैं. आज भी I'm a chartered accountant, so there is a banya also in me and a CA in me, which always makes me save money. I'm very ROI driven. I'm very focused on ROI. Even on marketing, I don't spend too much. I'll tell you a small example. There was a celebrity we signed up, and that celebrity one day said, one of the first celebrities, and he's like, मेरे को ना गाड़ी चाहिए, Audi. और मैं बिजनेस क्लास फ्लाई करता हूँ. मतलब अजीब आदमी है. मतलब इतना महंगा बिजनेस क्लास होता है, तो मैंने वाउच अपने ना पॉइंट्स ढूंढे, पॉइंट्स में से कहीं से उसकी बिजनेस क्लास की टिकट बन गई थी, तो मैंने उसको वहाँ से लेके दी। फिर कहता मुझे ये ऑडी चाहिए, एक फिक्स ऑडी, कि मैं इसी ऑडी में जाऊँगा, मतलब ऑडी या BMW व्हाटएवर, यू नो आई एम लाइक दिस। तो मैंने अपने फेसबुक में लिखा, एनीबडी हैज़ like a big car, because all these celebrities are used to driving in big cars. So a friend of mine had a car, and I used his car for the pickup, because the car company was like, I want 30,000 for one day. I said, pagal hai. So we used to, you know, we had no money.
Yeah.
So we had to do a lot of jugaad. We worked out of co-working spaces. I had a lot of interns as our employees.
Nice.
I had to double down on my times, right? I have I have a daughter, and then boat was being born at that same time, and I think I was spending my time in bringing up boat as my baby, and my daughter, my wife was taking care of my daughter as one baby. So money तो हमारे पास था ही नहीं भाई, so we had no luxury of money,
right?
And in hindsight अच्छा ही हुआ, क्योंकि अगर हम पहले दे देते तो हमारी इक्विटी नहीं बचती। तो फिर हमने बीच में we were very profitable, since day zero we are profitable. So we were doing 100 crores of sales, and I went to Kaval as an investor.
Yeah.
And I told him, I need you as an investor, as a shark, to help me grow. I did not need his money, but I needed his inputs. I needed how to scale from. I knew how to scale from here to here.
Correct.
But then from here to the next level, it is a different set of. Then we have now Warburg as our investors, good guys. And they bring in a different level of expertise, right? So you do, I would say, I remember somebody saying that equity should be your last option. And I totally agree.
Perfect.
I don't think anybody should, money from customers is better than money from investors. Investor की सिरदर्दी बहुत ज़्यादा है यार, मतलब अब अच्छे इन्वेस्टर ज़्यादा बचे नहीं हैं इनको छोड़ के।
And please record this. This is the shark saying, don't give away equity.
I'm telling you, वो हमारा काम है equity लेना उनसे, लोगों से। अब वो देने ही तो आए हैं। But मैं तो from my side, I don't want anybody to give equity if not required. So equity should be like preserved as much as you can. And then we took debt. We've taken all types of debt. We've done revenue financing. We've done bill discounting. We've done venture debt.
Perfect.
And now, since we are doing well, banks have also started coming. पहले तो banks को भरोसा नहीं होता था हमारे पे कि भाई ये क्या करेंगे, तो हमने 26% पे भी डेट उठाया हुआ है। सबसे पहले डेट उठाया था मैंने अपने पापा से, उन्होंने मेरे से 15% पे।
सबसे महंगा था
वो भी महंगा था। पापा ने बोला मैं बैंक में डाल रहा हूँ, मेरे को 15 मिलते हैं, 12 मिलते हैं। मैंने पापा 15 दूंगा आपको, आप मेरे को दे दो। पहले डैड से उठाया, फिर फिर वेंचर डेट से, बिल डिस्काउंटिंग से उठाया, फिर वेंचर डेट वालों से उठाया। बट अब क्या है ना, कंपनी एक लेवल पे आ गई कि बैंक्स हैव स्टार्टेड गिविंग अस मनी एंड मच चीपर कॉस्ट ऑफ कैपिटल। सो या, वीव हैड मनी फ्रॉम at all sides.
Perfect. No, and trust me, that was I haven't bribed him at all to do the plug-in, but thank you for the plug-in for GetVantage. Take revenue-based financing also.
Yeah, it's important. It's best.
You all have to sign brand ambassadors and actors. I think I'll just sign you guys as my ambassadors as well. Mohit, quickly, for you, as you're seeing the startup ecosystem flourishing, e-commerce businesses flourishing, what besides payments are you also offering? Working capital, alternative financing, lending? What are the support areas for these businesses that can come and work with you as an enabler?
So in spy movies, there's this famous statement, right? Don't ask questions for which you already know the answers. So of course, as PayU, we are partnering with Bhavik's company GetVantage. We are trying to provide revenue-based financing to companies. And see, even the previous question, debt or equity, right? Debt is historically about the past. What has the company done, and therefore you'll get debt. Equity is largely about the future. What are you going to do, and therefore you'll get equity. But in terms of D2C, right? You are selling products out there. Therefore, the important thing to do is cash flow management. And for that timing gap between when you get paid and actually when you are actually making payments is something which something like revenue-based financing can solve very, very well. The other thing is, how can you actually get your customers to actually spend more? And for that, affordability-based solutions, which is EMIs of different sorts, whether it's BNPL or anything else, actually adds value. And today, we see so much happening on that side, right? Think about this entire thing about rewards, loyalty, offers, that entire piece which is out there. And you have great companies right here itself who are all providing parts of this. Now, what we will do is simply stitch that ecosystem together to actually help and that's what Bhavik and I are trying to achieve here, is to stitch that ecosystem together so that for any new D2C company, they don't have to face the same challenges which somebody like Aman or Manish actually had to face. Because at the end of the day, all of us are not going to be as skilled as these guys, right? And I don't know all three of these guys. Bhavik is a hustler. It doesn't get much better than that, right? Aman's idea factory, is he an idea factory? And we all know that, right? And Manish has spent so much time going so deep. Will every D2C brand be that smart or that good? Maybe not, but it doesn't matter. That is the foundation, that is the infrastructure which people like us will provide, and then you can go out and just crack the market, right?
Fantastic. But does it help, Manish? I don't know if in your category, very relevant, but Aman, is consumer credit, BNPL, is EMIs, does that really work? Are you seeing that kind of boost consumption at all, or?
यार इम्पोर्टेंट है अब कस्टमर जब मेरे को याद है जब मैं आई वाज इन सिटी फाइनेंशियल एंड यूज टू गिव अ लॉट ऑफ पर्सनल लोन्स एंड फ़ोन करके ही हम लोग किसी को सबसे पहले वो किसी को वॉशिंग मशीन खरीदनी है टीवी खरीदनी है 0 EMI स्कीम आती थी आज से 10 साल पहले तब भी हम वैसे ही खरीदते थे और जब 0 EMI आ रही है मतलब फाइनेंशियल डिसीजन तो यही कहता है ना कि ले लो भाई फ्री में आ रहा है अगर सेम प्राइस में मिल रहा है 0 EMI मिल रहा है तो क्यों नहीं लेंगे सो आई थिंक देयर आर the customers were opting in for that, and I think those days are getting over. Even the startups are now getting like you have to charge.
Yeah.
Right? Profitability is become important. Yeah. But if you ask me to answer your question, that are these important? Absolutely, man. If you're telling, if you're giving a consumer an option to buy without spending so much at point zero, you're just you're just helping. Them make that decision today, right? Whether it's travel, whether it's goods, any industry you go into, and you get this is how consumerism will evolve in the country. And it's very critical. If we don't do it and other brands do it, we lose sales, right? So we have to do it also because the consumer is changing also.
Yeah.
Again.
Having not to doesn't have large velocity at least at our end, but it's not zero.
Okay.
It's around 10% of our prepaid orders, but it's astonishing to see a consumer pay 50 rupees every month for a bottle of a shampoo.
Wow.
Which is $350.
Yeah.
I was pretty baffled. There was a good set of consumers buying those kind of offers, right? Wanting to pay that $50. I mean, obviously Aman's ASP is much higher than ours.
Yes.
I mean, our ticket item is 600 to 700 as a basket building. Aman's might be larger. But at ours, it's there. It's not high velocity that can excite us. Because of it's in the affordability bracket, right?
Yeah.
But it's astonishing to see.
Wow. No, that's 10% is a very interesting data point there. Quick raise of hands. How many founders, entrepreneurs trying to set up something new in the fintech world, tech world in the audience? How many would like to eventually want to start something of their own and build something? So thoda gyan karte hain, Aman. I think let's, and Hindi are fully allowed. What is that one problem? So there's a lot of tech, fintech guys. As a brand, as a consumer brand, what would you guys want to see? A couple of problems that you think can be solved or need to still be solved.
You go first. I don't know the answers. I think about it.
I had told you, I'm going to ask you some tough ones.
Let him
This
answer.
is slightly tough. I think we've seen the good part, right? So we don't value the tough end stuff, what is there right now. It's obviously our time we were less competition. There's a lot of competition. Again, I told you, modes are copied. Advertising is expensive. Talent is expensive.
Yeah.
I think we got away building something for cheap, right? And I think, let me talk about what we see forward. I think solving consumers' problems and going in depth, how do I solve it better?
Yeah.
Will make you a winner. If it's going to be vanilla, then you're just going to be just another one. But I think the grind of innovation is just the demand of the hour, right?
And you keep pointing out that customer loyalty is probably at its lowest. How does a brand solve for that? How do you use tech or any other tools to kind of solve for that?
I think innovation is critical. It starts from innovation and marketing. Two things in eras like this, right? You have to be innovative. One is that, and second is innovative marketing. What used to work 6 months, 1 year, even something which worked last week is not going to work tomorrow,
Sure.
right? So how do you have that engine, the conveyor belt, as what we keep talking in our organization, evolving because it's so dynamic, right? I think you introduced us with 5,000 plus D2C brands.
Yeah.
It's much
Yeah.
more than
More
that,
than that.
right?
Yeah.
Yeah. I think that's the tough part where it is, but I think we as Indians are pretty smart. We'll figure it out, right? There'll be plenty of Amans sitting in this crowd here, looking to crack what we have created or he's created.
And who knew a CA, a Banya and a CA would come up and build a consumer brand? But Aman, seriously, he talks about innovation, but what are the problems you think can be solved, or how are you solving for some of these for your
Yeah,
group?
problem तो बहुत सारी हैं. You know, that's what entrepreneurship is, right? You find a problem and you solve it. I'm sure there are like hundreds of them here who are solving some problems. मेरे को क्या problem आ रही है अभी? मैं तो कोई problem अभी तो है नहीं, याद नहीं आ रही.
नहीं कोई ideas दो. I'm probing you. I mean, what will be the next great idea that you would want to fund? कोई ऐसा.
I think India is, I don't know about fintech space as such, but yeah, India is going more towards healthy living, healthy ecosystem. I work with a lot of millennials. All of them are concerned about their health as such, where people like Manish were only focused on wealth. And now I think the new India is changing.
Yeah.
And there are a lot of health verticals which will come up and solutions for keeping the millennial healthy. So
Sure.
from that side, I can just remember this right now.
Sure. Any innovation you've been seeing? You all have been fronting, Mohit, anything?
See, lots of innovation out there, but to actually answer your previous question, if I have to actually say what is important, you've got three real ingredients, right? You've got time, you've
Yeah.
got talent, and you've got technology, right? And from a time perspective, I used to always feel that you need to prioritize. So choose what you want to do and deprioritize everything else. But somebody very smart I met yesterday actually said that you'll be surprised at how much the human brain and the human body is capable of, of actually doing. So we have more time than we actually think we do have. And this is where when I fight with my engineering and product teams, it's always about engineering bandwidth and engineering productivity, right? And their answer always is deprioritize something and we'll do this. And my question always, why can't we do everything? Or at least all the things which are really material to be done, right? So that's one part of it. When it comes to talent, while we have lots of people, you have to pick the right people, especially when you start out. If you don't do that, you will end up, it'll cost you more in the long run. It's not a question of money. It's not a question of how much you need to pay somebody, but pick the right people. So build the teams that you want to carry into battle, right? So do that. And the third, when it comes to technology, please don't listen to your engineers when they come out and say, this is a new language and I want to code in that, right? So if you're in banking or in financial services, stick to Java to a large extent. If you're in AI and data, stick to Python. And what you will then do is, when you are going to scale, right? When you're actually going to hit 100 million customers, when you're hitting billions of transactions per day, at that point in time, you don't have to go back and reinvent the wheel and redo your stack. You've already built for success, right? So that's all I'll advise you.
Sure. And before we go into some last closing thoughts, quick question. Do we have a possibility for questions from the audience? We do? Yeah, so we should open up for questions, but one final thought. So we've had the opportunity over the last couple of years to work with over 300, 350 brands across categories, and we're trying to hack some sort of formula for success for brands in today. We've come up with these 4 C's: content, community, collaboration, and capital. That's the new 4 C's that we are at least trying to work with many brands and founders. Any thoughts, any addition to that, any new C's, any, do you resonate with that? Do you think brands need to do something more with community? Because I think Boat has done that excellent, right? Is really start from a...
क्या थे आपके 4 C?
Content, community, collaboration, and capital.
I think for me it's another C, which is consumer, which is probably a subset of community. But I'm very basics in way of life. I think consumer is very important and you should not forget your consumer. ग्राहक भगवान है. बचपन में सिखाया आपको ग्राहक भगवान है. तो consumer की फोटो लगा लो. उसको क्या चाहिए उसको देते रहो. बाकी ज़्यादा सी में तो एक और सी होता है, मतलब मैं बोल रहा हूँ. But ये मेरा तो consumer C is more important.
ठीक है. Manish?
I think my emphasis is on customer obviously first.
Yeah.
And also on content, right? Content is so important, right? what you communicate. Today's consumers have so less time of attention. How do you grab into that? So I think these are critical, but I concur with
Yeah.
what
नहीं,
Aman
ये
brings
खाली
up on.
ये फैमिली शो है, शार्क टैंक नहीं है, वरना वो सी बोल देते हैं, बीप नहीं करते हम.
और edit हो
But,
जाता.
Mohit, your final thoughts around
No, nothing else. I just add courage to that because I
courage?
think
Yes.
if you want to do something, you always need to take that leap of faith. So that's the only thing.
Fantastic, fantastic. I think we have a couple of minutes here. Quick couple of questions, if anybody has. I think there's one here. There is another one. If you can have mics quickly, so we can try and take as many questions.
Hello everyone, my name is Karan. I work for a company called Wild. I just had a very basic generic question that if all the panelists could go 10 years back in time, what is that one mistake which you would not want to make? That's for everyone.
I'd focus on my health and be a bit fitter and thinner right now.
Okay.
Thinking.
And I would say that my mistake was I was too focused on marketing and products, and I did not build the organization backward. And I don't know whether it was good for us or bad for us because there is a lot of like we sold more than what we could chew, and sometimes our customer service started failing, and which is where we've started building our customer service backward. Then secondly, our organization as a team, being too frugal also sometimes is bad because you don't spend on good talent, and that is where I would have invested more on talent initially than what I have to do now, and that would have helped me a little better.
I think if I could go 10 years back, sorry Manish, if I could go 10 years back, I would certainly take my first angel check from Aman. Not take it from anyone else. But no, Manish, please go.
I had no money that time, bro. I had money only last year. Before that, I was also going around here and there.
So I think 10 years back was the best time if you ask me. So I'll reverse it. But I think, at least at my end, right, I think creating a lot more thought towards systems and processes at our end. Those days, until date, obsessed on product is critical. Didn't give too much more on marketing and branding, which is essence of the day. I think more would be more on thinking towards institutionalization earlier than where we are, right? So those are things, but I don't repent. I think 10 years back was a much, much more merrier than where we are today. Looking at the competition,
It's
where
more
we sit.
faster now.
Yeah, but no regrets, right?
And because you're a young founder building a startup and a fintech business, I can only tell you that one of the things that has certainly something I would like to tell you, it's a marathon, it's not a sprint. So find your balance, be calm, be patient. There will be a up time, down time, but kind of, what everyone said, health, processes, and just find that balance. It's a long journey ahead. Next question.
Hi, good afternoon. I'm Ashish, and after working in this corporate world for 20 years, now I've joined up a startup, and I'm to sales. So, in these last 20 years, what I have seen, and this question is to all, anybody can answer that. What I've seen that, a lot of blue-collar employees have now come up with respect to all your Swiggies and Zomatos, having these runners and everybody. But do you think that in this fintech world, has any finance company or has any fintech company tried to solve the problem so that they can bring them forward to invest money, invest for their future? Because as on today, I have not seen it. But yes, do you think that is it something that is needed in India now?
So your question is startups or
My question-
offerings that can help
Yes,
these
yes.
blue-collar workers have a better life,
Yes.
etc. I think
पता नहीं आपको अगर आया तो आप कर लो उस पे काम.
आप गाइड कर दो सर, आप गाइड कर दो, मैं आ जाऊंगा.
मतलब सोच लो यार, मतलब if you think that's a problem and then that's a right solution for you, you can do that. You know what I mean? I don't know. So it's like betterment of people, right? I think the whole world, even the country, even the government, everybody thinks about how to uplift the community at large. I would give a very socialist answer to that.
Mohit,
Yeah. So I think logically, if you look at what you're asking, I think the answer is that the demand is there. Because if you think about what happened over the last year or so, all these predatory lending apps which were out there, right? So therefore, there is demand. Now, has that demand been met? Answer is today no. But there are many people in this room who are actually out there trying to build and solve for exactly this. But the problem is where the challenge comes in is in any business, there is always concentration at the top, right? Your top few merchants, your top few partners, your top few customers will always give you the vast majority of what you're making. And then it becomes tougher and tougher, right? And at some point, that utility curve changes and you start losing money on some transactions. You'll start losing money on some form of distribution. Now the question is, 10 years back, right, to answer that question, why I didn't say that I wanted to get into fintech. It would have been great, but possibly not, because change is going to happen now. Therefore, 10 years back, I was better off actually focusing on my health. Yeah. And I'll tell you, this is the time, what Aman just said, I think all of us should be trying to solve these problems because that market, what is the credit card market in India, right? 75 million cards, which means 35, 40 million people with cards because most of those people who've got cards have got multiple cards, right? But that's not India's population. Ideally, everybody with a mobile phone should have access to credit in some shape or form, whatever is that amount of credit. Yeah. But that requires underwriting. It's not the distribution of credit, it's the underwriting. Have you built those risk engines? Lending is easy, collections is hard. So solve that side of the problem and don't solve the front end problem. The front end problem is very, very easy to solve.
Sure. Right. Perfect. Do we have time for one last question? Last one? Go ahead, quickly.
Yeah, good evening, all the audience and the panelists. My name is Surya. I'm building a fintech startup. And I wanted to understand what is your view on consumerism? Because of finance, easy finance, a lot of people are going for the new tech and the new things and forgetting that they don't need it and they just want it and end up into a lot of debt. And this is also causing a lot of global climatic issues also. So what is your views on that? And when will we realize the issue and work towards it? Coming from the D2C companies itself.
So you're worried about people buying more than what they actually need, right?
Yeah, I think the government is also worried about the same part, right? And they have brought on some regulations. It is a worry, but there are ways you need to be controlling that too, right? Because sometimes you can chew more than what you can, there's a dialogue, right? So, हो सकता है यार कि people get carried away. That's why gambling is also bad sometimes, right? And that's banned. That you just sometimes gamble too much. So same way maybe. But this is, how do you balance it? I don't know. But there is government. I think if you have, that's a good point, and there are a lot of debates happening. I think in this room and side room and every room on the same topic. So I think it is going to be solved soon. How and all, I don't know. But it will be solved somewhere or the other.
Thank you.
See, but it's an important one, right? You need to have
working on that. So
the economy needs to keep churning. So it's an important thing that. It's done in a balanced way. Consumerism is required.
Bhavik, can I answer that one?
Yeah, of course.
There is only one superpower at any point in time in the world, right? And that superpower is the country whose currency is used globally.
Correct.
So it used to be UK, now it's America. Possibly it could be China. Now, if
India
India wants to become a superpower, you won't become a superpower by getting a non-voting seat on the UN Security Council. You'll become a superpower if your currency is used everywhere else in the world. Digitally, we have built those frameworks. NPCI has done a brilliant job. We've built those frameworks. But we want our currency to be used more. Therefore, we actually want people to buy more. We want more business to happen. And therefore, what I would say is, let's throw open credit to everybody. Let's actually scale India's economy from where it stands, double, triple. All of that is possible because we're on a low base. When you're on a low base, growth is easy, right? Just you have to create the framework for it. So I would like us all to go out, shop more, and of course, when you're transacting, make sure that your payment is going through PayU.
That's a good parting closing thought, Mohit. Manish, last one line of gyan, one line of encouragement, whatever. You and then Aman, think of something crazy. Hindi mein bhi chalega.
I think just be fearless, chase your dreams. Small advice from another founder: don't think the grass is greener on the other side. I think being a founder is a great joy, but it also comes with a lot of responsibilities, right? But 100% towards entrepreneurship, encouragement. But I think you need, seeing a lot of changes, and it's for good. I hope we inspire. I think Aman's an inspiration to me to start with.
And vice versa.
Yeah, so.
Superb.
I would say, I've said it before also. There are a lot of ideation happening in a lot of rooms, in a lot of tables, in a lot of entrepreneurs. So sometimes I would say is, don't be afraid. Don't be afraid to fail. I have failed a couple of times before I started this. There will be a lot of failures, but you need one right success, right? One right success will bring you on this side of the table.
Yeah.
A lot of failures won't matter. Only that one big success will change your life. Don't be afraid of failing. Don't be afraid of competition. There was this hum bhi bana lenge attitude, right? That should be there with everybody.
Sure.
If somebody else could do it, you can also do it. And there is, you never know, you might be the next big thing, right? Disruptors can also be disrupted, right? So don't be afraid.
Fantastic. On that note, be fearless. Hope you all enjoyed this conversation. I certainly did. Thank you, Mohit, Manish, Aman. Thank you so much.
Thanks, Bharat.
All right, so that was the closing panel discussion at Global FinTech Fest 2022, filled with a lot of candid, straight from the heart, and enduring conversations between four entrepreneurs. Ladies and gentlemen, can we give our speakers a huge round of applause? On this note, as we come towards the closing, I'd like to request you all to access www.globalfintech.com to get access on the next Global FinTech, which is going to take place sometime next year. And you can also keep abreast with all the updates taking place. On this note, this is your host, Ridhimavali, signing off. Thank you so much, ladies and gentlemen. You've been a lovely audience.
like it like that.